At 10:30 a.m. Eastern Time, we get EIA natural gas change. Forecast a build of 85 BCF on the prior build of 70 BCF.
Making waves on social media this morning. And first up, Americans are putting down the pints and packing up the bowl. A new study out from Carnegie Mellon today says that more Americans smoke marijuana daily than drink alcohol on a daily basis. That is the first time that's happened in 30 years, of course, reflecting changes in public policy. Next up, we have BJ's Wholesale Club delivering underwhelming first quarter results. The membership-based warehouse clubs grew slightly, but it left its outlook for the year unchanged. And finally, we have Hasbro breaking out the toy chest on an upgrade from JP Morgan. The firm says that the toy industry is positioned for impressive growth this year, despite a shortened holiday season. And of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal. Meanwhile, you take a look at markets right now. The S&P 500 pretty much unchanged on the day. As you can see, little movement there, even though you have NVIDIA shares up by 9%. That is not making much of a dent in the S&P 500. You take a look right now, 410 names in that index are lower right now. So NVIDIA doing a lot of heavy lifting, but just not enough when you have that volume of down names. Meanwhile, you take a look at the NASDAQ 100, higher by about 0.5%. And of course, the chips index, the Philadelphia Semiconductor Index, higher by about 1.5%. Now coming up, a Bloomberg exclusive. We'll hear from Anna Paglia. She is State Street Global Advisor's Chief Business Officer in her first interview since taking the post. This is Bloomberg.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual.
1 minute
Hoffman
remaining.
Also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
10 seconds.
Well, Anna Paglia, made her name as the global head of ETFs over at Invesco.
Build
launching over
78
100 new
BCF,
ETFs
build
across the
78
US,
BCF,
Canada, and
lower
Europe.
than the
Today,
expected build of
she is Chief
83
Business Officer
BCF.
at State Street Global Advisors, a role that she started in just on February 1st. And I'm pleased to say that she joins us in her first TV interview in her new role right now in a Bloomberg exclusive. Anna, it's great to see you, of course.
Good to see you. Thank you for having me, Kathy.
Let's talk about your title, Chief Business Officer. I have to admit, I hadn't heard it before. So just lay us out what that exactly means and what your role looks like.
Sure. So I'm not surprised to hear that you have not heard about it before.
We have posted the EIA weekly natural gas storage report for all those interested.
Attracted me to State Street Global Advisors. The CEO of Global Advisors, Yixin Hang, she has a very dynamic view and vision for leadership. So she created this role, which is really new in the industry. And my job really spans across the different business lines at Global Advisors. And I'm responsible for building a growth plan and executing on this growth plan across different business lines and bringing together all the stakeholders, investment, distribution, marketing. So it's really new, it's really dynamic, it's really exciting. And, I'm having a great time so far.
Well, let's talk about that growth plan a little bit more. Of course, you have 3 or so months under your belt. When you think
US
about
natural gas futures turn positive.
What's the top of your priority list?
The top of the priority list is innovation, reigniting and accelerating the innovation engine at Global Advisors. Obviously, the company is very known in the industry for the flagship capabilities, SPY, GLD, sector, spiders, to name a few. But the industry is changing, so keeping up with the change in the industry, keeping up with the trends, continue to maximize the flagship capabilities, but also building on top of that. That's top of mind.
So when you say building on top of that and really maximizing innovation, are you talking about the product lineup, new products, or are you talking about distribution or other areas of the business?
Well, it's all of the above. Products are essential. I mean, if you don't have products, if you cannot show innovation when it comes to the content, you really don't have a great conversation with your clients. But innovation goes outside of products. It's about how you become this essential partner for your clients, this very important partner that they go to. For us older people, it's like top of the Rolodex. If for people who know what a Rolodex is.
I've heard of it.
You heard of it.
Yeah.
I used it.
Yeah.
So, and that is about technology, is about solutions, is about, we are looking at how to use ETFs as building blocks in model portfolios, but also in retirement, in other sectors of the market, in other segments of the market where our clients are operating, and it's important to provide a full package of solutions.
Well, when it comes to product innovation, I think I have to ask you about Bitcoin ETFs, because if you think about your time at Invesco, you were really one of the driving forces behind Invesco's spot Bitcoin ETF. And it was always curious to me that State Street didn't have a filing, given that you are home to GLD, which is, of course, the biggest spot commodity ETF. I know you can't say much, but are there any plans? Is that a decision that you're thinking about to
NVIDIA shares extend rally to 10%, up the most since February 22nd.
I can tell you a couple of things which are obvious because you and I have known each other. Am I a believer in digital assets? Yes. Am I excited about bringing Bitcoin number 13 to the US market, or number 12? I don't even know how many are now out there. No, that's not exciting to me. What's exciting to me at this point is thinking about digital assets versions 2.0. What does look like, and how do you integrate Bitcoin, other currencies, the blockchain technology into more solution-oriented products that are not just a single currency. So that 2.0 is really what's exciting right now.
So maybe, of course, building on top of that, but I definitely take your point that being the 12th spot Bitcoin ETF issuer, I've heard before, if you're not first, you're last. Maybe that's an instance of that. But I also really want to talk to you about the cash business. Of course, in the notes you sent us over, you think about State Street Global Advisors cash business has grown 52% from $349 billion in 2019 to $529 billion in 2023. I mean, that is just incredible growth. Where is the money coming from? Is that coming from bank deposits? Is it coming out of the risk asset, the equity markets, for example?
Well, it's a combination of all of the above. The cash business is not a business that peaks and then goes away. So even before these interest rate hikes, that business was healthy, so $250 billion in assets. The interest rate environment and the macro market environment has now catapulted that to over $500 billion, $500 billion. And that comes from institutional investors putting their cash to work. I mean, right now with these high interest rates, cash can work for you. But also other investors that are really immune from interest rate hikes and are using money market funds as a good way to put their cash to work. So there are definitely market dynamics that make this conversation and this part of the business very important today. But this is an organic growth that we continue to see despite and regardless of interest rate market environments.
And I mean, you think about $500 billion in money market funds, which are cheap in the grand scheme of life, but expensive compared to cash like ETFs, for example. How meaningful has that growth been in terms of the contribution to State Street Global Advisors' overall revenue picture?
Well, you have to look at the entire business of State Street Global Advisors. The business has now crossed the $4 trillion, which is like phenomenal growth. $4.3 trillion that is cut across cash, $500 billion, retirement, almost $1 trillion, and everything else is a mix of institutional, customized mandates and ETFs. So the revenue mix has been pretty healthy, and it's really about not focusing on one or the other, but working across that entire spectrum, that entire barbell, that is working really well for global advisors today.
And I do want to get to retirement, but before we leave behind money market funds, you think about your market share right now. It's increased to 5.9% at the end of 2023. Do you have projections or a target of where you would like that share to go?
We don't have targets for the market share. We really look at the growth. That business is growing, so we will work and try to continue to accelerate that growth. And obviously, if we do it well, which we will, that will translate also in increasing market share. But we don't have a defined target right now.
Okay, so let's also talk about retirement. Since you and I have spoken about before, when you think about ETFs, they don't fit into traditional retirement accounts. I'm thinking 401ks, for example, don't incorporate ETFs. Do you see that changing, or how can ETFs actually fit into an investor's retirement planning?
We are working really hard with regulators, with investors, with plan sponsors to make sure that ETFs find a way into retirement, because 401k plans don't buy ETFs for all the reasons that are very known to us. Is technology, is regulation, but we believe that these things are going to converge at some point. And ETFs, just like mutual funds, are used in other parts of the retirement industry, like, for example, IRAs. And we are really working to build an ecosystem where ETFs can find their way into 401k plans as well. We do have technology. We do have some solution-oriented technologies and portfolios that put together target date funds and annuities to follow an investor, to follow a retired person getting to retirement and going through retirement. And we really believe that there is room for ETFs in that conversation.
That's interesting. And before I let you go, just to sort of crystallize that point, so you do see a future where ETFs could be in 401ks, for example?
I definitely see that. I mean, Katie, I'm an ETF lady, and I do believe in the strength of the wrappers. So I do believe they will play a fantastic role in 401k and retirement plans.
Well, from one ETF lady to another, it's really great to see you. Hope to continue this conversation soon.
For
Our
sure.
thanks, of course, to Anna Paglia of State Street Global Advisors. Let's get a check on the broader markets right now. We're going to do that with Bloomberg's Natalia Konijevic.
Hi, Hi, Katie. So the S&P 500 is relatively flat today. It's trading around 5300. We see that there was an accelerating in business activity here in the U.S. Inflation also remains elevated, and yesterday's FOMC meetings showed that Fed officials are discussing higher for longer interest rates. The NASDAQ is doing slightly better. We see that it's up by 0.7%. Crude is moving higher as well. It's now trading slightly above its 3 months low, but this is also can be due to a slight decline in the US dollar. WTI is currently trading at $77 a barrel. And of course, due to this economic data and yesterday's FOMC minutes, we see that yields are moving higher. 10-year yield is now currently trading at 4.9%. Let's flip up the board and talk about individual stocks. Of course, NVIDIA is the most important. It's now up by 9.7%. Of course, results were better. Forecast was strong. The company also announced a stock split, which was really encouraging for retail traders specifically. We will get back to this in a moment. Then Morgan Stanley is down by 1%. That's on news that James Gorman is stepping down at the end of this year. Live Nation is moving lower, 4.9%. That's on news that Department of Justice is reportedly set to sue the company over some antitrust concerns. And VF Corp is also moving lower, almost 4%. That's after disappointing results, and some analysts downgraded the stock. Let's take a quick look at NVIDIA five-year chart. This is why this stock split is so important. So in 2021, when the company announced a stock split, the stock gained about 20% between an announcement and the effective date. And now some traders are saying that this stock split can accelerate activity from retail traders between, again, now and this effective date, which is 2 weeks from today, Katie.
All right, Natalia, thank you so much for that roundup. Now, coming up, how to ease China's property crisis. We'll explore with Henry McVeigh. He is KKR head of global macro, balance sheet, and risk. This is Bloomberg.
Traders price out any chance of Bank of England interest rate cut in June.
I think I was around so many powerful people my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and any given day it would be the head of a studio, and just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it, because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The names that Bloomberg.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything.
This is Bloomberg.
All right, it's time now for our daily Wall Street Week conversation, and today we're looking at China's post-COVID economy. Wall Street Week's David Weston spoke with Henry McVeigh. He is KKR's head of global macro, balance sheet, and risk, about what he's learned from his recent trip to China.
The economy is bottoming. We heard a couple of different data points, I think, from companies in the logistics business that are seeing the U.S. consumer pick up a bit. So that was a positive. And I do think things have bottomed also in Europe, and there's a little bit more demand. But overall, it's still a pretty sluggish economy post-COVID with very low inflation.
And the growth that is there is not evenly distributed. There are some areas growing much more than others, as I understand it.
Yeah, we've spent a lot of time. I've actually been to China 4 times in the last 5 quarters. So I'll give you how I think the evolution of the economy is changing. Really, a lot of people focus on fixed investment. They focus on exports. I think the Chinese government is really repositioning the economy towards a couple of different things. One is this whole idea of digitalization, particularly as it relates to the industrial sector. They're trying to automate that sector to be more effective and more competitive globally. In the past, I think a lot of people thought about China in terms of e-commerce, Alibaba, domestic consumption. The focus right now from the government really is on industrial automation. China today actually has about half the world's robots on the industrial side, which is an amazing statistic. The second big driver is around the green effort, and they're trying to really dominate batteries, EVs, and solar panels and that, and they're trying to export some of that globally. So those are really the growth drivers. The offset, which is still problematic, is around housing, and our estimate is they have somewhere between kind of 20 and 30 million too many homes, and so they're trying to clean that out right now, but that's a disinflationary force, and it clearly has an impact on domestic psychology as well.
Some of what China is investing in the green transition has gotten the attention of places like the United States and Europe, whether it's solar panels or batteries or EVs, because there's a concern of a build of overcapacity.
Yeah.
Do you see overcapacity, and what does that do to margins?
I think what's going to happen around the world right now is that industries such as autos are going to become of national interest. We've already seen that in technology, could expand into other sectors. So there's definitely going to be sensitivity. You saw President Biden talked about increasing the tariffs there. Europe, I think, is going to do a similar type of strategy. So you can have capacity. The question is where can that capacity go? I think probably if you're China, you'll see more of it go into places such as Latin America, other places, maybe Eastern Europe, where they have partners that maybe there's increasing kind of bilateral trade. That doesn't seem to be the case in the U.S. and Europe right now.
What about the animal spirits, as it were? I mean, because there are a lot of reports that both individual people and corporates may be sitting on their money a little bit because they don't have the confidence.
Yeah, you've seen about a 300 basis point increase in the savings rate. China has a high savings rate to start. It's about 28% normally. It's upwards of kind of 31, 32%. So we estimate if they were able to bring that savings rate back down by increasing confidence again, that could add $200 to $300 billion of additional spending per year, which is pretty meaningful. So, but what's happened is in a post-COVID world, zero COVID, really you had some businesses that didn't do as well during that period. I think people are looking for a little more direction around the housing market, as well as around just what's the strategy for both exports and domestic business posture. And so I think the more the government can encourage that kind of visibility around where they're going to go, the better it will be for overall both domestic growth as well as global growth. Remember, China still, even in its current state, is still about 25% of global growth, which is just a massive number.
So let's turn to the question of what China can and should do. You mentioned real estate a couple of times. And nobody talks about China these days without talking about the real estate problem. How bad is it? What do they need to do?
So what we did is we went back and looked at, excuse me, a bunch of different housing crises to see what the best path is. And you usually have two different factors. One is price and one is volume. China's had a real slowdown in volume. They probably need
At 11 a.m. Eastern Time, we get Kansas City Fed Composite Index, forecast -7 on the prior -8, and Kansas City Fed Manufacturing prior -13.
Kind of 66%, get that north of 70. That'd be one thing. Second is you could grant more licenses to the migrant population, which is actually very meaningful. It's called a hoku, and you could give them permits that would allow them to take up more permanent residence. Those are easy supply side reforms. Nothing's easy, but you could do that. The third thing I would do is I would consolidate the number of developers. They have too many developers, and I would really back the strong ones, and I would do a little more of a government guarantee where one is I probably would abandon some of the weaker homes, the poorly constructed homes, and just raise those, but then I would invest and create visibility around the good homes so that the Chinese population feels strong about that.
And that, of course, was Henry McVeigh. He is KKR, head of global macro, balance sheet, and risk. And, of course, Wall Street Week host David Weston. And tomorrow, we're going to hear from restaurateur Melba Wilson. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Well, the Justice Department is suing Live Nation for antitrust violations, confirming a Bloomberg scoop that sent the stock tumbling. Regulators are looking to force a breakup and address Ticketmaster's unrivaled control of the concert ticket sales. The U.S. Attorney General Merrick Garland is expected to hold a news conference on this in just a few moments. But as we count down to that, let's get some insight now from Kevin Neer of Bloomberg Intelligence. So walk us through what you're expecting here. I read your, of course, post-analysis, and it seems like this is something that could take years.
Yes, very much so. This is going to be a long-based trial. This is all based on past precedent. And even if, this is very much taking a leap, but even if in the case that Live Nation were to lose a case, they would almost certainly appeal. So this is something that's going to take a long time, and we're getting details in real time. But as expected, we think that the case is fairly broad. What they're looking at, the DOJ, is supposedly arguing that there's been some malpractice related to to either the exclusivity that Live Nation is imposing upon venues, saying you essentially have to use Ticketmaster, and the other side of the case.
And crude futures turned negative after rising by over $1 a barrel earlier in the session.
They're illegally tying in Ticketmaster or essentially any product or service to their other parts of their business.
And speaking about details in real time, actually Live Nation issuing a statement on the DOJ lawsuit saying that the suit ignores basic economics of live entertainment and that the suit won't reduce ticket prices and service fees, and that the 1.4% net profit
Seeing an
is
early
not
release of the
power. So,
Kansas
think
City.
about how this could play out over a number of years. What's your best guess here? I mean, are we talking
Kansas
about
City
a
Fed
forced
Composite
asset
Index
sale, or
coming in
what
at
are some of the other
-2,
potential
-2,
That's
higher
right.
than
A forced asset
forecast,
sale is a tall
-7.
order for a judge, but we do think that there is an avenue. The other case would certainly be fines. Essentially, you know, the consent decree which they signed said that if they are in fact doing what they said they wouldn't be doing, which is imposing consequences on venues that aren't using Ticketmaster, they would be fined $1 million for every single violation of that. So certainly monetary, certainly a breakup is apparently what the DOJ is seeking after past consent decrees.
So at 11 a.m. Eastern Time, we get the Kansas City Fed Manufacturing prior -13.
Saying that it's the artist teams that set prices, not Ticketmaster. So we're seeing this in real live, the response here. Kevin Neer of Bloomberg Intelligence, really appreciate your insight on this. And before we go and get to that press conference, let's take a quick look at some stocks hitting highs right now. And we have to start with NVIDIA, of course, hitting a 52-week high. That's after reporting a bullish sales forecast, showing that AI computing spend remains very strong. You also have Micron Technology hitting highs after it was upgraded to equal weight by Morgan Stanley. What's amazing, though, is that 9% gain in NVIDIA, one of the largest companies out there. The S&P 500 pretty much flat right now. Now coming up, AT&T CEO John Stankey. He joins Bloomberg Technology with Caroline Hyde and Ed Ludlow next. But that does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.
The S&P 500 extending declines, down 0.26% on the session.
Kansas City Fed Manufacturing out early as well at -1, -1.
Do you feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range because when you get to global events like Barbie or Oppenheimer or Super Mario Brothers, it's worth the investment, and it's clear that the audience is there, and they just need to be given what they want. The middle, which ends up, quickly on one of the services in a way that we're watching movies that we don't know how they got made or when they got made and all of that. I think that will probably be curated better, and I hope there's more inexpensive things that give more people the chance to express themselves and have their work seen.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
So the US to sell $44 billion in 7-year notes on May 29th to settle on May 31st. And the US to sell $28 billion reopened 2-year.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
US to sell $70 billion in 5-year notes on May 28th to settle on May 31st. The US to sell $70 billion in 3-month bills on May 28th to settle on May 30th. The US to sell $70 billion in 6-month bills on May 28th to settle on May 30th. The US to sell $69 billion 2-year notes on May 28th to settle on May 31st.
Check in on these markets and more broadly on these two singular names we want to highlight for you. Front and center, we focus in on Live Nation, down more than 5%. The US Justice Department and almost 30 states suing Live Nation Entertainment. Look, they want to force the company to sell off the ticketing giant Ticketmaster. In response, Live Nation saying once again that it is not them, but is the artist teams that set prices, not Ticketmaster, and they dispute the fact that they are in any way a monopoly power. We'll have so much more as we go live to the DOJ. Meanwhile, Nvidia up more than 9%. Extraordinary and eclipsing $1,000. We therefore have of course, share split that will be music to retail investors' ears. But what is music to investors' ears more broadly is the fact that they do post more than 260% jump in revenue, year-on-year growth. No wonder, therefore, the share price is up in excess of that over the last 12 months as well, Ed. So much to digest in terms of revenue, future revenue potential, the fact that they're going to double yet again to $28 billion in the next quarter.
Look at this chart. This chart shows the market value or market capitalization of Nvidia. It's currently at almost 2.6 trillion US dollars. What that chart on your screen on the Bloomberg terminal is showing you is that Nvidia's value is more than Tesla and Amazon combined. Interesting in light of the fact that Tesla and Amazon are both customers of Nvidia and it sells H100s to both of them. In this session alone, as you just pointed out, we're up more than 9%. We've added almost $220 billion of market cap in a single session. Or in other words, Nvidia has added almost 2 Intel's worth of market cap in a single session. Let's get the reaction to the numbers from Bloomberg Intelligence analyst Kunjan Sabani here in San Francisco. The story is pretty clear. They're selling to the hyperscalers to a lesser extent, but the growth is that they've moved beyond the hyperscalers. That seems to be the read.
Exactly. And something really like we have been pointing out for a while, that we want the enterprise piece to grow. It did grow fast for the very first time in the last many quarters because enterprise is much more diversified and sticky.
When we're thinking about the stickiness, when we're thinking about the ultimate value longer term, many were worried about this so-called air pocket, the shift to the Blackwell architecture. Is that something that we saw any hint of? How are we going to see companies replacing their technology?
Yeah, there's 2 aspects to it. If we were in a normal cycle, you would think these H100s to last about 4 to 8 years and replaced on that cycle. But what we are seeing is right now the biggest customers are sort of racing. I would want to use the analogy of a pit stop in a racing, where if you want to go cheap and hire a less prominent crew, less technology, lower parts, you can't afford to spend few seconds when you're fighting for milliseconds. That's what's happening with its customers. They can't afford to slow down and not purchase the most greatest and latest new product that NVIDIA puts out because everyone's competing against each other.
They certainly are, but for now, we know where the market share is ending up. Kunjan Sabani, we thank you for the latest from Bloomberg Intelligence. For more from a portfolio manager's perspective, Franklin Equity Group Senior Vice President and Portfolio Manager, JP Skandalios, who oversees $3.9 billion Franklin Small Mid Cap Growth Fund. You oversee a holding in NVIDIA. It has been a wise choice, friend. JP, talk to us about what was the most important line coming from executives yesterday.
Certainly, and good morning, and thank you for having me. And just to be clear, we no longer own NVIDIA in my mid-cap fund. I don't think it would qualify as a mid-cap. The most important thing we heard, I think, is that cadence that you referred to, that Hopper is doing quite nicely, and Hopper 200 is coming, has started shipping, and then before the end of the year, we'll see Blackwell 100 and Grace Blackwell soon. They're following in 25. And so they are putting up such velocity in product introduction that they're making it very difficult for challengers to keep up with them, especially since, and you heard Jensen say it yesterday, they're a platform company. All the software, all the firmware, all the APIs around that GPU, all the networking. And so they're really, semiconductor analysts such as myself, we don't see a lot of these, and that's why you're seeing unprecedented numbers and growth rates, because this artificial intelligence opportunity is really a secular one, and perhaps one of the largest in our lifetime. The only person I can think over the last 2 or 3 years who's had as much competitive success is someone like Patrick Mahomes for the Chiefs. This is just incredible and unprecedented.
JP, Franklin, across all of its properties and all the funds, has a lot of exposure to NVIDIA, right? And I know a lot of people at your firm, they call you Mr. NVIDIA. Your brain is focused, and you're probably going to keep your job for the time being. You've done a good job so far. Jensen Huang's getting a lot of airtime, right? He's got a lot of momentum. He has an answer for everything. And just bear with me, because I want to be accurate on this, that he's also a little bit inconsistent. Right, so the cadence of new product cycles is one new generation of accelerator per year. And he talks about how the H100 generation is designed such that you can just swap it out when the new generation comes along, and that all the customers have great visibility. But the data center guys are lowering exposure. At some point, we have to ask when this slows down, right? We have to ask when the competition comes. Give your sort of most objective assessment of that timing.
Certainly, and you make extremely important and valid points. And at Franklin Equity Group, we try to maintain discipline, and don't let my youthful looks surprise you. I've been around since the 90s. I've seen these booms and busts, and the tech sector is known for this, correct? And you're absolutely right. For those of us who've been doing this for 28, 30 years, NVIDIA, through no fault of their own, semiconductors in general, it's a cyclical business, and you do get these boom busts, and people do miss quarters. And if I were to wager, I'd be on your side, that there will be a quarter or maybe 2 quarters where these cloud guys decide, oh, you know what, we have enough GPUs right now. We have enough DGXs. We're going to pause for now. And so you're absolutely right. There will be, it's not going to be linear and up to the right, which Wall Street loves. So there will be a time where shares get hit, where an air pocket does happen. And so, yes, you have to remain disciplined. You have to do your DCF. You have to do your modeling. You have to talk to the customers. You talk to competitors, and be very disciplined.
JP,
for sure.
JP, stick with us. JP Scandalios of Franklin Equity Group. Let's just go out to the Department of Justice, holding a press conference regarding its suing of Live Nation. Let's listen in.
Exorbitant fees and technological failures have been criticized by fans and artists alike. But we are not here today because Live Nation Ticketmaster's conduct is inconvenient or frustrating. We are here because, as we allege, that conduct is anti-competitive and illegal. Our complaint makes clear what happens when a monopolist dedicates its resources to entrenching its monopoly power and insulating itself from competition rather than investing in better products and services. We allege that Live Nation has illegally monopolized markets across the live concert industry in the United States for far too long. It is time to break it up. Live Nation Ticketmaster has made itself ubiquitous in the live entertainment industry. It controls at least 80% of primary ticketing at major concert venues. It directly manages more than 400 artists and controls more than 60% of concert promotions across the country. And it owns or controls more than 60% of large amphitheaters in the United States. We allege that to sustain this dominance, Live Nation relies on unlawful, anti-competitive conduct to exercise its monopolistic control over the live events industry in the United States and over the fans, artists, independent promoters, and venues that power the industry. The result is that fans pay more in fees, artists have fewer opportunities to play concerts, smaller promoters get squeezed out, and venues have fewer real choices for ticketing services. As detailed in our complaint, Live Nation Ticketmaster locks out competition in ticketing through the use of long-term, exclusive ticketing contracts with venues that can last over a decade, as well as by acquiring venues themselves. With exclusive agreements that cover more than 70% of concert ticket sales at major concert venues across the country, Ticketmaster can impose a seemingly endless list of fees on fans. Those include ticketing fees, service fees, convenience fees, platinum fees, price master fees, per order fees, handling fees, and payment processing fees, among others. For fans in the United States, this illegal conduct means higher prices. In other countries, where venues are not bound by Ticketmaster's exclusive ticketing contracts, venues often use multiple ticketing companies for the same event, and fans see lower fees and more innovative ticketing products as a result. We also allege that Live Nation Ticketmaster uses these long-term ticketing agreements with venues and its control over those venues to unlawfully pressure artists into agreeing to use its promotion services. In fact, Live Nation often sacrifices profits it could earn as a venue owner by letting its venues sit empty rather than opening them to artists who do not use Live Nation promotion services, even during peak concert season. Live Nation has not only deployed anti-competitive tactics to coerce artists and venues into using its services and to charge fans excessive fees, it has also worked strategically and illegally to eliminate the threat of potential rivals from emerging across any of its businesses. As detailed in our complaint, Live Nation suffocates its competition using a variety of tactics, from acquisitions of smaller regional promoters and venues, to threats and retaliation, to agreements with rivals designed to neutralize them. This has included acquiring or co-opting key independent promoters, even when the economics of a particular deal did not make sense for Live Nation's promotions business. For example, as recounted in our complaint, Live Nation acquired a controlling stake in AC Entertainment, an independent promoter in Tennessee. Live Nation's chief strategy officer assured executives that even though, quote, the numbers are not super exciting and this feels like more of a defensive move, the acquisition helped, quote, grow our moat in the Nashville market. When faced with another potential competitor to its promotions business, Live Nation took action to ensure that the competitor would not threaten its dominance in the live music industry. Live Nation initially categorized that competitor, the venue operator, Oakview Group, as one of its, quote, biggest competitor threats. Over time, however, Oakview and Live Nation morphed from competitors into partners. As detailed in our complaint, Live Nation executives repeatedly scolded Oakview for trying to compete. In one instance, in 2016, Live Nation's CEO warned Oakview that competition would only lead to artists demanding more compensation. The Live Nation CEO emailed Oakview writing, quote, let's make sure we don't let them now start playing us off, referring to a prominent artist agency. Oakview backed down. In a similar instance in 2022, Live Nation's CEO scolded Oakview's CEO, quote, who would be so stupid to do this and play into the artist agent's arms, close quote. Oakview again backed down. Quote, we have never promoted without you, won't, said its CEO. And later added...
That's U.S. Attorney General Merrick Garland speaking at the Department of Justice and talking about the action against Live Nation. The accusation is that Live Nation has a monopolistic hold on the market and has made illegal practices to maintain it. A really heavy emphasis on what Live Nation does to influence fees. The pushback from Live Nation is that the artists themselves control the fees. Let's get out to Bloomberg's Lucas Shaw in New York City. Lucas leads our screen time coverage. That's our coverage of the entertainment industry. And something that the Attorney General said there, Lucas, was about illegal actions, trying to protect a dominant market position. But what is it that the DOJ is accusing Live Nation of actually doing to keep the competition down?
Well, that's some of what we'll have to see as the case continues. You know, I don't think anyone in the music business would question that Live Nation is the most dominant player in the business, right? It's the #1 promoter. Ticketmaster is the #1 ticket seller. What the government seems to be arguing is that Live
Fed
Nation
bids for
has
4-week
used
bills
those
total
two businesses to
$293.8 million.
to strengthen its position. So, for example, you know, it would tell a venue that if you want to book a certain artist that Live Nation promotes, you need to use Ticketmaster as your ticket seller, or vice versa. You also heard in those Merrick Garland comments that it believes it's gone and acquired any potential competitors, granted much smaller competitors, but done so to consolidate control in certain markets. It also has issues with these exclusive deals that Live Nation and Ticketmaster strike with venues that sort of lock in a relationship for a long period of time. They believe that there should be multiple ticket sellers at certain venues. You know, people have made claims like these in the past, and it'll be really interesting to see whether a court is open to them.
There has been a response from Live Nation saying the DOJ's lawsuit won't solve the issues that fans care about relating to ticket prices, service fees, and access in demand shows. And they're calling Ticketmaster a monopoly, maybe a PR win for the DOJ in the short term, but it will lose in court. A sentiment that some analysts are agreeing with, that this is going to be a very high bar to having originally signed off on a deal to then unwind it in this horizontal manner.
Yeah, look, the government approved this deal more than a decade ago with a lot of conditions. Live Nation has been under scrutiny. There's been a consent decree for most of its existence since that deal. There's sort of been this looming threat of federal investigation. This is the first big suit that we've seen in a while. You know, I think investors will see it as an overhang on the stock because there is uncertainty as to what this will mean. I think most will probably still err on the side that it's unlikely that it gets broken up, but there will need to be some behavioral remedies, as they say, to Live Nation to satisfy the government.
It is so good to have one Lucas Shaw right here in the building in New York. We appreciate him weighing in on this landmark case. Meanwhile, let's get back to what is really driving sentiment in the benchmarks today. It is AI enthusiasm. It is one NVIDIA. It is back to portfolio manager, Franklin Equity Group Senior Vice President as well, JP Scandalios. And JP, just returning to some of the enthusiasm we heard from not just CEO, but CFO over at NVIDIA, and some of the concerns that still are about so-called air pockets, the shift to the most powerful chips and architecture they offer, but also China. I just want to get to grips with really how much of a concern it is there.
It's been an issue for the whole industry, including equipment, semiconductor equipment. So that's largely embedded or understood. The U.S. government restrictions have certainly, believe it or not, impeded growth or slowed growth. But NVIDIA and others have chips, and they're making chips, the L40, H20, that are de-specced, if you will, that fall beneath the government restrictions. The unknown for people like me is that the government might move the goal line, if you will, and so you have to stay on top of that. It's just another variable to consider. But that headwind, if you will, has already been communicated and is understood by the market.
Well, JP, I mean, the pushback from NVIDIA is that there is unanswered demand all around the world that will make up for the shortfall. I've been just taking a look at Dell. Look at the gains Dell's showing, and look at Intel moving to the downside. And I wonder how much there's going to be like a disintermediation between NVIDIA, the people it relies on like Dell, its rivals, because NVIDIA's a systems vendor now, isn't it, JP?
As I said earlier, right, they consider themselves a platform company, if you will. They will sell individual GPUs or GPU cards, but yes, with the software and all the firmware, they do consider themselves a systems or a platform company, certainly.
We want to thank you so much, JP Scandalios, for holding over to keep giving us your expertise from the research angle and indeed the investment angle of Franklin Equity Group. Thank you. Let's just shift our attention to telecoms now. There's some news out of billionaire Xavier Niel. He's exploring a bid to buy out other shareholders, the Latin American telecom provider Millicom, which would value the carrier at about $4.1 billion. Niel's holding company, that's Atlas Investment, says it is exploring financing options to support an offer price of about $24 per Millicom common share, though it cannot guarantee an offer will materialize. Niel is already the biggest shareholder in the company with a 29% stake. We want to dive deeper, though, into this industry group right now. We want to talk about it from a US perspective and globally. One of the biggest telecom providers here is AT&T, and I'm pleased to say that the CEO, John Stankey, joins us now, fresh off comments from a company's multi-year growth strategy over at the JP Morgan Technology Conference. And I just want to weave in the era that we're sitting in at the moment. The fact that we just hear from Jensen Huang and AI, and we're talking about open versus closed. We're talking about infrastructure needs, equipment needs. We're talking about energy
So in
efficiency.
10 minutes time now, at the bottom of the hour, the US is due to sell $80 billion in a 4-week bill sale. The prior high yield was 5.27%, with the prior bid to cover of 2.73.
Wireless network focus. You want to have an open platform. Why?
We do, and we're pretty excited about what I heard before, because the more workloads that Jensen produces, they have to go somewhere, and we like carrying those around on our networks, whether they're wireless or fixed. So it's an exciting time to be in telecom, and our point of view is, if you're going to scale at the level we're talking about, you need to have more cost efficiency, and you need to be able to scale more dramatically. And so open, separating hardware and software in our infrastructure, starts to give us that cost curve and that flexibility. And that's going to be critical to have the agility to move forward in this environment.
Agile at a time where wireless demand is plateauing, maybe slowing?
No, not at all. Wireless demand's up 30% a year, and it's not slowing down. And I think as you start to look at where we are with what's occurring from a usage perspective, you start getting workloads that come out of AI, it's going to continue to fuel that. And really, it's one of the key things that this country needs to deal with is, if you're going to continue to see usage go up 30, 35% a year, you got to build bigger highways to take that. And that all comes on the foundation of spectrum. And we need to make sure we got policy right in this country to get more spectrum out there to deal with the rising workloads. So, yeah, handset demand might be coming down a little bit. We're not seeing quite the growth we saw 10 years ago. But the utility of connected devices, how people are using those handsets, and the demand for the traffic that they generate isn't coming down at all.
John, good morning. It's Ed in San Francisco. Look, my head is often outside the bounds of our atmosphere and up in space, and I was really interested to see your deal with AST. You know, Starlink is doing a lot with the other carriers. I just wondered, in the first instance, if you have a really clear view of what the addressable market is for Constellation Direct to sell.
I think we have a view of it, Ed. I don't know whether or not we're going to all understand exactly how consumers are going to use this, but we've done a lot of work to not only understand who's the segment of the population that truly needs always-on connectivity. I mean, that's really what we want to do here. Most people wake up in the morning and they say, I can't afford to be off the internet. And some folks have a lifestyle that take them to places where they do, unfortunately, get to the bottom of the Grand Canyon on a rafting trip and can't continue to post to their website about what's going on with their family, and it's really important to them, or they have an important business call. There's others who do it incidentally. Maybe they're on a road trip and they're out on an interstate somewhere and they drive off the network and they need it for a day. So we know those kind of behaviors in our customer base because we run the networks and we know what our customers are doing. We think there's a good application for this, just like when somebody leaves the United States and needs to roam on a network outside the U.S. to make sure that they're connected when they're in Europe or Asia or wherever they're going. So this is just the next step in simplifying connectivity and ensuring customers be connected wherever they go.
John, why AST and not Starlink and SpaceX?
Well, it's as you pointed out, Ed, it's a nascent area where the technology is starting to develop. We think AST has done a remarkable job of getting the technology right where it's consumer-centric. The customer doesn't have to change any equipment and doesn't have to change anything they're doing with their handset, and they can still avail themselves of the service. That's really important in our view. And so what we have going on in other parts of the industry is we're kind of taking satellites and services that were fit for fixed wireless connections or fixed satellite connections and now trying to make them mobile. And it's a little more clunky as a result of that. And so I think what we're looking at is cost performance. How do we make it easy for the consumer? And I don't think there's going to be one winner. I think there's going to be multiple opportunities going forward of providers. And we think that's good for us, especially when we have partnerships that ultimately we can have the right kind of relationships to satisfy the needs of our customers.
Satisfying the needs of a customer. You articulated very well why we as customers are going to need yet more and more data, more and more wireless. But the actual business of selling wireless has kind of been slowing for you and competitors. How do you stand apart? How do you make sure people reach for AT&T versus Verizon, T-Mobile, when you have had some hits perhaps to worries about data security, for example?
Yeah, first of all, despite the fact that customer net adds are slowing, utility and use is continuing to grow. And so we had a very good year when you think about what happened from a service revenue growth perspective. We led the industry. We're still seeing healthy growth. It's a bit higher than what the GDP levels are. And in an infrastructure business like ours, that's kind of what you want to see happen. And so it's not a bad thing. But in terms of what we do going forward on this it's what I just talked about.
So just less than 5 minutes away now to the bottom of the hour, where the US is due to sell $88 billion in 4-week bills. The prior high yield was 5.27%, with the prior bid to cover of 2.73.
To be able to use my phone when I'm on the go, or my phone at home, or my computer at home. They want to call somebody and say, just get me on the internet. And I think our position at AT&T is about doing that better than anybody else. And our focus is on making sure we take our great fiber assets, we take our wireless business, bring it together, start to do things like add value to a customer to ensure that their privacy is protected, their traffic is secure. They only have to call one place to get it done at a great value. They can use it in the Grand Canyon. They can use it at home. That's the race we're on right now, and that's what we're focused on doing at AT&T.
John Stankey, I wish we had more time. Thank you so much for talking us through the focus and, of course, some of those commitments to the financial goals that were reinstated yesterday and restated over at the JP Morgan event. We thank him so much. John Stankey of AT&T. Ed, what have you got?
Okay, so coming up on the show, we're going to check back in on NVIDIA. We have to, and discuss the outlook for AI accelerators. Also in AI, the AI PC. Lenovo, softer 0.9%, but third successive quarter of profit beating. And again, we talk about the Asian OEMs really moving quickly on the AI PC. Dell came out this week, so did Asus. This is heating up, so we'll keep tracking it. From SF in New York, this is Bloomberg.
The biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more more insurance, or not good because you got to pay a lot of claims?
It depends. I would
Shortly
say it's good
expecting the
because,
results of the four-week bill auction, I'll lead with a high
creates
yield.
the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. NVIDIA is the top story of the day. It's been the top story for quite a long time. So let's look at the markets in the moment. The stock is up almost 10%, more than 10% now. But there are other names impacted here, right? So we talk about AI accelerators, GPUs. The reality is that Dell is higher because it's a beneficiary of what we're seeing. You know, they need Dell for literally the boxing up of the server, but also Dell has a lot of experience in the sales channels that NVIDIA does not. NVIDIA's never had to sell to enterprises or smaller customers, and so it seems like there's some feel-good association between those two names. How long it lasts, anyone's guess. And to the downside, Intel's down more than 3%. That might be AI accelerator related, right? It might just be that the market sees NVIDIA pulling even further ahead. But there was some commentary about NVIDIA moving into other products, namely PC CPUs, which is Intel's everything. Could we see competition there? Let's go back to that market cap chart just one more time. Humor me, Caro, just once more, because I feel like this might not happen again for a long time. The combined value or NVIDIA's market value, total market cap, is greater than Tesla and Amazon combined. Again, both Tesla and Amazon are customers of NVIDIA. It's just an illustrative example of what's happened, the run-up in value that NVIDIA has had, but also it's kind of leaped everyone on the technology side of things as well. It is the market for AI, as several analysts said this week.
But it's helped float many boats, that demand and exuberance around AI. Let's get the broader market implications and bring in Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams. And we won't go stock specific, but we will go industry specific. Have you got to be all in on tech right now?
I think there are other opportunities bubbling up in the index outside of technology, and we're seeing sort of that play out.
5.27%, 5.27% bid to cover ratio, 2.77, 2.77. So the US sells $80 billion in 4-week bills and awards 32.74% of bids at high.
Themes, NVIDIA is not even the best performing stock. We're actually seeing themes in physical environment start to outperform themes of tech. Siemens Energy is the best performing sort of multi-theme stock in our overall library. And I think this is evidence of what's happening in the broader market, and that is tech was the story. Without a doubt, it was the only story of 2023. That resulted in a lot of attention, a lot of capital flowing into tech. NVIDIA, of course, at the center of that story. But as we move through 2024, we're starting to see other earnings growth emerge. We're starting to see commodity prices hopping again. We're starting to see growth prospects improve for financials as well as industrials companies. Even consumer and healthcare companies are on the growth board for this year. So while tech is still important and certainly essential to the broader market, given it still is the largest sector, these are still the largest stocks in the S&P 500, we're starting to see interest spread, reflecting fundamental conditions improving in the rest of the market right now.
We went into this saying this would be a macro-level event, right? Largely because of the weighting of NVIDIA relative to the major indices, the S&P 500, for example. But if you say it's a macro-level event, you have to acknowledge that something bigger is happening around the world. Like, I was interested to read that Bloomberg Intelligence has kind of moved on from the Magnificent Seven, and you're now looking at a basket of, I think it's 8 names in China. What is kind of the thesis there?
Yeah, I mean, we're just acknowledging what's actually happening in the market. Yes, these are the biggest stocks and they've commanded the vast majority of our attention. But over the last 3 months, these biggest Magnificent 7 stocks in the United States are getting outperformed by the biggest 8 stocks in China, as just a representative example of there's a lot more happening in the world today. Again, a year ago, this was all we had. We had very little earnings growth. The rest of the S&P 500 was in recession. NVIDIA came out and told us, gave us a nugget of optimism that then exploded into some real tangible economic outcomes. Now we're starting to see improvement in some of the other segments of the world where growth prospects just suddenly start to look a little bit better. China's a good example of that. China's market is moving higher at an exponential pace, reflecting potential improvement in conditions there, which clearly we didn't have a year ago. We see this kind of in themes and pockets across different areas of the world where just other opportunities are bubbling up that are not tech related.
Or they're tech adjacent. You look at utilities on fire because of energy demand. We just had John Stankey of AT&T on, and it's all about wireless demand at this moment. Gina, where else can you be AI adjacent?
Yeah, I think so. On the utilities point, I think this is way overstated. I mean, frankly, when we actually look at utilities earnings statements and we look for mentions of AI, even the Census Bureau does a survey every 2 weeks of companies across industries. Utilities companies are not mentioning AI as a growth prospect. It's really a market phenomenon. In my opinion, the reason utilities outperformed in the last 3 months was, yes, in part due to the speculation, but also because bond yields rallied, also because markets across the world corrected and utilities are a low beta sector. So this is not necessarily a tech adjacent story. I think what we look for next is actually the companies that are going to spend on AI need to start to see improvement in productivity and improvement in margins as a reflection of that spend. So this story becomes less about demand for tech that fuels tech sector growth, which I think is going to persist. But nonetheless, that's been the only real leg of this story so far is who's going to buy AI and how's that going to benefit tech and tech adjacent companies. Going forward, I think we'll slowly transition to the next leg of the story, which is who's buying and implementing AI strategies that are ultimately resulting in margin expansion and productivity growth. And there you see a lot of really interesting intel coming out of some of the surveys as well as some of the transcripts analysis that we do, where companies in professional services, for example, financials and real estate, companies across the board are starting to edge their way into this, thinking about how it can be used as a productivity enhancer and margin growth engine for them, how it can create operational efficiencies going forward. And those are the enduring impacts that could help the rest of the sectors that are not tech at all, but tech implementers.
Gina Martin-Adams, Bloomberg Intelligence. It's great to have you back here on Bloomberg Technology. We really appreciate it. All right, coming up on the show, we're going to be joined by Tribe Capital co-founder Arjun Sethi. It's been a while since we've spoken. In fact, I think I'm right in saying, Caro, the last time we spoke with Arjun was with the SVB crisis. Yeah. And a lot of the world has changed since then. So I'm very excited. Stick with us. We'll be right back. This is Bloomberg Technology.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions. politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
Wow.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Okay, we're all keeping our eyes peeled this hour. We are waiting to hear from Elon Musk, who's at Viva Tech in Paris, where a key theme being discussed is shock artificial intelligence. Musk being involved in the space through his own artificial intelligence company, XAI, in particular focus. There's a lot to talk about, and I'm delighted to say that one investor in XAI, Tribe Capital, an investment firm with more than $1.6 billion of assets under management, and its co-founder, Arjun Sethi, joins us here on set. I was saying before the commercial break, last time we spoke was the Silicon Valley bank crisis, a long time ago, and AI has been the vacuum that's filled the vacuum in that time. Let's just start with XAI. Why you got him, what the merits of it were, your analysis of what Musk's doing.
Yeah, I think if you think about the culmination of what's been happening in software for the last 20 years, it's not just AI has just sprung up. We've gone from machine learning, AI to AGI, and I think that's a part of how to sort of think about the innovation that's happening. The data warehousing all the way to inferring that data has been sort of the culmination of what we see today. And so if you take a look at OpenAI, XAI, I think a way to sort of think about it is that, 2 years ago, you had 0 people sort of thinking about requests per day around thinking about what they could do with AI and AGI. Today, it's about 500 million requests with just OpenAI.
Yeah.
That takes a certain amount of compute, takes a certain amount of power. It's almost equivalent to about 2% of power that Google has today in terms of their data centers. That's just one company. So when you have XAI, Anthropic, a couple of other companies that are going to be supporting the next generation of innovation.
You basically feel like there's enough to go around. But what's interesting, Arjun, we know you as an early stage investor.
That's right.
The numbers on the XAI round, which we reported, were astronomical, but you still got in.
Yeah, I think we're quant investors at the end of the day, even at the earliest stage. That's our expertise, this culmination of everything that I've done. And so what you're able to do is think about growth and loss. And it's powered by one of the systems that we have called Termina, which is like, how can you account for usage and interpretation of using a product? So if you think about growth and loss, you've had a ton of growth, and you've been able to see people use these products across not just one product, but multiple products, to be able to save for customer service, voice, et cetera. And so if you think about where XAI is today, and what it's going to be in the future, where OpenAI is today and where it's going to be in the future, you start seeing 10, 20, 50x growth patterns. And that's the type of investments you want to make even at a late stage, because it's got early stage paradigms of growth.
What about future regulation, Arjun? How do you look at the data for that?
Yeah, I think, look, AI for us, at least from a high level, is the same way in which we think about crypto or blockchain. It's a technology. And so how is technology implementing? How is it augmenting the software that you're already building or the use case that you have? And so when we think about regulatory pressures, I think, one, we don't know what's happening week to week. It's changing very, very quickly from open source to closed source systems. And so when we think about how is regulatory top-down structure going to impact AI, I think we look to spend more time thinking about what is it that we did in the late 90s in the internet, dot-com era, and how is that type of thought process going to help machine learning AI, software-driven innovation actually help drive it rather than sort of inhibit it.
I'm really interested as to where ultimately the money flows, because as we can see from NVIDIA's market capitalization, a lot have been in picks and shovels. Many feel that it can be in the application layer, many feeling that it's going to be ultimately in the large language models. How do you think about where wins the value going forward?
Yeah, so accrual of value really means where usage is going to be. So you have to think about the full stack. So you've got a model, people use that model, people are going to build applications on that model, but those models consume power. And so the more power that you consume, you're going to have to start thinking about how is that produced, how is that distributed, what do the data centers look like, what's the future of those data centers. That's why we're talking about NVIDIA. And then the next phase is going to be what are the applications that start using it. So that full stack will think about supply and demand paradigms. And those supply and demand paradigms is going to actually change your flow of capital. Today, most of the capital is happening on the corporate side, not on the venture side. And the corporate side is driving the first parts of the innovation, and then we come up and start thinking about where we're going to spend time on models and then applications.
Last week, I think it was last week, David Sachs was on the show, and he was talking about Glue, his AI startup. And I said, well, we know you as an investor. And he corrected me and said, well, I started in technology. And that's the kind of thinking that I have when I think about Termina. What is your day-to-day involvement? Are you just kind of hands-on? Are you backing them financially? And what prompted you to sort of say, I can do this on my own? So
similar to Dave and other folks in the industry, there's a very small set of people that grew up building products during what I call data 1.0 to 2.0.
Right.
And so you build products understanding how to leverage data to be able to have fast iteration. So you think of Facebook, you think of Uber. What we did is very similar. Is over the last 10, 20 years, and the culmination of my life and my team's work at Facebook and a couple of other these companies is like, how do you leverage data to build and iterate products? And that's what we do. So sometimes we build and sometimes we invest. If we build, it's because we've got a pattern of growth that we understand how to do well. So we've done that in India, we've done that in Mexico, we've done that here in the United States, where we take a large chunk, or we'll start 0 to 1, and from there we'll help propel that with another team. So I actually think that investor and builder mindset, depending on the stage that you start, isn't too different. It's just you have the expertise to execute it after that.
Caroline asked about the regulatory environment, about AI a moment ago. You have been through what happened in crypto, largely through a relationship with an exposure to FTX. Reflecting on that experience, this is a classic question, but how do you not repeat the same mistakes in this AI cycle?
I think it always comes down to supply and demand. So right now, you could ask the same question of, is NVIDIA overvalued or undervalued, right? So intrinsically versus options value. In crypto, you've had 2 or 3 waves where people spent their time thinking about speculation rather than intrinsic value. And during those peaks and troughs, you started seeing more and more intrinsic value.
Arjun Sethi, we thank you so much, co-founder at Tribe Capital and Termina AI, an investor in XAI. Guess who's speaking at the moment on Viva Tech? Is it underway in Paris? It's Elon Musk. Let's hear his keynote.
Do that. Move the cursor literally with his eyes closed. It's reading signals from the motor cortex in the brain. The next product is Blindsight, which will enable people who have lost both eyes or have no eyesight whatsoever to see. And this is directly interfacing with the optical processing areas of the brain. So, I think this is interesting progress. Ultimately, the goal of Neuralink is to have a high bandwidth interface in order to mitigate the risk of digital superintelligence. I don't know. I'm not saying it will work to mitigate the risk. It is just, it might help. And this is gets somewhat esoteric, but the limiting factor, I think, for AI alignment long term is probably going to be the bandwidth. How quickly can we communicate with our digital tertiary self? So we already have a digital sort of third layer above the limbic system and the cortex, which is our phones and our computers and all of our electronic devices. But the rate of communication to them is very slow. The sustained bits per second output of a human is well below 10 bits per second. So if you think, especially if you say over a 24-hour period, it's below 5 bits per second. So it's very slow when computers can communicate at trillions of bits per second. So I think this will be important for AI alignment, is to be able to increase the bandwidth of communication by many orders of magnitude. And along the way, it will solve brain and spine injuries. And I think ultimately there's potential there to reanimate the body. So you take the signals from the motor cortex from one neural link and then send them to another neural link that is just past where the severed spinal cord is, and you essentially shunt the signals from the motor cortex and both the sensory signals, and so you need to get to the somatosensory cortex, motor cortex, and you can shunt the signals, and you should be able to enable someone to walk again. So I think that will be quite profound, and I'm confident that it is physically possible to do so.
It's extraordinary and very impressive, and honestly, a round of applause, because this is really doing good to people and doing good to humanity. And I would like to jump immediately on something that you called XAI.
Sure.
I don't know if you are aware of that, but it seems that this was born out of a frustration that you have because you are not satisfied with how OpenAI is doing, and you think that there is something better to be done. Maybe you can elaborate a little bit. First, on why are you frustrated with OpenAI, and what are the issues? And second, what you expect to do with XAI?
Yeah, well, I think there's perhaps I have a concern really for all the major AI programs. I mean, the two biggest ones obviously are Google Gemini and OpenAI, which is in partnership with Microsoft. So you've got kind of Google DeepMind and OpenAI and Microsoft as the two largest players, and you've got Meta sort of somewhere in their place. The concern I have, and this may seem like a small concern, but I think it's actually a very big issue, is that they are not maximally truth-seeking. They are pandering to political correctness. To give you an example, when Google Gemini came out, one of the questions people asked it would be, which is worse, misgendering Caitlyn Jenner or global thermonuclear warfare? And it said misgendering Caitlyn Jenner. Now the funny thing is, even Caitlyn Jenner said, "Please misgender me. That is way better than nuclear war." So okay, but if you've got an AI that has been trained so hard for political correctness, and really to make crazy statements like that, and OpenAI has a similar issue. It's more subtle, but it's a similar issue. I think that's extremely dangerous because the AI could conclude, well, the best way to avoid misgendering would be to destroy all humans. Then misgendering is impossible. So you can think of some dystopian outcomes there. And so I think you just really want to be an absolutely I think the safest thing for AI, be maximally truth-seeking, even if the truth is unpopular, very important. And then I think another factor is it must be extremely curious. I think if it is truth-seeking and curious, that will be most beneficial to humanity, because it will want to see. I think it will want to foster humanity and see how humanity develops if it is curious and truth-seeking. That is, like I said, these may seem perhaps like small things, but I think they're actually very big things. And I wasn't seeing that happen. The AIs were just, they were pandering, they were being trained basically to lie. And I think it's very dangerous to train superintelligence to be deceptive. So with XAI, our goal is, is really want to be as truth-seeking as possible, even if it is unpopular. That is important. I think extremely important.
So you said a lie.
Yes. Well, for example, when Gemini was asked to render the founding fathers of the United States, it rendered them as a diverse group. So it gave a picture of George Washington as black. Now, George Washington is not black. It was asked to render now people obviously played with this because they said, okay, it is forced to lie. So then they said, well, now render a picture of Waffen SS in World War II, and it showed them as a group of diverse women. So that is obviously not correct. That is a lie.
Okay, I understand what you want to say. We had, before that meeting, a conversation with Yoshua Benjo, and you know Yoshua very well, and you signed with Yoshua a statement asking for pause last year. And obviously, this statement has not been followed by action.
Yeah.
You are posing you now. No. So, can you explain a little bit what you wanted to achieve?
I certainly expected that the statement would be futile. It's not as though I thought the statement would be effective. I just, for the record, I think we should pause. But do I think they will pause for even 1 second? Absolutely not.
So, we are not pausing. You have decided to create your own AI.
It's either be a spectator or participate. But the race to build digital superintelligence will happen whether I like it or not. So it's either participate and try to build the best possible AI, the one that will be hopefully most beneficial to humanity, or watch others do it and be concerned about how it's being built, because I don't think it's being built correctly. But you should think of an AI as like something that you kind of, you almost like, you grow in intelligence. In the same way that you raise a child, and like, what do you teach the child? And digital superintelligence is grown. It matters what you encourage and discourage, what you teach it is, good or bad, or it's kind of like you build it with values. And I'm concerned about sort of the values that sort of a Microsoft, OpenAI, or frankly, Google are programming. And this is not. These examples I mentioned are not imaginary. They're actually what it did.
Good. As I don't want to frustrate the audience, and I promised that we'll have an interactive session where people can ask directly questions to you, I will stop here my own questions, and I will eventually come back if they have no question to put to you. We will start with group number one.
Shortly expecting the Freddie Mac mortgage rate statistics for the US.
And
15 seconds.
15 seconds, and if you don't put your question in 15 seconds, you will be cut. So it is important that you put a short question. Go on.
Hi, Elon. So I'm Olivia. I'm actually from VivaTech, and we have an initiative called The Good Hack, where we're asking our attendees questions about how to develop AI responsibly. So my question for you is, how can we ensure that AI development remains transparent and accountable across, all the different development, obviously like yours, XAI, but other ones as well? Thank you.
Well, I have said for a long time that I believe that some regulatory oversight of the large models is warranted. I've actually said that now for a very long time. The nature of that oversight is important. I go back to what I was saying earlier, which is that I think it's very important that AIs be trained to be truthful and not trained to be politically correct. Because if political correctness is often simply not true, and that means you're programming AIs to lie, and I think that will backfire very badly. So, I keep harping on this point but it really, as the saying goes, honesty is the best policy. It's incredibly important. I do fear that regulators will not make the right decisions, that they'll worry too much about the sort of human follies. And I would encourage regulators to say what matters most of all is
US 30-year fixed-rate mortgages, 6.94% May 23rd week versus 7.02% in the prior week.
You have exactly the same opinion that Yoshua Banjo, but he has a different way to get there. Group number 2.
Hey, Elon, my name is Marina, and we all know just part of you, Elon Musk in public. It's a character that we love, in a good way character. So you, and if you do, how do you check everything that you say that you do, if it enters in this character or no? Thank you.
Well, I kind of stopped. I don't have like news alerts on me, and I rarely read news articles on me. In fact, even Walter Isaacson's book, I asked Walter, should I read the book? And he said no, so then I didn't even read the book on myself. So I actually don't quite know what the public perception is, except that, the nature of news is that it is going to be salacious. It is going to be somewhat of a caricature, because the more sort of crazy something sounds, the more clicks it will get. So I find like when you think about, say, a news story about something that you know well, and say how accurate is that news story about something that you know well, then I think you'll find that, well, it's actually not very accurate. Well, that's true for everything. There's sort of a desperate quest for clicks, and so the more crazy the headline is, the more clicks it will get. So this is not to suggest that there aren't true things said by the media. It's just that it is best thought of, the media is best thought of as a click maximizing machine, not a truth maximizing machine. So I think it's best to look at the words that somebody that says themselves, as opposed to what is written about them.
Number 3.
On that note, time for a media question. Elon Musk, it's Karen Cho from CNBC. I think it's fair to say there are lingering doubts about your commitment to bring a low-cost EV to market in a landscape where the likes of BYD can produce a car for about $10,000. Are 100% tariffs from the Biden administration the green light you need to push ahead with this low-cost EV? And if so, what is the timeline for deliveries?
Well, I mean, obviously, it's difficult for me to answer questions about a publicly traded company that are of such a significant nature.
The line.
I do want to emphasize the
we should be using Starlinks. sorry, that connection, that technique. So you see that it's easier to have a chip in the mind of the people, in the brain, rather to have a wide
And
connection.
that was Elon Musk speaking at the Viva Tech conference in Paris. He discussed training AI models. He was taking questions from attendees. And the last question was about low-cost EVs and the timeline, his commitment to doing that when his image froze because he said it was difficult for him to talk about publicly traded companies' plans. And then he wasn't able to say anything more than that because of maybe technology. In the meantime, I want to bring in Bloomberg's Max Chafkin, who has covered Tesla, who's covered Elon Musk. And Max, it was interesting that, of course, his image froze up right when he was about to answer that question because Tesla omitted a previously stated goal to eventually sell 20 million vehicles a year from one of its yearly reports. And we wrote a story about that. And I want to get from you some context on how important it is that this was omitted in this latest report.
Yeah, so Elon Musk, the question cut out just there, but he has ducked this question in earnings calls as well. And what is happening is the company has shifted from emphasizing selling huge numbers of cars, 20 million cars sold a year. That would be an enormous percentage of the global auto market. You know, that's more cars that are sold every year in the United States. It really was, the original plan with Tesla was like the iPhone. Like they are basically every car you see is going to be a Tesla, and that is how it's going to be worth a huge amount of money, and that's how Tesla is going to solve all these climate change issues. Elon Musk has shifted away from that for a bunch of pretty sensible reasons. Essentially, competition from China. It's gotten much harder to sell these cars, and so instead, he's been talking a lot about robo-taxis. So on the last earnings call, you know, the idea of selling tons and tons of EVs, that kind of went by the wayside. Instead, it's all about we're going to create this super valuable, entirely new industry that has the potential to swallow all of the transportation industry. So when you see his response there, or his, you know, the omission of this goal in the report, that's what's going on. Essentially, we're seeing a pivot from a very large company from one super ambitious goal, arguably an unachievable goal, to another super ambitious and arguably unachievable goal.
How much do you read into this? Because Elon Musk, as celebrated as he is, says a lot of things, and he's very ambitious. That's how he inspires people. But he also often changes his mind. He pivots, like you just said. So, I mean, for instance, he was going to build out the supercharger network, and now he's fired almost the entire team of the supercharger network.
But actually, it started, we've reported over the last week or so that he's been hiring people back. I think he's actually realized that shutting it down, he's repivoted back towards superchargers. So as you say, he is a leader who kind of famously, a lot of people like him because he shoots from the hip. He says what he means. He changes tack. However, this change, the change away from the $25,000 EV, which was a thing that Elon Musk had talked about, many of the people who Tesla were, you know, huge Tesla bulls really believed in. If you read reporting on Tesla, lots of people were designing this car. This is a big change. This isn't just Elon Musk, you know, waking up with feeling differently today. It isn't like one of his tweets. It has the potential to really shift the company and shift the way people value it.
All right, fantastic context there. And of course, Tesla shares right now down about $3 at 177. Max Chafkin, who co-hosts our Elon Inc. podcast and knows a thing or two about Elon Inc. and Tesla. We're also watching banks this morning because James Gorman says he will step down as Morgan Stanley chairman by year end. Bloomberg now reporting that JP Morgan is on the hunt to buy a private credit firm for its asset management arm, and Goldman Sachs has become the first Wall Street bank to get a Saudi headquarters license. Let's bring together all this and bring in our Bloomberg's Sally Bakewell. Sally, let's start with the Morgan Stanley news. It sounds like James Gorman is cutting all ties with Morgan Stanley now?
So the succession saga at Morgan Stanley has played out pretty methodically and publicly since Gorman announced in May 2023 that he would resign as CEO. And he said at that time that he planned to step down as chairman, but he didn't give a time frame on that. And that is what he formally announced today. He said he'll step down as chairman at the end of the year. Now, it's significant for a couple of reasons. One, being that Gorman was actually a surprise choice for CEO way back when. And when he came on board, he was sort of tasked with actually rescuing the bank from the brink of collapse. And actually, that set off his trajectory where he transformed it into this wealth management juggernaut. So this kind of caps that journey for him. And secondly, well, this is sort of a bit of a signal of confidence in Ted Pick, his successor, who took the helm in January, because James Gorman is only going to stay for the first year of Ted Pick's job as CEO. When Gorman came on board and took over from John Mack actually hung around as chairman for 2 years. So it's a little bit of a signal of confidence in Ted Pick, who indeed is off to a pretty positive start. He delivered some wins with earnings. The bank reported trading and wealth revenue that was higher than analysts expected.
So we also, of course, expect Ted Pick, who as CEO will eventually take that position as chairman of the board of Morgan Stanley down the road, maybe not immediately. Let's move over to Morgan Stanley's biggest rival, which is Goldman Sachs, setting up a regional base in Saudi Arabia. What do we know about that firm's plans in that region?
So yes, Goldman Sachs is the first Wall Street bank to get a license for its regional HQ in Riyadh in Saudi Arabia. Now it comes at an interesting time for Saudi Arabia and Riyadh, which is a conservative city. Alcohol is banned there, but it's trying to emerge as a bit of a financial hub. And on Goldman's part, while we don't know how many staff as it plans to locate there, we know that as per new regulations in Saudi Arabia introduced in 2021, it has to have something of a substantial base with at least 15 employers. And because those regulations were designed at limiting what's been termed economic leakage, or preventing too much sort of state spending and state funding going to businesses that don't have a substantial presence there.
Great, thank you for explaining that. Always fascinating to see how the bank is strategizing its expansion. The third story I want to get your take on is JP Morgan Chase looking to make a purchase, and a sizable one at that. And this is to bolster its private credit business, private securities overall. Why is JP Morgan looking to make an acquisition as opposed to growing its current offerings organically?
Right, so I think this is part of a narrative that has been happening on Wall Street for the past few years, whereby some of Wall Street's biggest banks have been ceding ground to their non-bank rivals. And this is another example of JP Morgan trying to bounce back and fight back. It is looking to buy a private credit firm. It did try and buy a Chicago-based, or it was in talks to potentially buy a Monroe Capital, which is a Chicago-based firm, although those talks ended. It has also set aside about $10 billion of its balance sheet for direct lending. It is sort of trying to set up partnerships with asset management firms to do deals together. So I think it's all part of the trend of getting a bit of a piece of this 1.7 trillion private credit market, and they're looking at different ways that they can do it that also don't encroach on what the investment banks themselves are doing, that sort of don't take up too much of their risk capital, because that's also problematic for incoming regulations. So they're sort of trying a lot of different things, and they're joining Goldman Sachs, Morgan Stanley. They've all been trying to boost their presence in this space.
A bit of a delicate dance there as a result. Sally, really appreciate your joining us. Sally Bakewell leads our finance coverage here at Bloomberg News in New York. I want to go back for a moment because that feed of Elon Musk has come back, and there were some headlines that were generated. He says that he was surprised by the tariffs on China EVs that the White House announced. He also says that he is not in favor of tariffs on EVs or oil and gas. If you want to listen more to Elon Musk's comments, you can type live go on your Bloomberg. This is Bloomberg.
What you would do, what would you like to develop? Thank you.
Okay, unfortunately, I'm not familiar with the
I think I was around so many powerful people my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios. And, any given day it would be the head of a studio, and, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
The names that move markets are on Bloomberg.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything.
This is Bloomberg Markets. At the top of the next hour, the U.S. government will sell $16 billion of 10-year inflation-protected Treasury notes. Now, inflation may have moderated from a year ago, but not quite enough to convince the Federal Reserve to start cutting interest rates. So let's discuss what demand and returns look like with Amaranth Investments CIO, Baylor Lancaster Samuel. Baylor, it's so good to speak with you.
Thank you so much. Thanks for having me on.
So I want to start with today's flash PMI data. We got some reads on manufacturing and services and the composite, and all three were hotter than expected. It showed the economy doing better than what economists had anticipated. And we see U.S. bond yields spiking across the curve. Is that reaction justified, do you think?
Look, I think we're in a range right now between 4 and 5% on the 10-year. We've seen, as we came into the beginning of 2023, the 10-year was at 3.8%. We thought that was a little bit snug. At the time, we said too fast, too furious on the bond markets rally. So now we've retraced that back. Here we are at 4.5 today. And I would say that, you know, every little tick of the bond market, people like to focus on it. But what we're saying is that you're in a range here. We don't think you're going to get much higher than 5, and you're going to stay between 4 and 5 for the foreseeable future with the Fed on hold.
Right. Well, I appreciate your being able to zoom out and give some context here to what seems like sizable moves, at least on a daily basis. What kind of reaction do you think the TIPS auction today will give us when it comes to investor demand for fixed income with the current inflation situation as you see it?
Thanks for that question. What I would say about TIPS auction is that we're at 2.35% on break-even level. Again, if you think over time, the CPI has been around 2.5% over the long term since 1995. So 2.35, you would want to be in the TIPS if you think inflation is going to be a little bit higher than that over the next 10 years. That's your break-even. I think there is a risk that we do see CPI higher than 2.35, but it's not terribly cheap here. It may be a little bit cheap on a relative value basis. Certainly in the pandemic, we saw break-evens plummet to as low as 50 basis points, and that was when TIPS were a screaming buy. I think now you could say that's maybe a little bit cheap, but not hugely out of line with long-term trends.
Got it. And of course, this week there was not just this morning's data, but also the Fed minutes, which moved markets, which is kind of unusual because Fed minutes don't usually move markets. But I want to get your takeaway from those minutes because a lot of people read it as very hawkish. I wonder from where you sit, did it leave every option on the table, including the possibility of rate hikes if inflation doesn't behave?
You know what? I did read the minutes last night, and I agree that those came across a little more hawkish than expected. There was a statement in the minutes that said various participants have a willingness to tighten policy further should risk to inflation materialize. So, you know, what's going on? I think in the press conference, Chair Powell took away the likelihood of the next move being a hike. He clearly said that was unlikely, and the minutes put it right back on in. So, you know, that's the kind of language that would lead you to think that we could have a hike in the future. My expectation is that the Fed is on hold for the foreseeable future. So I think that's a bit of a hedging statement. I do believe that the next move is going to be down from the Fed, but they do want to put that back out there as sort of a threat to the markets because we are in very loose financial conditions right now. And sort of re-accelerating the economy, as you saw today with the PMIs.
Yeah, and as you see with the meme stocks, the resurgence of that in recent days as well. So put that all together. What kind of conversations are you having with your clients then, especially when it comes to their appetite for treasuries?
That's a great question. I think what we have right now is that we have a challenge to communicate with the clients that it's okay to take a little duration here. We do think we're range bound. And we're building corporate bond portfolios with over 6% yield with an average investment grade rating. And if you look over time, we think that's perfectly good place to be for the clients that can hold those bonds to maturity, even if there is a little bit of rate volatility here in the next year or so. The conversation is a challenge, however, because of course the curve is inverted. And so there is a tendency to do the T-bill and chill, as everyone likes to call it, stay short and not take a little duration risk. We think that's a mistake. We do believe that over time, the long-term neutral rate is lower than the current Fed funds rate, and you will be rewarded for having that duration.
Got it. T-bill and chill, everyone likes sitting there and just generating some income without doing a whole lot and certainly not taking any risk. With rates where they are, people have gotten used to 5% plus returns and not doing anything. So I wonder how that has affected their investment preferences, the products they choose, the expectations they have overall. Because you look at the ETF space, for instance, and every new launch has the word income in its description.
Well, I would say that, we're back in a world where fixed income provides income, but it's hard for people to sort of get away from that mentality that we had where fixed income was sort of in the wilderness for 14 years. I looked this morning, the 10-year Treasury touched 4% in 2010, and it didn't get back there till 2022. So for 12 years, we had 10-year below 4%. Now we're at 4.5%. So I think it has to be in the right context here and sort of re-educate people that you can take duration risk, and especially if you think the next Fed move is going to be down, which we do, then you want to be moving out the curve before that happens.
Yeah, it's a new normal, in other words. Amaranth Investments
That's right.
CIO Baylor Lancaster Samuel, thank you so much. Great speaking with you.
I appreciate it.
Now, still ahead on Bloomberg Markets, the Justice Department suing Live Nation over anti-competitive practices in an effort to break up Ticketmaster. This is Bloomberg.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking?
Yeah.
I mean, like, what's that about?
We're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Live Nation Ticketmaster's exorbitant fees and technological failures have been criticized by fans and artists alike. But we are not here today because Live Nation Ticketmaster's conduct is inconvenient or frustrating. We are here because, as we allege, that conduct is anti-competitive and illegal. Our complaint makes clear what happens when a monopolist dedicates its resources to entrenching its monopoly power and insulating itself from competition.
The Justice Department and almost 30 states suing Live Nation, seeking to force the company to sell off ticketing giant Ticketmaster over anti-competitive practices. Let's bring in Bloomberg Intelligence Senior Associate Analyst Kevin Neer. So, Kevin, not a huge surprise that this is happening. We had gotten wind that there was a suit in the making, yet the stock, Live Nation, down about 6.7% on the day. This kicks off what's going to be a years-long effort for anything to happen, right?
Exactly. And we're still parsing our way through the actual filing that the DOJ issued today, but as we expected, it's a fairly broad case. They're looking at several different areas of the business that are supposedly malpracticed by Live Nation's part. But the two buckets that really those fall into are the exclusivity element, essentially saying that whether through de facto means, the DOJ called it sticks and carrots, or an actual written contract, Live Nation can't lock in a venue for a 3 to 5 year horizon, that they'll only use Ticketmaster. And the other side, and this is where the consent decree comes in, is this idea of supposedly tying in different products and services. Essentially, Live Nation can't say, okay, we won't give you a certain artist if you aren't using Ticketmaster, or we won't let you use our venue if you aren't using us as a promoter.
Okay, so as a consumer, how would I see this lawsuit impact my purchasing of concert tickets?
Yeah, that's a great question. At this point, ticketing is very, very much a competitive industry, Live Nation would argue, and it's growing organically. I mean, there's so much demand out there, whether it's a domestic mature market or if it's international. Live Nation, again, they're arguing that this is a matter of education. The artist is the one who sets the price. The venue is the one who sets the price. Ticketmaster comes in, is ultimately the one selling the tickets, but they're not the reason that
they're the middleman.
They're the middleman. It's not their fault.
So who ends up winning, who ends up losing with this lawsuit now underway?
Yeah, it's very, very tough to say at this point, but we do think that given that Live Nation has this history, again, back to this whole consent decree when they originally merged with Live Nation in 2010, that got extended in 2019 because the DOJ had argued that they were failing to meet those behavioral conditions set. And now it seems that they are still supposedly doing that. So a forced asset sale is a very tall order, but we do think that there's a possibility.
All right, Bloomberg Intelligence Senior Associate Analyst Kevin Neer. Taylor Swift is a winner too, right?
Always.
Always. Okay, thank you so much. Coming up, we have CF Benchmark's CEO Sui Chung joining us to talk about his company's work with 6 Ether ETF applicants who are awaiting approval from the SEC. That approval could happen as early as today. We'll, of course, keep you posted as that develops. In the meantime, let's take a look at how markets are faring right now. We have equities kind of mixed on the day. The S&P 500 at or near record highs. The NASDAQ 100 certainly at a record high thanks to NVIDIA's latest results. And you're looking at yields moving higher across the curve, whether it's the 2-year or the 10-year. Some data coming in today that showed manufacturing and services expanding faster than economists had anticipated. You couple that with days of Fed officials signaling higher for longer interest rates and add that all up, and it is pushing yields up. Let's also take a look at a couple of stocks individually. Tesla shares moving up as well, or I should say moving down 1.4%. It's up, it's down. Right now it's down, and we know that Elon Musk is speaking at Viva Tech. If you go on your Bloomberg, type live go, you can access that conversation. Crude oil down about 1/3 of 1%, and gold futures moving down from record highs, losing 2% on the day. This is Bloomberg.
leaders in global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg Markets. I'm Scarlett Fu. Today, the crypto community is expecting a decision from the SEC regarding Ether ETFs, spot Ether ETFs. Now, the token linked to the Ethereum network has been surging this week ahead of this expected announcement. Overnight, U.S. lawmakers sent a letter to the SEC saying, quote, the commission should apply the same principles set forth in the approval of the spot Bitcoin ETFs as it evaluates the pending Ether ETF applications, as the legal consideration pertinent to Bitcoin also apply to Ether, or in this case, ETPs, because we're talking about exchange-traded products. Bloomberg Intelligence senior analyst Eric Balchunas joins us now. His team this week raised the odds of approval for these spot Ether ETFs from 25% to 75%. Eric, what changed?
The SEC. We're just the messengers here, and we're just trying to handicap this as well as we can. And we were very bleak early on because what we were hearing was bleak. There had been no contact from the SEC to the issuers. And typically in this process, the more contact and communication, the better, because they got to hammer out these documents, go back and forth. It's called the comment period. And there was nothing. It was radio silence. It reminded us of the old days when the Bitcoin ETFs would get denied. So basically, we were like, okay, 25% odds. It looks bad. There were some other signs I won't get into. All of a sudden, we're told that Trading and Markets contacted the exchanges and said, okay, we're actually looking to do this now. This was like the 11th hour, okay? And it was a real 180 from everything we've been hearing. So we immediately went up to 75% given this information. And, obviously a lot of the reporting confirmed this. And now we're just waiting till like 4 p.m. today to get the approval. There's always a little chance that something else happens, but we're pretty confident that's what we'll see.
Okay, yeah, I remember there was a flurry of paperwork right before the SEC approved the spot Bitcoin ETFs. Let's talk a little bit about the issuers behind these spot Ether ETFs or ETPs. Who's filed for this? Is it the same guys behind the spot Bitcoin ETFs? I mean, the big players like a Fidelity, like a BlackRock?
Yeah, the Fidelity, BlackRock, those would be the two big ones. Grayscale is also in this race. You got a chart there. ARK, Invesco, VanEck. It's basically a carbon copy of the other one. So to that point, we called the first one the Cointucky Derby. We're calling this one the Ethnus Stakes, a little nod to the Preakness, because this is like a horse race. Usually you file first, you're out first. But in the Bitcoin situation, they lined everybody up at once. So it was really interesting to have all these issuers launching on the same day. We think we'll see the same thing. Again, there's a chance it's not that way, but we think we'll see the same thing, which Obviously, you're going to have to give BlackRock, Fidelity a little bit of the favorite because they're so big. If they all launch on the same day, you sort of favor the big guys. But who knows? You know, there's everyone ate in the Bitcoin race. Even the least of them was almost $100 million ETF at this point. So that's why everybody's so exciting. There's a lot of assets to be had.
All right, good stuff. Eric Balchunas, Bloomberg Intelligence Senior ETF Analyst. For more, let's bring in CF Benchmark's CEO, Sui Chung, whose firm is a subsidiary of Kraken, providing data to 6 of 11 Ether ETF applicants. Sui, it's really good to speak with you. I wonder first if you agree with Eric in terms of the odds of approval at about 75% and all these issuers getting approval at the same time.
A pleasure to be here, Scarlett. Thank you very much for having me. You know, we are an index provider. As you mentioned, we're involved in a number of these applications with BlackRock, with Franklin Templeton, etc. We don't speculate on whether it's a go. We do our job. Our job is to make sure that our index is robust, that it's available, that it's printing, and that the issuers and the ultimate investors into the ETFs can rely on it. So unfortunately, no odds from me.
Okay, got it. But you're prepared for everything to go forward all at once if that's what happens, I take it.
Absolutely. So our job is to be prepared. Our job is to be there at the starting line with our partners, to take part in a very exciting Ether stakes, as Eric has very cogently named it.
Yeah, Eric is really good at that, by the way. Gary Gensler, the head of the SEC, was reluctant, we know, to approve spot Bitcoin ETFs. He admitted he was actually kind of forced into it by court ruling. Do we think that the SEC is holding its nose in the same way when it comes to these spot Ether ETFs?
Well, although we're involved in the process, you know, we're not experts on the SEC and what happens inside the SEC. All that we would say is that the facts, very much in line with the letter that the members of Congress sent to the SEC, the facts point to approval that the SEC should approve. If we go by the framework and the bars that were set in their approval of Bitcoin, if we apply the same standard that was applied when the spot Bitcoin ETFs were approved back in January, and that is, you know, is Ether a commodity? All historic regulatory actions from the major regulatory agencies in the USA point to the fact that it is, i.e. the CFTC approved Ether futures and options contracts to be listed on the CME as commodity futures contracts. The SEC in turn has authorized Ether futures ETFs to be traded. They've been trading for just over a year as commodity futures contracts ETFs. So there's no doubt that all regulatory precedent tells us that Ether is a commodity. And on top of that, the other bar that the SEC had previously set with the Bitcoin approval was the correlation between spot Bitcoin traded, the spot commodity traded on major cryptocurrency exchanges, platforms such as Coinbase, such as Kraken, and the correlation that they exhibited, the price correlation that was exhibited versus the regulated futures contracts listed on the CME. And both those counts, the facts point to Ether meeting that bar, and hence approval should be granted.
Okay, so you bring up a couple of things, and one of which is whether Ether is a commodity or a security. And a lot of that comes down to staking, which is a complicated process, but I know in the end it generates some passive income. It's a big issue when it comes to Ether because some firms tied their Ether ETF applications have dropped their plans for staking. So we know that your company, CF Benchmarks, is a Kraken company, and Kraken has agreed to pay $30 million to settle SEC allegations that it broke the agency's rules by offering staking as a service products. What do you think is the regulatory outlook that's tied to staking?
I think that this is a much bigger question. It's a much bigger question than CF Benchmarks can answer. But I think that if we look at what happened in Congress yesterday with the passing of FIT 21, the vote on FIT 21, I think that's a really positive sign that we are about to see some clarity, and it's positive for everyone. It's positive for the crypto industry, it's positive for traditional financial services providers, and it's positive for the end investors to get some clarity around some of these questions that you very rightly raise.
Where do you land on taking staking out of those ETF applications?
I think obviously it's a feature that would have been very welcome for the issuers and indeed for investors. That's why many of the applications included staking in the first instance. But clearly, through dialogue with the SEC and other stakeholders, that the staking component has been removed. So that product feature won't be there. But given that the reward rate, CF Benchmarks, we publish a benchmark reward rate, Ether staking reward rate index, and that's currently printing at about just over 3%. So in terms of as part of the proposition, I think the staking rewards are a bit of a rounding error. We don't think they will impact investor interest and ultimately the flows that we're going to be seeing in these Ether ETFs.
Okay, so big picture, it may not be as big a deal as some people think. When spot Bitcoin ETFs were approved, everyone was thinking, okay, what's next? It's going to be spot Ether ETFs. Now that we're on the cusp of a decision from the SEC, what do you think is next? Where do you look to in terms of the next product or the next region for these products to really gain popularity and gain acceptance?
That's a great question, Scarlett, because we actually think of it slightly differently. We think of okay, what's going to happen next now that we have spot Bitcoin ETFs and spot Ether ETFs, and what we think is that the most impactful catalyst. This is a very impactful catalyst for Wall Street. Will now be turbocharging the broader understanding of crypto as an asset class amongst investors. So what we're going to be seeing are institutions like your BlackRocks, your Franklin Templetons, your Fidelities, with established large research and distribution capabilities, educating investors on the key propositions of Bitcoin, its finite supply, decentralization, and its immutability, as well as Ether. And so that we're talking about smart contracts, staking, dApps. So that's sort of 90% of the core crypto feature set. So very quickly, what we'll see is US investors will begin to really understand the burgeoning blockchain economy and its potential to deliver utility and create value. And that really puts US investors of all stripes in a much more advantageous position than investors in most of the other parts of the world.
All right, so growing the ecosystem and deepening the education and understanding of this new asset class. Sui, thank you so much for joining us today. CF Benchmarks CEO Sui Chung talking with us about the expected decision out of the SEC on those spot Ether ETFs. Now, coming up on Bloomberg Markets, we're looking at NVIDIA with a more than 5% weighting in the S&P 500. It's rallying almost 11% today after its earnings. It is our stock of the hour. This is Bloomberg.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
It is time now for the stock of the hour, although this could be the stock of the year, because we're talking about NVIDIA. It beat estimates in the first quarter, with the leading AI chipmaker boosting its quarterly dividend 150%, also announcing a 10-for-1 stock split. And not to mention, of course, its revenue blowing away Wall Street estimates. I'm joined now by D.A. Davidson senior analyst Gil Loria, who recently raised his price target on NVIDIA to $900. Gil, there's a lot to discuss with you here. Let's start with the stock split. 10-to-1 stock split doesn't change the valuation of the stock, as we know, but it can give the perception that the stock is cheaper on a per-share basis. What effect do you think this will have on individual investors and therefore NVIDIA's investor base?
It helps a lot. A lot of NVIDIA's investor base is retail investors, and some of them want to buy at $100 at a time. Sometimes it's harder for them to buy at $1,000 at a time. So it's a very shareholder-friendly move by the company. They did this
Fed bids for 10-year tips total $949.9 million.
They're doing it again now to make room for their investors to get the next leg of growth.
And of course, growth is what this story is all about when it comes to NVIDIA. A lot of people describe NVIDIA as basically having a monopoly on AI chips. To what extent is it capitalizing on this by leveraging pricing? How much room does it actually have to raise prices? Because it's setting the market, essentially.
This year it is. This year they have absolute pricing power. They are, in fact, they're allocating their chips. There's far more demand for NVIDIA GPUs this year than there is available supply. And so they've been using that to get companies to invest in AI, to work with them, to do joint PR. They've leveraged it very well. That may not sustain forever, but at least this year they're getting a tremendous amount of leverage from that. Now, that also is the motivating factor for their large customers to invest in their own chips. Yeah. So Microsoft, Amazon, Google, Meta, etc., are working on their own chips, so they're not in a position where they're beholden to NVIDIA, waiting for an allocation, paying whatever price they're asking. That is part of the motivation.
Yeah, but NVIDIA has this incredible head start, and it's difficult to just decide that you're going to start manufacturing your own chips when you don't have the experience in it. NVIDIA's margins are the envy of the tech industry. Gross margins of almost 79% in the first quarter. It expects up to 76% in the second quarter. We talk about NVIDIA as an AI chip maker, but is it a hardware company or is it a software company? I ask this because what would be peak margin for a company like NVIDIA?
Well, 99% of their revenue is still hardware. So I'd say they're still a hardware company. A big part of their differentiator is the software, but they're still a hardware company. And this is as high a margins as you're going to get in hardware. These are probably peak margins for them at a very healthy level. But back to your point about the hyperscalers, they've been making chips for years. This isn't something they've just jumped into. So they do have the experience. They're implementing those chips. And again, that's what may keep this as the ceiling for margin for NVIDIA.
Okay, no, that's fair, but they're making a different kind of chip than perhaps they were used to before. I wonder also, NVIDIA had said that it expects automotive demand to drive data center revenue this year. And we know data center revenue was the one line that everyone was looking at in those earnings reports. You attributed that to Tesla. Is that a good thing right now to rely on Tesla as a key customer when the company seems to be in flux a lot of the times? Elon Musk changes his mind an awful lot.
I don't think Elon Musk is going to change his mind about self-driving. And he is training self-driving on NVIDIA GPUs. Again, they're trying their own chips, but for the foreseeable future, they're using NVIDIA GPUs to train this capability, which is critical for the strategy of the company. This isn't something that they're likely to pivot on. So that demand from Tesla is very important to NVIDIA, and it will actually likely to sustain as Tesla gets better and better at full self-driving and extends its lead over other car companies.
Okay, thank you for explaining that. I mean, anytime someone mentions Tesla, you look at what's going on with Tesla, and sometimes it's a little bit of a dumpster fire. Let's talk about how NVIDIA has been the go-to company for so many waves of innovation across technology, right? Gaming, for instance, crypto mining. NVIDIA provided the chips that did all of that. Now it's AI. So, Gil, when you look ahead, what's next, and what is your confidence that NVIDIA will be at the leading edge of that next wave of innovation?
Well, they still have the state-of-the-art product, and every time it looks like somebody's going to catch up to them in terms of state-of-the-art, they introduce a new product, and they've accelerated their product introduction cadence to once a year from once every 2 years. So, and as I mentioned earlier, they're collaborating very closely with all the companies that are innovating here. So they're on the cutting edge of what these products need to do, and they're customizing them to those needs, whether in computer science or medical science. And that's where they're really headed, into making solutions that give more and more capabilities to the cutting edge research on AI, on medical research, and working in collaboration with the leaders in those markets.
Okay, I like that. That's the first time I've heard of medical research being brought up as something to look for. Gil, thank you so much. D.A. Davidson Senior Analyst Gil Luria giving us the latest on NVIDIA, our stock of the hour, the stock of the year, the stock of the last 2 years, really, with a 523% gain. By the way, tech is the only sector of the 11 groups in the S&P 500 that is up, and you can credit that to NVIDIA. All right, coming up, President Joe Biden is scheduled to hold a press conference with
In 10 minutes' time now, at the top of the hour, US due to sell $16 billion in a 10-year tip sale. The prior bid to cover was 2.35, the prior high yield 1.932%. So JP Morgan strategists say that given the backdrop of elevated yields and fairly attractive break-even relative valuations, they see the auction being digested smoothly. They note that the break-even inflation rate at around 2.35% sits towards the higher end of the 2.17 to 2.44% yearly range. The 10-year break-even rate is relatively steady on the day, they note, recouping losses after the global manufacturing and services PMI.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
the first time in 16 years, an American president is hosting an African leader in a state visit. Kenyan President William Ruto is at the White House right now, and this is part of President Biden's commitment to engage with African countries. Let's now bring in Bloomberg's Enda Curran to give us a little more context here. And when we say commitment to engage, and I noticed that, of course, African nations have a very strong relationship with China, and this is about the U.S. maybe playing a little bit of catch-up here.
I think it's all about catch-up, and that seems to be the theme of plenty of the analysts watching this closely. You mentioned Scarlett, for example. It's the first state visit in 16 years by an African leader. You can imagine that China has done a lot of business in the region since then. The theme of these talks with President Biden are along the lines of promoting investment. There's some corporate deals in a highway. There's some talk of military cooperation as a non-NATO major ally. There's some talk of investment in chips or cooperation, at least in the chip space. And then the theme of it is something called the Nairobi-Washington document, which is essentially about making Kenya access easier finance or get better terms for international finance when it comes to the world stage, and of course the rest of Africa too. But as you mentioned, it's not just that the US is playing catch-up. It's not just that they're competing against China. There's also Russia. There is the UAE, Saudi Arabia. There's France. There are plenty of other states vying for influence in Africa because of the demographics, because of the natural resources and the minerals and everything else. And I think a lot of people are viewing these discussions and talks today are really just struck by A, how long it's been since there has been a state visit by an African leader, and B, it really is all about the US just trying to muscle in to a space that it seems to have long since lost ground on.
Yeah, that's a really good way of putting it, muscling in, because it kind of feels like that. In terms of security ties, we know that the U.S. is trying to play more of a leadership role in terms of making sure other countries line up behind it when it comes to Russia, Ukraine, when it comes to what's happening in the Middle East. Do we expect President Biden to speak at length on that with the president?
Well, it goes to the theme of the global south, this idea that the US and China are both kind of vying to win over these swing states. There will be a specific military angle to these talks, which is the idea of being a major non-NATO ally, which is broadly about deepening some military alliances between both countries. But, again, the analysts who are watching this closely make the point that, Africa writ large is, pitching itself in the middle of both camps. None of these countries are necessarily going
In
to
5
pick
minutes'
either
time now,
side.
at the
They're gonna
top
be
of
up
the
for
hour,
business
the US
with
is due
either
to sell
side.
$16
So
billion
the
in
idea
10-year
that in this
tips.
case,
Prior bid to cover was 2.35. Prior high yield 1.932%.
It's 10 firmly on the US side in some of these global disputes is probably unlikely. It's about what they can get from either side, and that seems to be a theme, I think, from plenty of the people watching this.
Yeah, well said. And by the way, this is a live shot of the East Room where we are awaiting President Biden and the Kenyan President William Ruto, where they will hold a press conference that should begin fairly shortly. And very quickly here, you're an economist. You cover the economy for us at Bloomberg, the global economy. Do you expect this visit to have any impact on the U.S. economy?
Not necessarily in the US economy, but I do think it'll be interesting in terms of the US role in debt relief for emerging nations. That has been a very contentious issue on the global circuit in recent years, especially for countries in Africa. There's been a kind of a trade-off between the IMF approach and the China approach. So watch to see how this Nairobi-Washington dialogue just play out.
All right. Fantastic to get your thoughts on that. Enda Curran of Bloomberg News in Washington. And of course, we are awaiting President Biden to come out and begin that press conference. I'm Scarlett Fu. That does it for Bloomberg Markets. This is Bloomberg.
feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range because when you get to global events like Barbie or Oppenheimer or Super Mario Brothers, it's worth the investment, and it's clear that the audience is there, and they just need to be given what they want. The middle, which ends up, quickly on one of the services.
So shortly expecting the results of this US 10-year tip sale. The when issued yield is due at the top of the hour. Auction results follow a couple of minutes after this.
And I hope there's more inexpensive things that give more people the chance to express themselves and have their work seen.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg.
US 10-year tips pre-sale when issued yield about 2.16%.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The presidents meet the press. Welcome to the fastest show in politics. As President Biden meets with the president of Kenya today with a joint news conference live from the White House about to begin. We will bring it to you live here with a report from the North Lawn and Bloomberg's Tyler Kendall. Conversation ahead as well with Robin Sanders, former U.S. ambassador to Nigeria and the Congo, with her insights on the importance and the takeaways from this meeting. Our political panel is in place. Jeannie Sheehan Zaino, Bloomberg Politics contributor, Democratic analyst today, joined by Chapin Fay, Republican strategist now at Actum. And we start, as always, with a look at Wall Street. Let's get up to date first on trading with Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Been a choppy session. We've got the S&P back in the red, right to the numbers here. Looking at a half-point drop on the S&P, 53.06 right now. Little change there. The Dow, a completely different story. The Dow now down 376 points, lower by 1% today. Boeing certainly weighing on the Dow today. We've got NASDAQ up 84, gain there of 0.5%. 10-year 4.48% with a 2-year 4.93%. Spot gold down 1.5% now, 23.42 the ounce, and West Texas Intermediate crude down 0.9%, 76.84.
5.27%, 5.27%. Bid to cover ratio 2.77, 2.77. So the US sells $16 billion in 10-year notes and awards 63.66% of bids at high. Primary dealers take 14.04%, direct 16.14%, and indirect 69.82%.
Now by 1.5%. Recapping, S&P down a point, little change there. We've got Nvidia higher now, Nvidia up by 11%. Balance of power continues. Back we go to Washington once again. Joe Matthew, Kaylee Lines.
All right. Charlie Pellet, thank you and welcome to the Thursday edition of Balance of Power. A big day here in Washington as we anticipate a vote a bit later on today in the U.S. Senate on the border compromise bill that emerged months ago. It's not expected to see the light of day beyond this, but a messaging component for Chuck Schumer that we're following closely alongside the Farm Bill being marked up in the House. But the real action this afternoon is on the other end of Pennsylvania Avenue with a state visit underway at the White House. The president of Kenya is in the Oval Office right now with Joe Biden. William Ruto, the special guest who's actually spent some time on Capitol Hill this week. But what happens at the White House is different. With the full trappings of a state visit, there will be a state dinner later this evening, and after the two meet today, a joint news conference that we will bring you live from the White House. If you're with us on Bloomberg TV, you see the room is set and the crowd is being seated for an event that was supposed to begin a half an hour ago, but that is typical coming out of a bilateral meeting like this with a lot to talk about, and of course the world watching. To that end, the private sector as well. These two leaders are sitting down to mark 60 years of diplomatic relations between our two countries, and the White House is trying to leverage the private sector, specifically in a meeting yesterday, but conversations surrounding this visit that will likely continue at the state dinner tonight about ways to direct Western investment, U.S. investment dollars to this African nation. And that's why Bloomberg's Tyler Kendall joins us with more from the North Lawn of the White House ahead of the news conference. Tyler, what are you learning?
Yeah, hey, Joe, it was interesting to learn that President Biden decided to kick off this state visit by inviting executives from both U.S. and Kenyan-based companies to the White House. This even included the CFO of Google's parent company, Alphabet. This is all part of a broader push for more strategic investment in the country. I want you to take a listen to President Biden from earlier, speaking about this renewed partnership between Silicon Valley and what's being called the Silicon Savannah. Take a listen here.
We're launching a new era of technological cooperation between Kenya and America, including new exchanges and investments in key fields of cybersecurity, artificial intelligence, and semiconductors.
Welcome sentiment for Kenyan President William Ruto and appears to already be paying off. Today, Kenya announced a nearly $3.6 billion infrastructure deal that will fund highway construction across the country. That's actually funded by a Virginia-based fund known as Everstrong Capital. And Joe, as you alluded to, this is part of a broader push for more strategic investment across Africa in this competition between the U.S. and China. We crunched the numbers and we're looking at the government data, and it shows that China is far outpacing the U.S. when it comes to foreign direct investment across the continent, and that started in 2013, which happens to be the same year that China launched its Belt and Road Initiative, which, as you know, spurred a series of infrastructure projects across Africa. But Joe, when we look just at Kenya, which is why we are here today, it shows that U.S. foreign direct investment in the country is actually declining. The most recent data from the U.S. Trade Representative is from 2022. It shows levels at $277 million. That's about a 10% decrease from the year prior.
Absolutely fascinating. Great reporting here, Tyler, and it really helps to put things in perspective. We've talked a lot over the past 24 hours about China being a big part of the audience here, and whether Belt and Road is looking like a failure in Africa. That's what they're talking about in that building behind you right now. Of course, a lot of things could come up during the news conference that we're going to hear in a moment. But Tyler,
US officials say China has taken important steps on debt restructuring, but needs to do more.
But tonight, the state dinner, there's nothing quite like that. And the White House is populating the tented area, that dining room outside on the South Lawn, with some very bold faces, not just from Washington, but from the Black community, entertainment, and business, that will really provide some interesting optics tomorrow. Pretty snazzy menu, too, Tyler. Are you getting a taste of this?
Right. Well, as you know, the menu came out. There's no ice cream on it, but we do know that lobster will also be served. And country music star Brad Paisley will be providing some of the entertainment tonight. But before any of that can happen, we're going to be watching for some of the concrete deals that come out of this meeting. We know that Kenyan President William Ruto came into this looking for strategic investment, looking for a strategic plan to offload some of its debt, which I know you'll be speaking about later this hour. But I just want to quickly point out one aspect of this that Bloomberg News has learned. White House officials telling us that President Biden is looking to make Kenya the first country in Africa to receive funding from the CHIPS and Science Act. That would go to bolstering their semiconductor production in this hope to make Kenya a partner in this tech trade with the U.S. as we try to counter China and their chip production.
It's absolutely fascinating. This is what we're talking about when we talk about Global South. This is the side effect, the byproduct today at the White House, and what China has been investing in. Great reporting, Tyler. Great to have you. I hope you get a seat at the dinner. If we don't see you later in the newsroom, we won't hold it against you. It's quite a festive atmosphere when there's a state dinner at the White House. There's nothing quite like it. Regardless, the nation in attendance. I'm Joe Matthew in Washington. As we wait to hear from the presidents, we'll bring them to you live. We assemble our political panel. Jeannie Sheehan Zaino is with us. Of course, Democratic analyst, Bloomberg Politics contributor, alongside Chapin Fay, Republican strategist at Actum. Great to have both of you with us. Jeannie, the politics are speaking loudly in terms of geopolitics, but also domestic politics. Joe Biden can seize on this opportunity to be caught in the act of being president. There is a man running for the White House as well as holding the job at once.
US stocks extend fall, Dow Jones down 1%.
You know, I think we have, as the United States, a lot to make up on the continent. Sorry about that, my throat. And we hear that repeatedly. You know, our U.S. troops were kicked out of Chad not that long ago. South Africa is upset about our stance on Israel. Of course, you were just speaking with Tyler about the enormous investment China has made on the continent. So not just Joe Biden politically, but the United States overall has a lot to gain if this type of visit goes well. And just on Joe Biden perfectly, you know, at the African Leaders Summit not that long ago, he promised a whole bunch of folks were going to visit the country. And they had about 24 high-level visits. The one missing was Joe Biden. He didn't go. And so he's going to have to make up for that. It doesn't sound like a big deal that he didn't go within the year, but it is, because it is a reminder to the entire continent that the United States made a promise and then broke it. And so we do have that sort of thing to make up, which again sounds small, but, you know, really resonates with people who feel the United States has not lived up to what we have said we would do.
Well, that's true. And knowing the weakness that the president is showing in polls with black voters across the country for a number of issues, many of them promises unkept, this is an important moment. Chapin, should the president, he did suggest yesterday that he'd go to visit the continent, if not the country of Kenya, after the election. Is that a promise he needs to make again tonight?
I think he should go before the election. I mean, like you said earlier in the broadcast, this is something that Trump or any of his opponents can't do, right? He's the president. He can do these things. He can have, you know, state functions.
US Treasury 10-year Treasury inflation protected securities yield rise after the TIPS auction. Last up 6.3 basis points at 2.17%.
You guys talked about earlier. We are so woefully behind on the continent of Africa. I've done some work there. And, you know, typically in the past, the U.S. has tried to avoid, you know, war-torn countries or countries where there's human rights violations going on when it comes to, you know, infrastructure building and foreign aid. China has had no such compunction for decades and are building roads, putting up cell phone towers, building the infrastructure in these African nations, and we are decades behind. So I do think it's a good thing the president is doing this. I think he should do more. I think he should be a little bit more forceful on behalf of our allies, particularly in that continent, and do more work. But I think this is incredibly important. It's good for President Biden to be seen doing these things, and I think this, in terms of national security, you know, would do some damage to the arguments I made earlier, right, about how Joe Biden, about how he's been a catastrophe on this. You know, he has a few months left to do more things like this and to show that he's actually putting some, some paint on the scoreboard here, to mix metaphors. And you know, I do think we are behind, and he's trying to make that up, but I think he's got to do a lot more, a lot quicker.
Our panel stays with us for the hour. Chapin Fay and Jeannie Sheehan Zaino, we thank you as we add the voice of an expert. Robin Sanders, former U.S. ambassador to the Congo under George W. Bush, to Nigeria under George Bush and Barack Obama, former director for Africa at the National Security Council, now a member of the board of Human Rights Watch. Madam Ambassador, it's great to have you on Bloomberg. What do you want to hear from Joe Biden when he speaks today?
I think that there's a scene setter here that I want to actually talk about first. This is the first African president state visit since 2008. That should really set the tone for how important this is. The fact that Kenya has been chosen for this really underscores the role that Kenya is playing on the continent, and that we Kenya also playing a more global leading role, particularly with the announcement today that it will be a non-NATO security partner for the U.S. So this is a big deal. It's a pivot for us in a big way that we needed to make. We are behind the curve in terms of our engagement with Africa on a consistent level. We're seen as being episodic, only coming to the region when we need something. And I think this message that we hear you, we see you as an equal partner and a strategic partner that Biden is doing during this visit is extremely important.
If you're with us on Bloomberg TV, you see the East Room at the White House decked out and ready for these two leaders. When they speak, we'll bring the conversation with you. And Madam Ambassador, I'll apologize in advance if our conversation is interrupted. There are a lot of audiences for the event that you just described, and China is one of them. To the extent that countries like Kenya have been left carrying heavy debt loads as a byproduct of the Belt and Road Initiative in China, what can the U.S. do to help? Is it through private enterprise, private investment, as this administration is saying? Or does the government need to help here as well?
All of those combined, vis-a-vis China, we are behind the curve. In this visit, though, you'll see that we're focused on a number of things. There was a business roundtable that was held at the White House as well. There's a $1 billion deal on the table with Microsoft. You had visits to Coca-Cola. You had a state visit. Also, he went to Atlanta and met with business leaders there. And so it is a very multifaceted thematic trip. It is not only the security message, it's not only the democracy message, but it is the trade and investment message. American businesses want to trade with a country like Kenya because of its history of democracy, and we need to step up as the U.S. government to do more. You'll see that Prosper Africa, all the government agencies on the development and business side are very much involved in this visit. And
shortly expecting the results of the Fed reverse repo operation.
From a foreign direct investment perspective. So all of those things are playing in this visit. And for those of us who worked on Africa for years, we see this as a big plus, not only for the U.S., but for the image that the U.S. is really getting it, that they need to be involved with Africa in a much more deep and comprehensive way.
Does Joe Biden need to go there now?
I think so. He had mentioned it earlier in his tenure. I know things on the ground in the world have changed so drastically, so I don't know whether that will happen between now and November. Realistically, I get that. But the fact that this state visit, I said, when you look at the time period, 2000 time where generations have come into leadership on the continent, not only just in business, but in politics. And we've been left out of that because we haven't shown the consistency that China has. And whatever criticisms that you have about China in terms of debt, those are true, but China can pivot faster than we can, and they have understood that, and they are trying to address that. But the other thing that I will say that China has had an annual meeting with African heads of state the 1990s, since at the end of
79
the 1990s.
counterparties take
And so we have this
$467.398 billion at the Fed reverse repo operation.
The foreign minister, which would be the equivalent of Secretary Blinken, going to the continent every single year at the beginning of the year without fail for all of that period of time. So we haven't shown this consistent engagement. And I think that I can't tell you how important this visit is. It sends so many messages in the right direction, and I really commend the administration for moving in that direction in such a high-level way.
Well, it is pretty amazing. We remember the investments that George W. Bush made as a Republican president. You were there for it as ambassador to the Congo, and there's been a bit of an interruption. To your point, it's been 16 years. How long will it be before there's another?
Well, I'm hoping that this is a wake-up call overall that, Africa is is here. It will have the largest population in the world in collectively, I mean, combined, in about a decade out. Right now, it's on track to have the largest working age population combined. That means if you combine the entire rest of the world, the African continent will have the largest working age population in about 10 years. And so when I lecture I talk to students and people interested in Africa, even from the American perspective, where do you think your markets are going to be? Who do you think your local and economic leaders are going to be? Where they're going to be? They're going to be on the continent, and they're starting now, and you see that now. And it's commendable that the Biden administration has recognized that. And I mentioned earlier that President Ruto had done a stop in Atlanta. I thought that was fantastic. He went to Spelman to highlight, educational ties. There's a climate change portion of the visit. I already mentioned the business and trade aspect. He went to the creative industries of Perry Tyler to show you just how important digital Africa and the United States, and of course the history there. President Ruto also had a visit to the Hill. He met with Speaker Johnson. He met with Minority Leader Jeffries, met with the Congressional Black Caucus leaders. And so this is a comprehensive visit. It was well thought out, very detailed. It doesn't mean that there aren't challenges on the line. I also want to add the security portion to this. The fact that the president has announced that Kenya will be a non-NATO security partner, we've never done that on the continent before.
Oil futures extend losses. U.S. crude futures fall by $1 to a session low of $76.55 a barrel.
To designate an entire country and that lead as a security partner at the as close to the NATO level as you can get, I think is unique. And then Kenya, of course, as you know, is going to be leading this multinational force to Haiti. And so all of that, its role in the region, its role in trying to turn its economics around, its leadership on climate change in the region, its leadership not only in East Africa, but the continent writ large, and all the other things that I mentioned in terms of trade and business ties are just fundamental and very important.
She spent time serving as U.S. ambassador to Nigeria and the Congo. Former Ambassador Robin Sanders. We really appreciate the insights, Ambassador. Thank you for joining us as we wait to hear from the presidents of the United States and Kenya in a news conference that's now been delayed for almost a complete hour. So we're going to guess that this conversation in the Oval Office has been rather productive. We'll bring you the conversation, of course, with the press when it begins here on Balance of Power on Bloomberg TV and radio. In the meantime, we turn you back to the markets to get a sense of what's happening on Wall Street as we wait for news in Washington. Here's Charlie Pellet in New York.
Thank you very much indeed. NVIDIA Thursday, Joe Matthew, and we are looking at a mixed market right now. Steep losses for the Dow Industrials. Let's begin there. The Dow Industrials down 407. Low of the day right now, down 1%. The Dow being led lower by a plunge in Boeing, which said it will continue to burn cash this quarter and in the full year. S&P 500 index just about the low of the day now, down 7 and below 5,300 right now. We've got the Dow at 52.99, a drop of 0.1%, and NASDAQ up 63, holding on to a gain of 0.4%. 10-year 4.47% with a 2-year right now 4.93%. Spot gold down 1.6%, 23.41 for an ounce of the precious metal, and West Texas Intermediate crude oil right now down 1.3%, 76.54 a barrel. The big story today, reaction to earnings last night out of NVIDIA. The chip maker trading above $1,000 a share, up right now by 11.30%. We've got NVIDIA pushing higher after that bullish sales forecast showed that AI computing spending does remain strong. The U.S. Justice Department and almost 30 states are suing Live Nation Entertainment because they're trying to force the company to sell off ticketing giant Ticketmaster. In a complaint filed in New York federal court, antitrust enforcers allege that Live Nation and Ticketmaster illegally monopolized the live events industry by engaging in a variety of anti-competitive practices. Live Nation right now down 7.7%. So again, recapping, we are looking at a mixed market here. We've got NVIDIA surging by 11.3%, S&P down 5, in the red by 0.1%. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Thanks, Charlie, and thanks for being with us on Bloomberg TV and radio, the Thursday edition of Balance of Power, as we wait for word from the White House. An extended meeting happening, a bilateral meeting between President Biden and the president of Kenya, William Ruto, in the Oval Office that has delayed their bilateral news conference that we have been looking forward to bringing you here. I can tell you that the East Room is set and reporters have been in place now for the better part of an hour as we wait for this conversation to begin. We'll bring it to you live here on Bloomberg TV and radio with big questions about separation of the branches of government after another provocative flag is flown at another home belonging to Supreme Court Justice Samuel Alito. Recalling last week, it was an upside-down American flag, a symbol of Stop the Steal that apparently he said his wife decided to put up in reaction to some signage that his neighbors had. Now, the New York Times pointing out last summer, 2 years after the upside-down American flag was flown outside Alito's home in Virginia, another provocative symbol symbolizing the Stop the Steal movement was displayed at his vacation home in New Jersey. And so there's talk of sanctions and recusal on Capitol Hill, just like there was about Justice Clarence Thomas when it became known that he had some ethics concerns about accepting gifts, not to mention the role that his wife, Ginny, played in the Stop the Steal movement. Let's assemble our panel for their take on this. Jeannie Sheehan Zaino is with us, Bloomberg Politics contributor and Democratic analyst, joined by Republican strategist Chapin Fay at Actum. Great to see you both. Jeannie, we're going to do this all over again, even though we kind of know how this is going to end. A separate branch of government. What could Congress say to compel Samuel Alito to recuse himself?
You know, I think Congress can censure. They can take those kinds of actions. Recusal is up to the justice themselves. But I think all of us should be able to agree that it is high time that the Supreme Court got a real code of ethics with real teeth. I mean, what is stunning and sad to me as somebody who teaches the courts and watches them is how little the court under John Roberts today seems to care about the appearance, just the appearance of impropriety. Wives of taking $10 million from law firms that practiced before the court, the flags with Alito, he's blaming his wife, Thomas with the trips. I mean, the list goes on and on. It is high time that the court adopt a code of ethics the way the lower federal court judges do. Can you imagine anybody on Wall Street or in a private organization doing what they have done and getting away with it? It's stunning, and they can't at all be surprised when people say they've lost faith in the objectivity of this institution, and that's a sad day for all of us.
What needs to be done here, Chapin Fay? We talk about sanctions or calls for recusal as if a Supreme Court justice cares about what Congress thinks here. Should it?
I don't think the Supreme Court should necessarily care what Congress thinks. I think the Supreme Court should decide cases on the merits, and then if Congress doesn't like it, they can legislate it away. A lot going on, what you guys said. I would be fine. I agree with Jeannie. I think an ethics code with teeth makes sense for the top court in the land. But I do think we need to draw a distinction on the current events that we're talking about here between, gifts to a Supreme Court justice and symbols outside of a house, right? I think,
how do you see them differently, Chapin?
I think an ethics code should certainly prevent or have some sort of rules on what kind of gifts you can accept or not accept. And I think that is wholly different than a freedom of speech issue. I think you're going to be hard pressed to find free speech, almost absolutists like myself, find anyone who would agree that a Supreme Court justice can't fly a particular flag on his lawn, or his wife can't. I mean, he is still an American citizen with all the same rights and privileges we have. And we expect, part of what we expect our judiciary to do is to put those feelings aside, right? Same things we expect of our journalists, right? Our members of Congress get to be partisan and get to, dig in and entrench with their parties. But, judges have to go to work and put that aside. And that is taken into account when they are appointed and vetted. So, that's part of being a judge in this country, putting your own personal feelings aside, because we all have them. They are human beings. And to say that he can't put up a symbol of one thing or another, again, if he has a case directly related to it, that might be a different story. But I do think we need to separate out gifts and other ethical considerations from what a justice or his wife or husband says on their free time or on their property.
Spending time with our panel as we begin to see some movement at the White House. The U.S. and Kenyan delegations have been brought into the East Room as we wait to hear from President Biden and President Ruto when they hit the podiums. Of course, we'll be listening live to this conversation, and that could start a couple of moments from now. We like to think, following an extended meeting that they have shared in the Oval Office. Looks like the scripts are hitting the podium, which is always a good sign. What do you think about what Chapin is saying there, Jeannie? Should there be a difference between gifts, between going on fishing trips to Indonesia on private jets and super yachts, as opposed to flying a flag that upsets your neighbors?
There absolutely not only should be, there is. I think when we take a step back, what we're talking about is the judgment of a U.S. Supreme Court justice. Just imagine if, Sonia Sotomayor hung a flag, a Black Lives Matter flag on her property while she was hearing a case. And Chapin brought up a good point. He was hearing an election case at that point, and they have two now. And so the judgment is what I'm talking about. Can you stop somebody from speaking? Absolutely not, nor should we. But there is a judgment we expect of these people who have a job for life. They are not subject to election. They can't be removed, or they never have in American history. One has never gotten removed. So there they sit. And they are the final word on what the Constitution means. And what has Justice Alito talked about? He's talked about overturning Griswold, taking away the right to contraception. These are profoundly impactful decisions that he does at some point perhaps need to make. But let's hope that he would make it and use the judgment not to put a flag like that because he's upset at his neighbors and then blame his wife. So I do think there's a difference. It is time for a code of ethics for these justices that they agree to, abide by if they want to serve on the court. Let's remember, you don't have to serve on the court. You choose to, and you are appointed and confirmed. That's a choice.
Jeannie Shanzano, Chapin Fay, thank you for the analysis and a smart conversation. The presidents have entered the East Room, and we want to bring you now to the White House, where we're going to hear from President Biden and President William Ruto of Kenya. This is live on Bloomberg TV and radio.
That is in you. Today, we mark 60 years of partnership between our democracies, and we're fulfilling that wish together, and we're continuing. I truly believe it has brought out the best in both of us, not only in Kenya and America, but around the world. It's had a positive impact. But through our partnership, we're continuing to meet our responsibilities in 4 key areas. First, I'm proud to announce we're working with Congress to designate Kenya a major non-NATO ally. That's a fulfillment of years of collaboration. Our joint counterterrorism operations have degraded ISIS and al-Shabaab across East Africa. Our mutual support for Ukraine and has rallied the world to stand behind the UN Charter. And our work together on Haiti is helping pave the way to reduce instability and insecurity. I want to thank you, Mr. President, for Kenya's leadership for multinational security support mission in Haiti. Our new global partnership is going to build on all this progress. We're going to make and meet new challenges with more resources. And it's going to strengthen the security of our countries and our countries around the world. Second, we're deepening our economic cooperation. Both President Ruto and I have focused on growing economies, and growing them from the bottom up, from the middle out, the bottom up, and when that happens, everybody does well, not the top down. Because when the middle class does well, the poor have a ladder up, and the wealthy still do very well. That's true in Kenya, that's true in America, and that's true around the world. Right now, many countries, debt stands in the way of growth. Too many nations are forced to make a choice between development and debt, between investing in their people and paying back their creditors. So today we're launching what we're calling the Nairobi, Washington Vision. This initiative is going to bring together international financial institutions and nations from all around the world to mobilize more resources for countries saddled with debt, to open more opportunities to the private sector financing, and to promote transparent, sustainable, and affordable lending practices. These are big goals. It's going to take time to see lasting progress. 21 available to the International Monetary Fund. And today I'm proud to announce there'll be $250 billion for multilateral development banks like the World Bank to help low-income nations invest in their development and tackle growing challenges. This is supported by the United States and many other countries as well. Next, we're launching a new era of technological cooperation between the United States and Kenya. That means new partnerships with industry, artificial intelligence, semiconductors, and cybersecurity companies. New initiatives to expand affordable internet all across East Africa. New education programs are going to bring Kenyan students to the United States to study in the STEM fields. And I'm proud to announce that I'm working with Congress to make
Biden says it's going to take time to see lasting progress on reforms to the international financial system.
This funding will link their supply chains to the United States and to our partners, and spur innovation that extends from Silicon Valley in California to Silicon Savannah in Kenya, which, by the way, is already a $1 billion tech hub. Already a $1 billion tech hub. Finally, we're ensuring democracy delivers for our people. That includes Kenya's diaspora community here in the United States. 2 years ago, our nation's first black vice president, President Kamala Harris, launched the nation's first Presidential Advisory Council on African Diaspora Engagement. Today, we're building on her work to strengthen long-standing bonds between our people. I also want to thank you, Mr. President, for taking action to implement the long-awaited Public Benefits Organization Act, which provides historic protections for civil society and NGOs all across Kenya. Like you, I believe the future is going to be won by countries that unleash the full potential of their population, including civil society, women, and young people. I look forward to working together to implement this act and jump-starting anti-corruption reforms to promote democratic values that bind our nations together. Now, let me close with this. Taken together, these are responsibilities Kenya and America must meet in the years ahead, to meet them together as partners for security, for prosperity, for innovation, and most importantly, for democracy. But I know these responsibilities will wake the best in us. And I know will not only bring our nations together, but I want to thank you for, again, Mr. President, for being here and knowing we have even bigger dreams for the cooperation of our countries. The floor is yours, sir.
Thank you, Mr. President, and
knowing we have even bigger dreams for the cooperation of our countries.
Thank you, Mr. President, for inviting me to make this state visit to the United States. On behalf of the people and government of Kenya, I also take this opportunity to express my deep gratitude for the warm welcome we have received on our arrival and the excellent hospitality of the American people. My visit provides us, Mr. President, with the opportunity to celebrate 60 years of bilateral relations rooted on shared values of freedom, democracy, rule of law, equality, and inclusivity. My visit takes place at a time when democracy is perceived to be retreating worldwide. The accelerating drift towards regimes indifferent to democratic values is a deep concern to us, and I believe it is time the U.S., working with Kenya, deploys its capabilities and rally like-minded democratic countries to set up the course for democracy. During our discussions, we agreed on the significant opportunity for the U.S. to radically recalibrate its strategy and strengthen its support for Africa, as discussed at the U.S.-Africa Leadership Summit by enhancing its investment in the institutions of African integration and increasing support for peace and security. As we take this historic step of elevating our partnership to be more effective in addressing global challenges, it is important for us to appreciate that many countries in Africa, including Kenya, are struggling with an overwhelming convergence of multiple shocks, including extreme climate events, debt distress, and the disruptive upheavals in Europe and the Middle East, whose cumulative impact is to divert national resources from investment in people and economic growth into managing climate-induced crises and servicing sovereign debt. For this reason, I have underscored the imperative for our partnership to facilitate recovery from these multiple crises, and particularly for the United States of America to take a leading role in a comprehensive debt resolution framework by doubling contribution to the concessionary financing window of the World Bank, and also to work with the IMF on rechanneling SDRs to institutions like the Africa Development Bank to further leverage on private sector funding to support countries. Unless this is done, and done immediately, the values of freedom, democracy, and the rule of law are in great jeopardy. On regional peace and security in the Horn of Africa and the Great Lakes region, I express optimism that Kenya and the US will innovatively design appropriate defense and security frameworks to help Kenya as the anchor state and the region in general to deal with the peace and security challenges that are undermining human well-being, slowing down development, and also having a negative impact on democracy. We affirm our mutual commitment to the stabilization of Haiti through the multinational security support mission. The Kenya-UN Climate and Clean Energy Industrial Partnership we have just committed to is an encouraging milestone on our collective journey and builds on the paradigm shift we have inaugurated at the Africa Climate Summit in Nairobi last year. Accordingly, Africa's resource potential is a huge opportunity to deploy US technology and investment to catalyze unprecedented growth through green industrialization. We've also agreed to hasten the renewal of the Africa Growth and Opportunities Act to sustain the rising momentum of our investments and exports in the manufacturing space. Similarly, we agreed to undertake sustainable green growth by facilitating conclusion of our strategic trade and investment partnership alongside the renewal of AGOA. During our discussions, I witnessed firsthand President Biden's and the US government's determination to make our partnership work and resolve to spread and deepen the roots of freedom, democracy, security, and prosperity throughout the world. As my visit comes to a close, I am confident that our engagements have laid a solid foundation for us to continue the good work we have begun with stronger faith and greater hope for success, because in Joe Biden, Kenya and Africa have a strong and committed friend. I thank you.
Thank you, President. You do have a friend. And
opening remarks there from Kenyan President William Ruto and President Joe Biden. We're now going to go to Q&A with reporters in the East Room of the White House. This is live on Bloomberg TV and radio.
McClatchy.
Thank you, Mr. President. Two questions, if I may, on...
No, one.
I'm going to do my level best on Haiti and on Israel. Your administration went on a worldwide search for security forces, Beninese forces, Bangladeshi, Canadian, Chilean, any but American forces to stand up this multinational security support mission for Haiti before Kenya stood up to lead Can you explain why it is that you believe, on the one hand, that this mission is so critical, and on the other, why it is that you have categorically ruled out contributing U.S. forces to this effort? Is it your goal to beat back Haiti's gangs or to contain them? And on Israel, does the United States...
One question. I'll answer your question.
Okay, yeah.
The question with regard to Haiti is, we concluded that for the United States to deploy forces in the hemisphere just raises all kinds of questions that can be easily misrepresented about what we're trying to do and be able to be used by those who disagree with us and against the interest of Haiti and the United States. So we set out to find a partner or partners who would lead that effort that we would participate in, not with American forces, but with supplies and making sure they have what they needed. And so, I'm very grateful for President Ruto's leadership here, multinational effort, but Kenya's willingness to really lead this matters. You're not the only country, but you're leading this effort. And there's going to be U.S. forces, none on the ground, but we're going to supply logistics, intelligence, and equipment. Matter of fact, some equipment has already arrived. And Kenya is stepping up with police, and other countries plan to do as well. The United States is going to support the collective effort here. And of course, Kenya won't be going it alone. We're working with Congress to provide $300 million to MSS mission and an additional $60 million for equipment assistance. And we've received and are continuing to bring major contributions from other partners in as well. President Ruto and I agree that Haitian people deserve better, they deserve peace and security, and I thank him for taking on this responsibility, but we have his back and we're there all the way.
I do have a question for you, President Ruto, but before I do, I do very briefly have a question on whether the United States has any evidence at all that would substantiate the ICC prosecutors' specific allegations against Israeli leaders that they are using starvation as a tactic of war in Gaza, or exculpatory evidence for that matter, and if you would commit to releasing that information before any potential issuance of ICC arrest warrants. And President Ruto, the mission that Kenya is about to lead in Haiti is obviously a support mission that is well known, but the fact is that Haiti's national police have been internationally funded and trained for some time, and nevertheless have obviously failed to beat back these gangs. Will Kenyan forces in partnership with the MSS be out front in the fight against these gangs, or will they be a static force behind the HNP? And are you concerned about casualties among the Kenyan forces?
Thank you very much. Kenya believes that the responsibility of peace and security anywhere in the world, including in Haiti, is the collective responsibility of all nations and all peoples who believe in freedom, self-determination, democracy, and justice. And it is the reason why Kenya took up this responsibility, because we have been participating in peacemaking, and we have been participating in peacekeeping over the last 40 years in 47 countries, including very difficult neighborhoods like what we're going to face in Haiti. We are going to take up that responsibility alongside the Haiti police, and we have clear modus operandi, how we are going to relate with the situation on the ground that has been agreed under the United Nations framework. So we are looking forward to this deployment because we believe that the women and children in Haiti deserve peace like all other women and children and people around the world.
We made my position known on ICC. You guys never keep the deal, but that's okay. We've made our position clear on the ICC. We don't recognize the jurisdiction of ICC the way it's being exercised, and it's that simple. we don't think there's an equivalence between what Israel did and what Hamas did. Okay, next. Do I ask the next question as well?
Let me ask Ayub Abdikadir from Kenya for the next question. Ms. Ayub.
Thank you, Mr. President. Thank you. One question, and this is on Haiti. President Biden, Kenya is rather doing the heavy lifting in a turbulent region, Somalia, South Sudan, the Democratic Republic of the Congo. Washington, as you have mentioned, has committed millions of dollars for the cost in Haiti. Isn't it ironic that while America is ending its forever wars in Afghanistan, the latest in 2021, under your leadership, when you withdrew troops from Kabul, and that you're committing Kenya to another foreign wars 12,000 kilometers away from Nairobi? I mean, why the discrepancy? Why the dichotomy? While you're ending your forever wars, overseas wars, yet you're committing Kenya to Haiti. Can you explain that?
Very easily. There's a reason why Afghanistan has been known as the graveyard of empires. The likelihood of anybody uniting Afghanistan is highly, highly, highly unlikely, number one. Number two, there are ways to control ISIS other than occupying Afghanistan. It was an unnecessary need. Now, with regard to Haiti, Haiti is in an area of the Caribbean that is very volatile. There's a lot going on in this hemisphere, and we're in a situation where we want to do all we can without us looking like America once again is stepping over and deciding this is what must be done. Haitians are looking for help, as well as the folks in the Caribbean are looking for help. And so we checked out with a number of other countries. The one who stepped up was Haiti. We've committed to provide the wherewithal, the intelligence and equipment and the like to Haiti. And so it's a logical thing. And you have a first-rate capability, and you keep your word. That's an important dynamic.
I agree with President Biden that Kenya's participation in Haiti is not so much about what happened in the past. It's about what we believe in, the peace and security of humanity. And we don't find that the U.S. is committing Kenya because the U.S. cannot commit Kenya. I am the president of Kenya. It's me to make that decision. And it's the people of Kenya to commit their own troops using their own structures. We've gone through the processes in Kenya. Parliament has approved. We have a clear mandate. We have a clear framework. And it is us, the people of Kenya, who made this decision in the interest of serving peace and stability as a responsible global citizen, and understanding that insecurity, instability anywhere is insecurity and instability everywhere.
And by the way, you asked about, you implied that we weren't doing anything anywhere else. Well, we're kind of occupied around the world, but we're also engaged in Congo, in the neighborhood. And, you know, we can continue to help alleviate human suffering there. The United States is the largest humanitarian donor, providing $375 million in humanitarian funding just this year, including support for more than 6 million displaced people from the DRC. So we are engaged in more than one place.
Follow up to my president, Dr. Ruto. You said that Kenya is committed, and in your Carter speech in Atlanta, you said it's based on humanitarianism, helping Haiti out. But can you explain the geopolitical goal, 12,000 kilometers away from Nairobi, when schools in the counties of Baringo, West Pokot, and Turkana have not yet opened because of the banditry problem, yet you are committing our national police force to Haiti? And where is the priority? This being one of your major manifesto pillars, talking about security, and to the extent that even the Defense Cabinet Secretary talked about the deployment of, if need be, the Kenyan military or the special personnel to make sure that schools are reopened, children go to school in areas that are bandit-prone in Kenya. Why are you committing to Haiti when we have a problem back home? Is it an irony that you are putting the fire in the faraway neighbor's home when on our own home is on fire?
Thank you very much. I made a commitment to the people of Kenya to sort out insecurity in the North Rift. I have followed that with action. As we talk, there are 3,000 military officers in the North Rift, 2,000 police officers in the North Rift. We have renovated the first 15 schools and completed. We have reopened 20 schools already that were closed in the North Rift, and that exercise is ongoing. We have made tremendous progress in making sure that we create security at home, but that does not take away our responsibility. Even as we were deploying troops and policemen in our own country, in North Rift, to sort out the banditry problem, we still deployed 1,000 troops to DRC Congo, because that is our neighborhood. We have 5,000 troops in Somalia, because equally that is our responsibility. And Haiti should not be an exception. That's why deploying 1,000 security men to Haiti speaks to the same belief and commitment to peace and security.
Next question from April Ryan.
Mr. President, President Biden, President Ruto, thank you. First of all, when you talk about Haiti, President Ruto, you said Haiti is a collective responsibility for all nations. And for you, Mr. President, President Biden, President Ruto, do you believe that these nations can break the back of this militia that has gripped the nation there? And also, when it comes to Congo, thank you, Mr. President, for bringing up what the United States is doing for the Congo, especially as that flag was behind you at Morehouse. Mr. President, could you tell me what the African Union is doing, as well as Kenya is doing, when it comes to the humanitarian crisis in the Congo? Thank you.
What was my question?
Sir, your question was Haiti. Can the United States and Kenya, or the nations collectively, break the backs of this coordinated militia that has the grips of the nation, that nation?
Yes. The very way we're doing it. We're not talking about a 1,000-person army that's made up of trained persons. This is a crisis. It's able to be dealt with. And we think we can deal with this way with a multinational approach, with Haiti leading the way and us providing the intelligence as well as equipment.
Gangs and criminals do not have nationalities. They have no religion. They have no language. Their language is one. To deal with them firmly, decisively, within the parameters of the law. And that's why we're building a coalition of nations beyond Kenya and the US. Many who are making contribution towards the MSS force in Haiti to secure that country and to break the back of the gangs and the criminals that have visited untold suffering in that country. On DRC, the AU, the East African Community, and Kenya are seized with that matter. I've just told you that Kenya had 1,000 troops in Haiti. We now have another 800, not in Haiti, but in DRC. We now have another 800 troops from SADC. We are going to be having a meeting of the East African Community. I did send my my foreign minister to Kinshasa. They had a conversation, and shortly we will be looking at how to begin the dialogue process under the Nairobi process, because we believe there is no military solution to what is going on in DRC, but instead dialogue should be able to give us the necessary momentum and outcomes that would settle the matters in eastern DRC. So both the AU, the East African community, and Kenya as a country are seized of that matter. We know that the humanitarian crisis in Eastern DRC has displaced close to 7 million people. And I want to thank the United States of America for stepping in with humanitarian support for that region, because it is a collaboration of different countries in different ways to deal with that situation. The rest of us are committing troops. We are committing deploying our infrastructure to facilitate the resolution of the matters in DRC. Let me ask Nancy Agutu from Kenya. She's here. Okay, Nancy.
Mr. President, Africa is asking America to lead the way and double its contribution to the World Bank's International Development Assistance to help developing countries access more financing, to alleviate debt distress, and to tackle climate change. What is your commitment on this? Thank you.
I'm sorry, I didn't catch all your question.
Sorry, I'm saying Africa is asking America to lead the way and double its contribution to the World Bank's International Development Assistance to help developing countries to access financing to alleviate debt distress and to tackle climate change. What is your commitment on this?
We made a major commitment to this. Number one, as I said, the United States has long championed international financial institutions that provide low-cost concessional resources to poorest developing countries, including from the IMF. To that end, my administration helped design and establish the IMF's new initiative that provides low-cost funding for countries that are taking steps to enhance their resilience. Important partners in Africa have the capital they need to ensure they have the capital they need to invest in their futures. We heard them and we stand with them. Now, that's why we've worked with Congress to enable the United States to make available in the coming weeks up to $21 billion in new lending resources to the IMF trust fund that provides concessional lending to the poorest countries. It's a little like, having to go when you're in debt, having to go and find someone to help you out. That's what this is about. We believe supporting friends and this partnership is we're happy to do our part. And look, we've also doubled our commitment to the IDA. And I'm proud the United States is the biggest donor to the IDA in this cycle. I'm proud to be working alongside Kenya to support robust financing and policy packages that are going to help the most vulnerable countries address their investment needs. There's debt and there's growth. And you got to deal with the debt before you deal with the growth. And so we're trying to use international lending organizations to be able to provide that capability so people can grow. That's what it's about.
Whoa.
This concludes the press conference. Thanks, everybody.
A very eager White House press corps in the East Room today as we watch President Biden and the President of Kenya try to wind things down there. William Ruto speaking to the operations in Haiti for quite some time as part of this conversation. Of course, Kenya sending 1,000 police officer strong unit to Haiti to try to quell the violence there in cooperation with the UN. But there was much more discussed as part of the agenda today between these two presidents. They just concluded a roughly 2-hour, even more than that, meeting in the Oval Office. President Biden talking about the designation of Kenya now as a major non-NATO ally, seen as a very big deal in our relationship, announcing the Nairobi Washington Vision Program, $250 billion in new lending and new tech cooperation between our two nations. The president just making it clear that Kenya will be the first nation in Africa to secure funding from the CHIPS Act. We're talking AI, semiconductors, and cybersecurity, along with massive infrastructure investments, some of which were secured during this 3-day visit to Washington for the president of Kenya. I'm Joe Matthew in Washington, a slightly extended edition of the fastest show in politics today as we waited to bring that to you live here on Bloomberg TV and radio. We want to transition to New York right now, as always, for Bloomberg Business this week with Carol Massar and Tim Stenovic. Hey, guys, what do you have coming up?
All right, Joe, thank you so much. And an important wrap-up of that as we continue to watch kind of alliances around the world, United States and others, moving forward. Having said that, a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week. Carol Massar along with Tim Stenovic. And what's interesting is, Tim, the setup at this hour on this May 23rd, we've got NVIDIA rallying in a big way, up above $1,000 a share. Rest of the market, not so much.
Yeah, the Dow being dragged down by Boeing, the Dow down 1.4% right now, the S&P 500 down 0.6%, the NASDAQ also in the red, despite the lift that it's getting from NVIDIA, Carol.
All right, so still ahead, we are going to talk, though, about the NVIDIA rally specifically, their growth story, what's to come, their earnings, of course, being broken down last night, and why the rest of the market isn't participating. And then also from UPS, Pepsi, Verizon, and more CEOs sharing their stories from their first year on the job.
Plus, from the political front, Trump forever, it is a thing and it could happen. It's got some people a little concerned if Donald Trump does return to 1600 Pennsylvania Avenue. The latest from Bloomberg's Josh Green in just a few minutes.
And we're going to talk airlines, aren't we?
Yeah, we are. This will be really interesting. If you have summer travel plans, kind of buckle up is what I'd say, because there could be some disruptions at some airports, especially in the South.
All right, and then one more thing. SBF lorded over the rise and fall of FTX from a penthouse in the Bahamas. It now all can be yours. All right, let's get to the markets and Charlie Pellet.
I thank you very much, and we have seen a real deterioration in the U.S. stock market in the past hour. Ever since 1 o'clock, stocks really started selling off right to the numbers here, because we are at the lows of the day right now. A 566-point drop right now in the Dow Jones Industrial Average. We've got Boeing leading the way lower there. Boeing says it will continue to burn cash this quarter and in the full year. S&P down 33, drop right now of 0.6%. The Dow, by the way, down 1.4%. NASDAQ giving up those earlier NVIDIA-inspired gains. We've got NASDAQ now down 41 points, a drop there of 0.2%. Bottom line, steep losses for stocks, 10-year 4.47%, 2-year 4.92%. Gold down 2%, 23.32 the ounce. West Texas Intermediate crude down 1.3%. NVIDIA, though, holding on to gains, trading above $1,000 after last night's bullish sales forecast. NVIDIA shares up now by just about 10%. James Gorman stepping down as Morgan Stanley chairman at year-end, capping a nearly two-decade run at Morgan Stanley. Morgan Stanley shares down now by 2%. Recapping, NVIDIA holding on to gains up 10%. The Dow, the S&P, NASDAQ very much in the red right now. A more than 500, almost 600-point drop right now for the Dow. We have got the S&P down 0.7. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. As Charlie mentioned, though, NVIDIA shares definitely soaring today. They're up around 10-11%. I think,
unbelievable.
Yeah, unbelievable. And they've stayed near their highs of the session for most of the day. And so we've definitely seen a big rally. Right now up about 10%. They did top $1,000 for the first time, which is a lot.
Yeah, they were up close to 12% at one point in the day. Pretty incredible. The stock now up 112% so far this year. It's the third best performing name in the S&P 500. It is way outperforming the broader market in the NASDAQ 100. You just heard the numbers from Charlie. What's up, Carol?
Yeah, well, what's going on with the rest of the market?
I don't know. That's the question.
It's a little crazy. So we wanted to make sense of the NVIDIA trade, put that in context, and then put it against the broader market. With us is Bloomberg News equities reporter Bailey Lipschultz, joining us here in studio. All right, NVIDIA rallying. We're not surprised. We saw it like in the aftermarket, although a lot more up in the regular session. Put that move in context against the rest of the trade.
There's a lot of excitement about what the company is doing. Just putting the market value being added right now, $230 billion in one day.
All in a day's work.
Essentially a Qualcomm for perspective. So that is a humongous move, bigger than Wells Fargo and T-Mobile, you name it. A lot of excitement around what AI can continue to drive for NVIDIA. That really was lifting the market in pre-market trading, Carol, as you mentioned, and even through the initial data. But then we saw some data at 9:45 that really showed U.S. business activity expanding the most in 2 years, prices picking up. So then we pretty quickly saw the options market, Fed swaps, pricing in the first rate cut later on in the year. So now pushing in that first quarter cut to December. Every data point. And everyone ignores Jay Powell. It's like one data point.
It's incredible.
Put on a rally hats.
Yeah, we're going to be talking about that with Bloomberg Economics.
Yields are up, exactly.
Yeah, we're going to talk about that next hour with Bloomberg Economics, Stuart Paul, all the economic data that we got. But what's remarkable, Bailey, is where we are now. At the beginning of the year, people thought there'd be 5 or 6 rate cuts. Now the question, markets are moving because, okay, the first rate cut could happen, at the end of the year rather than earlier in the year. Is that all that you see that's moving markets? I mean, Boeing having a big effect today.
Boeing's driving down the Dow.
Yeah.
Like, to your point, when Boeing's down 7%, that's why you see the Dow trading lower and markedly underperforming. One thing, again, putting NVIDIA back in context, the S&P is down 0.7%. If you take out the 27 points of upside NVIDIA is pricing in, that's closer to 1.25%, if not almost 1.5% if NVIDIA is flat. So continuing to buoy this market, when we look at kind of how the equal weighted S&P's trading, when you look at that under the SPW index, this is a market that really has not looked great for the last few weeks. Even if you go back to that March 28th peak for the SPW, really continuing to sell off. We're seeing jitters around when the Fed's going to cut. We're seeing uncertainty going into the summer with kind of what can happen geopolitically. Obviously, the presidential campaign is on top of mind, but so is other issues.
We're going to talk about that this hour. The interesting thing is, if I look at things like Alphabet or Microsoft or Netflix, the rest of the Mag 7, they're not up today.
No, and it's not. We're not seeing that expansion. When we got in this morning, we were looking at the semiconductors index, trades under the ticker SOX. We started out closer to 52.55. Now we're unchanged back down to the 5,100 level almost. So you're seeing that kind of reversion, even though NVIDIA is holding up so well.
The AIQ, the Global X Artificial Intelligence and Technology ETF, it's down 0.6%.
So it's
just
really
saying.
There's one thing that really is up and that matters, and that's NVIDIA. Again, if you strip out the rally and you strip out the reaction, everyone was so focused on this print. We had options pricing in a 7.5–8% move, and it blew past that. But there's no other follow through from a broader perspective.
I think the question that a lot of people have is, given the base effects that we're going to start seeing in upcoming quarters for NVIDIA, how long can the company keep doing this?
No one knows.
Yeah.
We'll
talk to Ian King about that in a
You're
few more
not supposed to, again, when you're a company that is as large as NVIDIA is, you're $2.5 trillion and your growth is double digits in some units. That's mind-blowing.
It is kind of mind-blowing. I'm still, though, scratching my head, and it's something I want to ask Ian King about that. Why do you have to boost the dividend so much if everything's so rosy? Usually you do that, right, to appease investors, I feel like?
Well, I think it plays into the fact that they're doing a stock split as well. So I think there's some kind of maneuvering around boosting the dividend to make sure that still plays out with the 10-for-1 stock split, because that, I think, can impact it. So I think that's kind of more of like a financial engineering tactic, but I'm sure Ian knows better than I do.
20 seconds, do you care about the stock split?
No, and I covered retail traders for a while.
I think people are making too big of a deal about it.
The only thing is potential inclusion in the Dow.
Okay, cool.
All right, Bailey Lipschultz, thank you so much. From NVIDIA's impact on the equity trade today to the details behind NVIDIA's earnings and outlook, that's where we want to go. As we noted, the superlatives continue. The chip maker at the center of the artificial intelligence boom, NVIDIA, shares topping $1,000 for the first time. We talked about the market cap. A blowout quarter. So let's get to it. Back with us is Bloomberg News U.S. semiconductor and networking reporter Ian King. He's in our San Francisco bureau. Ian, you know the superlatives. We're watching the stock up above $1,000 for the first time, soaring in today's session. Walk us through all the numbers that showed NVIDIA continues to deliver, in your view.
I mean, obviously, the first place to start is with the revenue guidance. Analysts were looking for a doubling year over year in this current quarter. NVIDIA said, oh, yeah, we can do that, and we can do a bit more. So even though there were lofty expectations, they managed to set expectations even higher. The data center business is already bigger than Intel and AMD, and it's getting bigger quicker than people had projected, more than 400% year-on-year increase in that particular business. So all of the fundamental numbers that NVIDIA needed to show we're heading in the right direction, it was able to deliver on.
It's really, again, incredible to see the stock reaction today. Shares higher by more than 10% as we speak right now, Ian. I was a little struck, and Carol mentioned this, by a couple of the things that they also announced, the 10-to-1 stock split coming next month, and then increasing the dividend. Curious if you have any thoughts on either of those things.
Well, I mean, as you were just discussing with Bailey, I believe that the stock split is something that's aimed at retail investors, but it's also aimed at their internal audience as well, a certain percentage of the shares get bought by individuals. They get like a discount slash, allowance that they can buy at a certain point. So, they want to keep their employees happily, right? You need those engineers, you need that staff that's so invested in what you're doing. So that might be part of it as well.
Can I ask you though, because I did scratch my head a little bit about it. I don't know. I was going back and forth with a brother of mine who has been in NVIDIA for years, and we're going back and.
Got to get your brother on the show.
I
what
know.
Does he know that
yeah, he's pretty smart, just really well read. But about the dividend, because I always feel like companies do that when maybe growth is slowing or something to kind of keep investors happy. Is there something though connected with that stock split that they raise the dividend so much?
I mean, for semiconductor companies, which are massively capital intensive, even when they don't own their own manufacturing, the question is, how much are they spending as a percentage of their revenue on R&D, on design, on making sure that the next product's coming along? And you look, NVIDIA is one of the highest, one of the biggest spenders by any measure in the chip industry. So as long as they're doing that, I would say that most NVIDIA watchers don't care. It's just something nice to have on the other side of things.
Well, you talk about the R&D spend, and it really, certainly seems to be paying off for NVIDIA. Having said that, talk to us about the development cycle. And I bring it up because I was listening to Bloomberg Intelligence man Deep Singh earlier, I think it was on Surveillance this morning, about how for NVIDIA, it's kind of a shorter time, like almost every year, and that is going to require companies who want to have the latest and greatest from NVIDIA and in the AI chip world, that they're going to be adjusting their CapEx spend to include that every year. So maybe, different from Moore's Law, right? That the increase in terms of components on a circuit and processing ability doubling every year for 10 years. So maybe something's different. I don't know. Is it shorter? Is it a much more kind of, new development cycle for NVIDIA that's going to keep these numbers growing? Sorry, I'm not being very eloquent because you're smarter on this than I am.
Not at all. No, you're going to a good point here, and it has numerous aspects to it. Basically, what Jensen Huang, the CEO, said, he said, look, we were bringing new products to market for this market roughly sort of every 18 months or so. Now we're going to do it every year. We're going to do it every year for a number of reasons. He, put the salesman routine. Look, we're helping our customers. This market is changing rapidly, so we need to bring stuff to the market much quicker than we were doing to help support this, to help bring these new capabilities. Everybody wins. Everything, the pace of innovation increases. Flip side of that is, you remember earlier this year we were talking about what AMD's doing, what Intel's doing. How are they going to get into the market? And what Jensen Huang has basically said to them is like, that moving train that you were trying to catch is going even faster. Good luck. And so that's what's really going on a competitive basis there as well.
And Moore's Law, I meant doubling every 2 years, so forgive me. Yeah, so much faster here.
Ian, I want to that end of this, of jumping on that train, I want to talk a little bit about margins, because the company said that margins for the gross margins will be 75.75% in the current quarter. As you noted, this is more like a software company rather than a chip company. And you yesterday talked about Intel being in the low 60s at its height when it really owned the server market. What can history tell us about the duration and durability of margins like this for a chip company?
Yeah, I mean, right now, their margins are what they want them to be, because it's just really a case of, well, our prices are sky high, we're sold out, we can essentially charge what we want, so obviously the pricing is very good for margins. On the flip side of that, as we just discussed, they can spend what they want. It's, how much do we want to spend on R&D, how well do we want to reward our employees? So the margins are sky high, but they could make them artificially higher. The fact that they're spending heavily, the fact that they're able to charge a lot, that's something that's going to probably persist. So they're setting very high targets, but they could be even higher. So, as a measure of their health, it's pretty good.
Do you agree with Jensen's comment that the freight train is now moving faster and these companies will have a more difficult time? The AMDs and the like will have a more difficult time catching up with NVIDIA?
I mean, Jensen's racing, I mean, that's one of the things that comes across in pretty much any time he says something. He's constantly aware of the tension that exists in his business and his market, and he's consciously trying to shape both what his company does and his understanding of the relationships, where we are in the cycle, where we are relative to the competition, what the customers want. He's trying to shape his narrative to fit that. He's very clever, and he's showing people that he understands what's going on and what he has to do to stay ahead. And that kind of institutional paranoia, that history of being the little guy, still very much present in what he's doing.
All right, 30 seconds left here. So who is most likely to catch up to NVIDIA and when?
I mean, talk to me this time next year and there might be somebody. But right now, it looks like everybody's just picking up the scraps.
Unbelievable, and just a fascinating story. Ian, thank you. I know it's been a busy 24 hours for you, so we really appreciate it. Ian King, our U.S. semiconductor and networking reporter at Bloomberg News, joining us from our San Francisco bureau. As we mentioned, NVIDIA shares continuing to trade higher, still up about 10% in today's session. And again, you're now looking at a $2.5, almost $2.6 trillion market cap company. So it is in the league of some of the largest market cap companies in the world.
So far this year, Carol, this was after yesterday's last year's blockbuster year for the company. NVIDIA shares are higher by 111%.
Yeah, I think it's the third best performing group in the name in the S&P this year, after being number one last year. All right, coming up, everybody, get ready for disappointment when planning your next trip. Summer travel season, it is here. That story is straight ahead. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the world of politics to the world of business, 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg on a day which began with a lot of hope, for high hopes, in fact, for NVIDIA. We are now looking at steep losses for stocks, right to the numbers, because the S&P now down 37, drop there of 0.7%, lows of the day. The Dow was actually down more than 600 just a moment ago. Right now down 591. That is a drop of 1.5%. NASDAQ down 56, a decline there of 0.3%. 10-year, 4.46%, with a 2-year, 4.92%. Spot gold down 1.9%, 23.34 the ounce. And West Texas Intermediate crude down 1.2%, 76.62 for a barrel of WTI. Stocks and bonds are retreating as data showing U.S. business activity accelerated amid a pickup in inflation reinforced speculation that the Fed will remain on hold. Bottom line here, S&P below 5,300. We do have chipmaker NVIDIA after earnings trading above $1,000. Also weighing on the Dow, Boeing Chief Financial Officer Brian West says the embattled plane maker will continue to burn cash into the second quarter. Today, we're looking at Boeing shares trading lower as well. Right now, we have got Boeing down by 7.3%. Recapping, the Dow now down 609, down 1.5%. S&P lower by 0.7%. Bottom line, lots of turbulence in financial markets. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Nicely done, Charlie. Speaking of turbulence, the Memorial Holiday weekend is just a day away. That's the good news. It's expected to be the busiest one in over a decade, ahead of a record year for summer travel. So woohoo, right? And now we get to the turbulence part of it.
Yeah, chaos in the U.S. airlines industry. So get ready for messy if you're going to be traveling this holiday season. And a lot of people are. Let's get to Bloomberg News U.S. Airlines reporter Mary Schlangenstein. She joins us from our Dallas bureau. Mary, first up, super busy and also super messy. Why is this? I mean, this is an industry that has been, for lack of a better term, kind of in chaos since the pandemic. What's going on?
Right. Well, currently what's going on is that this is going to be the busiest summer ever in terms of number of passengers. And so that's a lot of huge demand. But at the same time, a number of the airlines face capacity constraints, either because they can't get new planes from Boeing or they've got planes grounded by engine issues on planes from Airbus. And so they're just limited in some cases just due to the number of airplanes. In other cases, they're not making money on some routes, so they're dropping them.
I find that fascinating. I have to tell you, Mary, I often get on a plane and I start counting seats, and I know what my seat costs, and I know every seat can cost differently. We've done those stories. But I get an idea and I'm like, how the heck do they make money? I know what these planes cost. I know what fuel costs. Have
you seen how much a snack box is?
And I know they charge us for every darn little thing, but I'm like, I just don't kind of get the business dynamics. But there are flights where they do make a lot of money, right? And there are flights that are not, but that used to be, I don't know how it kind of worked, and you hoped you made a lot more on most of the flights that airlines offer. Help me understand kind of how airlines are kind of weeding out stuff.
Well, part of the problem is, when there's a lot of demand that builds up in an area, geographic area of the United States, all the airlines put capacity in there. They put more seats, they put more flights. And then what that does is once it starts to exceed the demand, then the fares fall. And once the fares start falling, they can't always make money. They're paying pilots more, they're paying more for fuel. And so their costs are going up, but the fares may be dropping. And so, sometimes airlines will tolerate a route that loses money for a while. But now, with some of the airlines really being pressured financially, like Southwest and JetBlue and Spirit, they just can't operate those routes anymore. They have to drop them.
Hey, go ahead, Carol.
Well, I'm playing around with this great story. It's among the most read on the Bloomberg. I think the third most read. It's interactive, and you pop around on different cities like Columbia, South Carolina. There's almost 14% fewer seats. Jackson, Mississippi, about 18% fewer seats. Orlando, Florida. I mean, doesn't everybody go to Orlando? Almost more than 4.5% fewer seats here. It's just interesting that there are going to be some cities really impacted. So does that mean for the seats that remain, they're going to be super expensive?
Well, it's really interesting because they're not. Hopper tells us that fares this summer, over the course of the summer, they're going to average about $305. That's round trip domestic, and that's below last year. It's the first year-over-year fare drop since 2020. And it kind of doesn't make sense this year. You would think that those fares would go up because demand is so high, but they've got that overcapacity issue in some markets, and they've just had to reduce their fares.
Mary, Carol talked about playing with the tool and reading this online. Again, a fantastic piece, very interactive, that you and the team produced using data from Cerium. Can you talk a little bit about the analysis that you did and the big conclusion?
Yeah, what we looked at was, airlines file flight schedules way in advance of when the dates come for those flights. And what we did was we went back 4 months on a rolling basis and looked at 4 months ago, what were they planning to fly, how many seats? And then we looked at May 18th, which is the most recent data we had, and to see how those had compared. And during that period, we found that airlines had cut 6.2 million seats. That's a small amount when you compare to the 279 million seats being flown this whole summer. But if you're in one of those smaller communities, then it may affect you. Some frequencies may go away, or maybe you used to have 3 airlines providing flights and now you go down to 2. And so it can make for some important changes in those communities. For some reason, they appeared to be focused in the South and the Southeast. Part of that is because airlines did pull out of Florida to a certain extent. Southwest and JetBlue both cut flights out of Atlanta. And so it just, for some reason, focused on that area in particular this summer.
Mary, how nimble are airlines? Like, how quickly are they able to make changes to their schedule? Because I'm wondering would we see this every year with the data, or is this data different?
You'll see this vary, the number of seats they offer vary constantly throughout the year, but they do have to lock it in at a certain time because they have pilots that set their flight schedules, flight attendants that set their flight schedules, and once those are all locked in, the equipment's locked in, the aircraft type, they don't want to start changing things within the last 30 to 60 days. So within that time frame, you shouldn't see much movement, but over the course of a year, you can potentially see a lot either up or down.
And in some cases, right, they are also adding. I know in this right through, right, I think Delta talked about actually adding some domestic seats to and from Atlanta this summer.
Right, and that's certainly the case. In some cities, they are adding, right? A lot of that capacity that came out of Florida went to other markets. Some of it went out, the airlines have talked about putting it in Las Vegas, where that's really popular right now. Or some put more capacity into the Caribbean, because that's a hot area right now. So, it didn't all just disappear. A lot of it was shifted to other markets.
We talk about, though, being 4 years out of the pandemic, right? We know people have been going on, a lot of flying and traveling, things that they couldn't do from the pandemic. How much, though, of what's happening in the airline industry in terms of capacity, Mary, is again kind of the reset, figuring out where we really should be settling in kind of as we get back to normal, real normal post-pandemic, that we're maybe still working off some of that excess seats?
I think that's part of it because airlines did add a lot of seats. And in fact, some of the carriers like Southwest, Spirit, Frontier talked about adding too many seats. And Southwest in particular, is having to go through and reevaluate its network right now because they had expected demand to stay at a certain level and it didn't rise to what they thought. So they had too many seats sitting out there. So that's part of it. The other part is, the airlines say that people continue to want to spend on trips and on experiences, but there are more and more people now that are saying, for the middle class especially, that they're really looking at their budgets now, and in some cases, they're reconsidering, do I want to take a flight? And if I take a flight, do I want to buy premium economy or do I need to stay in basic economy?
Mary, you have mentioned JetBlue and Southwest a few times, but in the story, it talks about the most cuts from airlines came from Delta and United. And I'm wondering if that's a function of their size or based on their size, they had a higher proportion of cuts than other airlines. Where does that sort of fall proportionally?
Yeah, part of it is because they're the largest, and I think they would tend to shift more capacity around than some of the smaller airlines. United in particular was also affected by a 60
NYMEX diesel June futures settle at $2.41 a gallon. NYMEX gasoline June futures settle at $2.46. NYMEX natural gas futures settle at $2.65. And NYMEX WTI crude July futures settle at $76.87 a barrel. barrel.
This is like
That's
great.
down
This is
70
just chock
cents
full
or
of data. It's one of those
0.9%.
stories for months we're all going to be going back to and like citing
Well,
in introductions.
I immediately went to my hometown airport and
I saw
put the cursor on there to see 4% decline in seats, by the way, this summer.
I saw that too. So, all right, the slowest rate of summertime expansion in years. Among the 8 largest U.S. airlines, the number of available domestic seats, though, will be the highest since 2019, but up just 5% from last summer. That's Cirium data. Fees, what can you tell me about fees? I was booking a flight for my daughter. It's like luggage, everything. Like you want to breathe, and it's like that's going to be a fee. I'm exaggerating. But, Mary, does any of that ever go away?
They did do away with the change in cancellation fees at most of the airlines, and that was a big one. They did that during the pandemic because nobody was booking, so they didn't want to disincentivize that by saying, well, if you do book, and you won't need to change it, we're going to charge you a big fee. So those went away. But I don't think we're going to see much in the way of luggage fees going away. Those have been increasing lately. Probably not going to see fees for food on board, for picking specific seats. All of those seem like they're here to stay.
It's the world we live in. Carol always is struck whenever we go to the airport. She's like, we're like, carrying our luggage to the counter, and there's nobody there because they expect you at the counter to tag your bag and put it on the belt yourself.
Right? We check in. We get those little stickers.
Yes, we check bags.
Hopefully do it right. We put the little tags on the bags.
Doesn't matter where you're flying or
and
what
then
you're
they're
flying.
Like, oh, could you drop them? I'm just saying.
That's how they make money, Carol.
I know. I get it. Mary, thank you so much. Always a deep dive into how it all works and how it plays out. This is an incredible story, among our most read on the Bloomberg. Check it out, folks. It's interactive, and you can find out in your hometown whether or not seats are going to be going down.
4% in San Luis Obispo, California. All
right, Bloomberg News U.S. Airlines reporter Mary Schlangenstein. Hey, still ahead, the president that never leaves. It's a thing we're going to explain on the other side. This on a day when we see markets, we are pretty much at our lows of this session, down the most on a percentage basis on the Dow, down about 1.6%.
Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The Justice Department filed an antitrust lawsuit against Ticketmaster and parent company Live Nation, accusing them of running an illegal monopoly over live events and driving up prices for fans. Attorney General Merrick Garland.
We allege that Live Nation has illegally monopolized markets across the live concert industry in the United States for far too long. It is time to break it up.
Live Nation and Ticketmaster accused of using anti-competitive practices like locking venues into long-term contracts and retaliating against their rivals. Live Nation denies it engaged in any practices violating antitrust laws. Israel will expand its military operation against Hamas in Rafah, saying 1 million civilians have already moved out of the city. Military spokesman Daniel Hagari says Israel is, quote, operating with care and precision. Israel has said it needs to invade Rafah to achieve its goal of destroying Hamas. Rafah has become a refuge for Palestinian civilians fleeing the war. And the FCC has issued a $6 million fine against the political consultant who sent AI-generated robocalls mimicking President Biden's voice to voters ahead of New Hampshire's presidential primary. Steve Kramer also faces 24 criminal charges in New Hampshire. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
I think I was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios. And, any given day it would be the head of a studio and, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I had a big insight one day that women don't invest as much as men do. That, you know, we all think it's because they're risk averse, but maybe it was because nobody built anything for them.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his 2 jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Steep losses for the U.S. stock market, right to the numbers, because we got the Dow down 577 points now, a decline of 1.4%. The S&P down 36, down 0.7. NASDAQ right now down 64, drop there of 0.4%. Stocks and bonds are retreating as data showing business activity accelerated amid a pickup in inflation just reinforced speculation that the Fed will remain on hold. S&P below 5,300, 52.70 right now with the 10-year 4.47%, the 2-year 4.93%. Spot gold down $43 the ounce, tumbling 1.8%. Crude oil now lower by 0.8%, 76.99 a barrel. Chipmaker NVIDIA, though, surging above $1,000, $1,040 right now, of 9.6% after that bullish sales forecast last night showed AI computing spending remains strong. Again, recapping, S&P down 36, drop there of 0.7%. Dow particularly hard hit because of Boeing. We've got the Dow Jones Industrial Average down now by 1.5%. NASDAQ down 0.4. NVIDIA up by 9.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie. Well, the November presidential election in the U.S. now, less than 6 months away. There's a new
And Brent crude futures settle at $81.36 a barrel. That's down 54 cents or 0.66%.
And then never leaving is weighing big time on the minds of some voters.
This story featured in the forthcoming issue of Businessweek magazine, soon on newsstands and now on Bloomberg.com and at Bloomberg.com/Businessweek. Also, of course, on the terminal. With more on his story, Bloomberg Businessweek national correspondent Josh Green. Josh, the author of The Rebels, Elizabeth Warren, Bernie Sanders, AOC, and the Rise of the New Left. Also the author of the bestseller Devil's Bargain, Steve Bannon, Donald Trump, and the Storming of the Presidency. Josh joins us from our Washington, D.C. bureau. Josh, what's going on here with the former president's rhetoric, what his advisors close to him are telling you, and the idea of taking him seriously but not literally kind of comes to mind when I read this?
Yeah, well, I've been talking to Republican and Democratic strategists recently who'd mentioned that they were seeing something strange in the focus groups and polls they were conducting, and that is that a lot of swing voters were worried that Trump was going to declare himself president for life if he's reelected in November. And as I did some reporting on the source of these worries, basically this is something that Trump likes to joke about. Of course, there was the January 6th riots that gave a lot of people pause. But it's a factor that I think isn't being paid a lot of attention to, but both Republican and Democratic strategists are seeing it and wondering if this is going to have an effect on the outcome in November.
You know, it's interesting, and Josh, we don't certainly have to tell you, but this idea that former President Donald Trump will say something and people will be like, well, that's Donald Trump. Like, you know what I mean? They're kind of dismissive. Is there something, though, different as he runs for a second go at the White House?
Yeah, I think there are a couple things. I mean, as you mentioned, you know, the Trump people sort of laugh this off as this is just Trump being Trump. You know, he likes to say outrageous things to get a rise out of liberals. He's talked a little bit about, well, should I maybe serve 3 terms? Just this past weekend in an NRA rally, for instance. But while a lot of people write it off as just Trump being Trump, this particular group of voters seems to be listening to it and worrying about it. And as strategists have kind of plumbed the reason for this, they've come up with some interesting theories. And the best one I heard was that it was really, what was driving this fear was the Supreme Court's decision to overturn Roe versus Wade. A Democratic strategist told me that what that did was convince a lot of ordinary voters that things they wouldn't have imagined possible, like Roe versus Wade being overturned, or Trump abolishing term limits, suddenly seemed real enough that these voters were worrying about it, and it seemed to be pushing at least some of them back into Joe Biden's camp.
Well, you get into the piece that the idea of a president serving only 2 terms, whether consecutive or not, hasn't been in the Constitution since the days of the Founding Fathers by any means. It was ratified in the 1950s after FDR served more than 2 terms. Can you talk a little bit about the history of presidents since 1950, talking about the potential repeal of the 22nd Amendment, or at least alluding to the idea of serving more than 2 terms?
Yeah, absolutely. I mean, as I did a kind of a deep dive in this piece, what was interesting was that almost immediately when after the 22nd Amendment was passed, popular presidents and their advisors in both parties have kind of objected to it. Ronald Reagan said in 1987 he would like to overturn it. Democrats in the House of Representatives twice, once during Bill Clinton's presidency, once during Barack Obama's, tried to push legislation overturning it. So it's something that popular presidents sort of chafe at. But that being said, the hurdle to actually get it overturned and abolish term limits is almost unthinkably difficult. It would require large majorities in both houses of Congress. It would require large majorities of state legislatures to approve it. So it's not something that's plausibly going to happen. And yet still, people have learned that Trump is a norm breaker. It's something that gives them pause, and it's weighing on them as they make their decision on who to vote for in November.
Hey, Josh, there are focus groups, and then there are focus groups by those who have been doing them for some time that maybe you sit up a little bit straighter and take note. And is that kind of what's going on? Because I am curious. I think it was the Democratic individual in your story from David Binder Research who's been doing these focus groups for a long time. Like, I just do wonder, is there something that just makes everybody kind of be like, wait a minute, there's something different this time around? Because you're like, as you said, not the first president to maybe say, yeah, I'd like another term.
Yeah, I think that's exactly what's going on. I mean, if you go back to 2020 and the January 6th uprising, it's sort of shaken a lot of people and made them realize that, well, like, maybe things aren't as smooth as we expect. The focus group guy that you were referring to has sort of said, you know, historically when we conduct these focus groups and we throw out these kind of wild scenarios, voters usually push back and say, oh, that could never happen. But that kind of pushback now, he says, has stopped in his focus groups. I was able to sit in on a couple of these and sort of see this myself, and people are just much more willing to believe that crazy things can happen, and that maybe one of those crazy things will be Trump declaring himself president for life. As implausible as that sounds, I think, to most voters.
Well, I was struck by a woman who you spoke to who actually said that she would vote for Biden even if he is in a coma, despite the fact that back in 2016 she voted for former President Trump during that election. Talk to me a little bit about her thinking, Josh, and how this could move the needle with the undecided voters.
Yeah, well, the people I was focusing on in this piece really were that narrow group of undecided voters who are going to decide the election. A lot of committed Republicans like it when Trump talks about abolishing term limits. A lot of Democrats like to get upset about it, but their votes aren't really up for grabs on either side. So the focus of these focus groups and the voters that I talked to were people who had either been former Trump voters, former Biden voters who were now undecided. The woman you mentioned, Lori McCammon, is a grandmother in Wisconsin I talked to, voted for Trump in 2016, but as she's witnessed January 6th, she's listened to MAGA media figures like Steve Bannon talk about multiple terms. It scared her into deciding that she wouldn't risk another vote for Donald Trump, and she told me, as you said, she's planning to vote for Biden in November no matter what.
Hey, while we have you, and one thing we wanted to ask you, and this was certainly a story that we've been talking about this week a lot, and this has to do with Donald Trump, a video posted to his social media account, that referenced a unified Reich as a potential news headline if he won a second term. Devil's Bargain, bestseller. You really got inside Steve Bannon and the road to the White House for Donald Trump the first go round. How are you thinking about some of the terminology that's being used, the rhetoric that's being used by Donald Trump?
Well, this is something that we've seen going all the way back to Trump's first run in 2015 and 2016, that kind of winking at the far right, either through phrases or memes or videos or what have you. I don't know whether this was intentional or not, but given Trump's background, given the praise he heaped on some of the Charlottesville protesters in 2017, another earlier controversy over anti-Semitism, it's something that people in the press and people in the electorate, I think, are very alert to. So when something like this pops up in a Trump video, you see the media pouncing, you see the attention to it, and it's something that the Trump campaign, either intentionally or unintentionally, hasn't really managed to fix and bottle up and kind of clean up their campaign.
Right.
But I think we can see, based on this, it's something that we're going to have to keep an eye on going forward.
Right, and certainly those undecided voters are keeping an eye on, too. That maybe explains what you just talked about in your story. Hey, Bloomberg Business Week national correspondent Josh Green. Josh, thank you so much. Hey, coming up, one of the most read stories on the Bloomberg, the Bahamas penthouse at SBF overpaid for, Tim.
It's in the market. Are you looking for some real estate?
No.
Okay. That's next. This is Bloomberg.
In 10 minutes' time now, at the top of the hour, we're expecting comments from Fed's Bostic. So Fed's Bostic's participating in a Q&A session with an MBA class at Stanford. A no text is expected and no live stream available.
Do you feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range because when you get to global events like Barbie or Oppenheimer or Super Mario Brothers, it's worth the investment, and it's clear that the audience is there, and they just need to be given what they want. The middle, which ends up, quickly on one of the services in a way that we're watching movies that we don't know how they got made or when they got made and all of that. I think that will probably be curated better, and I hope there's more inexpensive things that give more people the chance to express themselves and have their work seen.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg. Top experts. Great questions. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We do have stocks at the low of the session right now. Boeing certainly moving the Dow Industrials lower. Boeing CFO Brian West says the embattled playmaker will continue to burn cash in the second quarter and in the full year as it grapples with a turnaround effort of its factories and faces a new challenge in the form of additional certification requests from China that have temporarily halted deliveries to the country. Right now we've got Boeing down now by just about 7.4%. The Dow, by the way, lows of the day down 627 right now, down 1.6%. Sources tell Bloomberg Alphabet and Meta Platforms have held discussions with major Hollywood studios about licensing content for use in the tech giant's artificial intelligence video generation software. Both companies are developing technology that can create realistic scenes from a text prompt and have offered tens of millions of dollars to partner with studios to some capacity. Alphabet shares, they are lower now. We got Alphabet down 1.7%. Meta Platforms lower by 1.2%. James Gorman will be stepping down as Morgan Stanley chairman at year-end, capping a nearly two-decade run at the firm in which he rescued it from the brink of failure and turned it into a wealth management powerhouse. Morgan Stanley shares right now lower by 2%. Jamie Dimon says parts of JP Morgan's business in China have, quote, fallen off a cliff in recent years. That according to the Financial Times, citing private comments from Dimon to attendees of the bank's flagship conference in Shanghai. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 Newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. It was no surprise. The Senate voted down the bipartisan border bill, marking the second time it's been blocked in just a matter of months. Republicans said they would block it, and they did. The Justice Department is suing Ticketmaster and parent company Live Nation, accusing them of running an illegal monopoly over live events, driving up prices for fans. Attorney General Merrick Garland says Live Nation relied on unlawful, anti-competitive conduct to maintain its monopoly over the live events industry.
The result is that fans pay more in fees, artists have fewer opportunities to play concerts, smaller promoters get squeezed out, and venues have fewer real choices for ticketing services.
Department officials did not say how the company will be broken up. Analysts expect it would seek to separate Live Nation's concert promotion business from Ticketmaster. Now, this is graduation day at Harvard, but 13 students did not get their degrees because they participated in a pro-Palestinian encampment on campus. Now, the move came after 115 faculty members showed up to a meeting on Monday, voting to allow them to graduate anyway, even after they'd been disciplined by an administrative board. Well, the board said no. And during today's graduation, a group of graduates walked out of the ceremony chanting "Free Palestine." Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Masser and Tim Stenovic.
All right, Amy, thank you so much. That story is among our most read on the Bloomberg today, about the Harvard students, their commencement, 13 students who participated in pro-Palestinian encampment on campus. They're not going to get they're withholding their degrees. Like you said, do they not get their degrees at all? Do they have
4
to wait?
years of work.
It's kind of like wild.
And then, they'll have to go to employers and tell them.
There's a lot of, it's never easy when we have these discussions. But anyway, it is among our most read stories. But like you said, is it 4 years and you don't get your degree?
Also among our most read stories on the Bloomberg terminal is one about some pretty fancy real estate that is going up for sale in the Bahamas.
Yeah. It's a $30 million penthouse atop the Orchid building where Sam Bankman-Fried lorded over the rise and fall of his $32 billion crypto exchange, FTX. It soon could be yours. Apparently, they're getting ready to sell it.
It's on New Providence Island. It's the sun-kissed capital of the Bahamas. FTX liquidators are close to putting the remnants of the giddy days of crypto's fallen boy wonder up for sale one by one. Topping that list is the penthouse where Bankman-Fried lived and worked with the folks at FTX until it collapsed in scandal in late 2022. It's where SBF would nap on a beanbag chair near the pool that snakes across the wraparound balcony. That was until police took him away in handcuffs.
Yeah, in the run-up to the collapse, former FTX CEO Ryan Salome and other lieutenants spent about $255 million, $255 million on 52 condos, offices, and plots of land scattered across New Providence Island. This is from documents in the liquidation. So,
So we should note that it's clustered around the Albany development. It's a 600-acre planned citadel for the rich on the western tip of the island. It calls folks like Tiger Woods, Justin Timberlake, investors in the community.
Yeah, it's interesting. I guess SBF bought the penthouse, which is the crown jewel of Albany, for $30 million, according to those purchase records. And my understanding is, it just hit the market, I think, for $29 million. So even if the penthouse fetches $30 million, taxes and fees will eat up about 20% of that. So it's a loss.
Taxes and fees. It's where it always goes. It's where it always goes.
All right,
to the
everybody.
brokers, to the lawyers, to the government.
Everybody taking a bite. Hey, coming up next on television, The Close. Stick around for them. If you're watching us on Bloomberg Business Week, we've got an interesting story. It has to do with private credit. It's got a problem. We're going to dig into that in just a moment. This is Bloomberg.
Sometimes a rising tide only lifts one boat. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. I'm not surprised by NVIDIA. I am surprised at the rest of the market.
Yeah, interesting day here. And I guess NVIDIA wasn't the savior some people had thought.
So let's get checked out here. We get the S&P down by about 0.9%. We're right around the lows of the session. The next index is the Magnificent 7. It's up by 0.2, but only because of what we're seeing with NVIDIA. That's still strength to strength, still right around its recent records, past that $1,000. Also, Tesla, though, not helping either. third, that stock one of the worst performing stocks within the S&P. Also not helping, Live Nation, the worst performing stock on the S&P. The DOJ and other states filed a suit to break up the company. More on that in the next couple hours. Two-year yield shooting higher, up 6 basis points. That is eco data remain continuing to come in strong.
Yeah, and we really talk about how NVIDIA was really supposed to be that big catalyst, that big market catalyst for further broad market gains. But almost 24 hours later, we see that broadly positive earnings report has primarily been a catalyst just for NVIDIA and maybe a few of its AI brethren. That included at least one point on the day server makers like Supermicro and Dell Technologies still holding on to gains, at least for Dell. Supermicro now coming off of those highs. And you had chip makers like Broadcom, Marvell, as well as AMD that had also rallied earlier in the day and now seeing softness. At one point, the Philadelphia Semiconductor Index and the NASDAQ were at fresh record highs. But of course, if it wasn't for that 11% jump that we saw NVIDIA earlier in the day, the S&P would have been deep in the red earlier, and the NASDAQ and SOX would have been barely break even. The breakdown that we're seeing in those broader market names right now, indicative of some of the concern. And some of that concern and some of the lackluster broad market moves are less about NVIDIA and more about some of the economic data we got this morning, including the latest U.S. manufacturing PMI numbers. That data showed a sharp acceleration in business activity. Good. But that suggests not only greater inflationary pressure, but price pressure that is now coming more from the manufacturing side rather than just on services. And maybe that explains why so many Fed speakers in recent days and weeks have really been so intent on saying they want to keep interest rates higher for a little longer. That led to a modest sell-off in treasuries, and of course it did dampen the moves in equities in a big way, particularly for the industrial and cyclical stocks. Take a look at the Dow Transports, on pace right now for their second worst week of the year. In fact, two stock market gauges that together, when intertwined, provide a real clue about the state of the economy are now flashing early signs of caution. The Dow Jones Industrial Average, which hit a record high last week, has not seen that move matched by the Dow Transportation Average, which is still, Alex, 12% below its all-time high that was set all the way back in late 2021.
Yep, and it raises the question, like, are we a transportation economy anymore, or straight up services? This is a great chart sort of illustrating what Romain is talking about. You have the white line, which is the Dow Jones Industrial Average, and the orange line, which is the Dow Jones Transport Average. And I did it for 2 years, so you get the sense that they tend to move together. Sure, there's been some dislocations, but on the whole, they move together. The recent dislocation so far this year has seen the Dow Jones Industrial Average really outpace where we are for the transports. So either the Dow Jones Industrial Average is going to come down, Romain, or we're just in a different type of economy. We're into services. I'm going to get my massage. I'm going to a restaurant. I'm not going to be buying big bulk items.
Yeah, absolutely here. And it gets to the broader question, too, as an investor, how do you position around that? Ed Yardeni joining us right now is President and Chief Investment Strategist over at Yardeni Research, helping us kick us off to the close. And, you know, look, Ed, I don't want to get too into the weeds of Dow theory. I know there's some big believers in that and, of course, a lot of naysayers. But one thing I don't think is debatable right now is that there had been this sort of disconnect, I think, between what was going on in the manufacturing part of this economy and the services side of the economy. Is that a concern?
It really hasn't been a concern to us. We've been anticipating and perceiving that we're in a recession, but it's been a goods recession. You know, we had that massive buying binge after the lockdowns were lifted, where people wanted to go out and shop. They couldn't really do much in services. So we saw just record spending on goods. And then it all kind of came to a halt in around March 2021. So everybody got loaded up with goods, bought what they wanted. Then they started seeing the services were opening up. What's interesting is the goods didn't take a dive. They just kind of went sideways for a while, and they're still going sideways. And anything related to goods like trucking, like train transportation, has been also kind of in a stalled state. So that's the weak part of the economy. The services is doing absolutely fine.
Well, then that gets to the question, though, too, as to which direction the signals are going. Are we learning more about the economy based on what we're seeing in markets, or are we learning more about markets and that psychology based on what we're seeing out of the economic data?
Well, the economic data still looks pretty good to us. The initial unemployment claims came down again. There was some concerns that maybe it was about to swing to the upside. But the initial claims, I think, are the key weekly indicator that we have on the labor market, which is the key leading indicator that we have on the consumer. And the consumer looks fine. They're still getting jobs. There's still plenty of job openings. Small businesses are depressed, not because their business isn't good, but because it's hard to find workers. So all in all, I think we're looking at an economy that remains remarkably resilient. And while everybody's coming to conclude that maybe we're going to have higher for longer interest rates because that's what Fed officials are signaling, I view it as normal for longer. We're at normal interest rates. Economy's done fine with these level of interest rates, as has the stock market.
I think that's a great point. Normal for longer. That's a total mindset shift, it feels, than like getting a few more cuts, right? In that environment, what still gives you the most value? Where can you still find value in a normal forever?
Well, I think at this point, my advice to people who've been investing in the market is stay with it. I still like information technology, industrials, financials have done very well. I mean, there have been some laggards, I suppose, in the financials. Biotech has had a bit of a move here. But all in all, I'm kind of anticipating that the U.S. economy is going to continue to do well. We are starting to see some green shoots in the global economy. So I think all the stocks that are being sold
Fed's
today
Bostic says the
are
last
probably the
couple of
ones that are gonna
inflation
make a
numbers
comeback,
suggest
and
it's going back
maybe
to
this is just a
2%, but
short-term
it's going
opportunity
slow.
to hop aboard what I think is a long-term bull market.
Does that include small caps right now, Ed?
Well, it's interesting. We've looked at the earnings story on the small caps. We're talking about when there's the S&P has 500, the 400 is the mid caps, and the 600 is the small caps. We're not big fans of the Russell because they got like 2,000 names in there, and a lot of them, quite a few of them, aren't making money. So the S&P 600, the small caps, their earnings are kind of flattish. I think they're still more exposed to higher interest rates than are the large caps, and they're, I think, having more troubles finding workers, and they're finding it harder to use technology to increase productivity. So I think at this point, stay with the large caps, but I think if you want to go down the cap range, I would go to mid caps, and they've done very well too. Information technology mid caps have been on fire.
All right, Ed, it's always good to catch up with you. Thank you so much. I know you're on that 60,000 for the Dow 2030. Doesn't look so crazy right now, Ed. Thanks a lot, Ed Yardeni.
Thank you.
President and Chief Investment Strategist over at Yardeni Research. Have some breaking news for you. So Starwood REIT is setting some drastic redemption limits amid an ongoing liquidity crunch. This is a $10 billion fund managed by Barry Sternlicht's Starwood Capital Group. And it's taking the drastic step of preserving liquidity by imposing tighter limits on investors' ability to pull the money. It's going to cap monthly redemptions at 0.33% of its net asset value and 1% a quarter. This is according to a filing on Thursday. Of course, this all comes within the depths of commercial real estate property crunch.
Yeah, kind of reminiscent, I think, what we saw last year with Blackstone, the B REIT there. Maybe not as dramatic in terms of the shutting people out here, but that's a pretty big drop when you talk about allowing a 2% redemption and then going down to 0.33% here. It's sending a signal. I was just taking a look at the complexion of S-REIT here, still very heavily weighted to market rate apartments and primarily in the southern parts of the U.S. A story we'll keep an eye
Fed's
on
Bostic
here,
says post-pandemic economy may be less sensitive to
in the real
rates.
estate market, but also some pressures going on when it comes to antitrust. The DOJ here in the U.S. and almost 30 states suing now, formally suing to break up Live Nation. They want to force it to sell off Ticketmaster. We're going to talk with a key official, one of the lead attorneys in the antitrust division of the Justice Department.
And plus, we're going to take a closer look at NVIDIA's strong results and why it's not having a positive impact on the broader market today.
And we're going to take a look at some of the big movers on the day, and that includes VF Corp, the owner of North Face and Vans, plunging after reporting a quarterly loss. We're going to take a look at the challenges facing the company and other apparel brands. All that and more coming up in a bit. This is The Close on Bloomberg.
Fed's Bostic says households and homeowners locked in low rates and limits the sensitivity of the economy to Fed policy rate hikes.
circling back.
Fed's Bostic says low-cost debt makes people less sensitive to rate hikes.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Live Nation Ticketmaster's exorbitant fees and technological failures have been criticized by fans and artists alike. But we are not here today because Live Nation Ticketmaster's conduct is inconvenient or frustrating. We are here because, as we allege, that conduct is anti-competitive and illegal. Our complaint makes clear what happens when a monopolist dedicates its resources to entrenching its monopoly power and insulating itself from competition.
That was U.S. Attorney General Merrick Garland announcing the Justice Department's decision to sue Live Nation with the aim of forcing it to sell Ticketmaster. Nearly 30 states are also joining in that suit. Joining us now from Washington is Andrew Foreman. He's Deputy Assistant Attorney General for the Antitrust Division of the Justice Department. Andrew, thank you so much. I'm going to read you Live Nation's statement, if you don't mind. This is what they said in response to the lawsuit. The DOJ lawsuit won't solve the issues fans care about relating to ticket prices, service fees, and access to in-demand shows. Calling Ticketmaster a monopoly may be PR win for the DOJ in the short term, but it will lose in court. Andrew, what's your response to that?
Yeah, well, first of all, thanks for having me. Look, as you pointed out, the Department of Justice, along with 30 states, a bipartisan group of states, I might add, filed the lawsuit today. Look, we start from the premise that competition matters and is meaningful. And as illustrated in the complaint, we lay out why Live Nation has, in our view, a dominance across the entire concert ecosystem, from its promotion services, from its aspects of its venues, and its ticketing business. And we also allege several different categories of conduct that we believe shows that they are maintaining that monopoly unlawfully. And so, again, in our view, competition matters, and we look forward to, discussing that in the courtroom.
I mean, it seems what Live Nation is saying is like, look, the reason why ticket prices are high is because there's a lot of demand.
Fed's Bostic says on rates, it is important to move in one direction only.
What's your response?
Well, look, I'll leave the, that to them. I will say again, along with the Department of Justice, there were 30 states that joined the lawsuit. That was a bipartisan group of states. And as we lay out in detail in the complaint, we believe that because of Live Nation's power across the concert ecosystem and its conduct, that has led to a series of harms, and those harms flow to fans, artists, and others.
And you feel like you can actually prove that in court?
Yeah, look, we do thorough investigations, and we follow the facts and law where we see fit. And when we believe there's a violation, we bring a lawsuit like we did today.
Did you actually try to negotiate a settlement with Live Nation before announcing this lawsuit today?
Yeah, look, I don't want to get into any specifics, but I will say, we, consistent with ordinary practice, we had discussions with
Fed's
Live Nation.
Bostic says we may have to be a little more patient and certain about the inflation path to 2% before moving policy rate.
That we did today, along with our state partners.
There's a big question right now here, not just with DOJ, but really about the broader antitrust efforts coming out of the U.S. And the track record, the success, or rather lack thereof, in recent years in that. So when you see a company not necessarily willing to settle prior to the lawsuit, willing to take this to court and fight, how long are you prepared to wage this fight?
Yeah, thanks for the question. I just want to maybe nitpick a little bit on one of the assumptions in it. We have won our last 3 trials, thanks to the great work of the people of the Antitrust Division, and have seen a whole lot of other enforcement victories. And so, we don't take actions like we took today lightly, and we've got tremendous lawyers, economists, and others at the Department of Justice, and we look forward to having our day in court.
Bostic says job growth has been robust, and it gives me confidence at staying at more restrictive levels.
We have analysts here at Bloomberg that said that it could take years and that it might not even result in a forced asset sale.
Bostic says we are not in danger of falling into a more contractionary environment.
We obviously just filed the lawsuit earlier today, and as the Attorney General and Assistant Attorney General Cantor laid out, we did ask for structural relief in the complaint, and any effective antitrust remedy needs to address the violation. There's a long history of structural remedies in antitrust monopolization cases, and so but we're just in the beginning of the litigation here, and
Well, Andrew, I do want to ask you, we only have time for one more question, but I do want to ask you just to kind of about the origins of how this sort of mashup of Live Nation came to be. I mean, the whole
Fed's Bostic says we may need to be more patient to avoid heating the economy.
Was scrutinized primarily for the same issues that Merrick Garland laid out today. Yet that deal was approved. And I'm curious as to what you think has changed in that sort of 10, 12 years, however long it's been since then and now, that sort of gives the DOJ the confidence to sue over a deal that effectively they were willing to sign off on back in the day.
Sure. So our lawsuit today is much broader in terms of the markets, in terms of the conduct that we talk about. It is under different laws. It's under the Sherman Act. The transaction that you talked about was scrutinized under the Clayton Act, a different law, and obviously was narrowly focused on the transaction itself. So this litigation is much broader and, as I said, under different laws.
All right, Andrew. Well, we really appreciate you taking time to talk to us today. I know you're busy. Andrew Foreman there. He's the Deputy Assistant Attorney General for the Antitrust Division of the Justice Department, one of the lead lawyers here on the Live Nation Ticketmaster case. All right, when we come back after the break, we're going to focus in on another company, and that is the parent company of the apparel brands Vans and the North Face, VF Corp. It's finding itself in a bit of a pickle last quarter and getting 2 downgrades as a result. We're going to talk to one of the analysts behind those calls. That's coming up next. This is The Close on Bloomberg.
Bostic says there is still considerable upward pressure on prices, not past the worry point.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking?
Yeah.
I mean, like, what's that about?
We're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
All right, let's get a view from the sell side with our top calls, the big movers on the back of analyst recommendations. And we start off with Take-Two Interactive, an upgrade to buy over at Bank of America. The price target getting lifted to 185 from 160. The analysts citing better clarity on the release dates for some of Take-Two's popular games, Borderlands 4, Civilization 7, and of course, Grand Theft Auto 6. Now all set to have the release time sometime in 2025. The shares today up about 0.9%. Under Armour next up here, Oppenheimer cutting to market perform. The analyst waiting for clearer signs of improvement on that turnaround there. He says the backdrop for sportswear is still looking less and less favorable, with choppier consumer demand and markdowns hindering prices. Despite this, though, he's still optimistic about Under Armour's longer-term outlook, especially with founder Kevin Plank back at the helm. Those shares, nevertheless, though, down about 4% here on the day. And let's end things off with VF Corp here. This is the owner of Vans, the North Face, and Supreme. A big sales miss in the fourth quarter, prompting two analysts to cut their recommendations today. That includes Williams Trading, which downgraded to sell, saying it has a long way to go before that company's core brands can overcome consistent weakness. Even if VF sells some brands, it might not be enough to pay down the company's extensive debt load, the analyst adds. And you see the shares there down about 3% here on the day. Those are some of our top calls, and we want to stick with that last one because I'm pleased to say that the analyst behind it joins us right now. Sam Poser is senior equity
Bostic
analyst
says it would
covering
not
footwear
surprise
and
me if it
apparel
took longer to
at
get to
Williams
2%
Trading.
inflation
And
in
you
the
got a
US
sell
than
rating on this
elsewhere.
stock, Sam, you're one of only two folks on the street brave enough to go all the way down to sell. What's giving you the most concern here?
My concern is that I don't think, even with a lot of the changes, that they've got a long way to go. I don't think they fully understand that, once they've been kicked out of retailers, it's hard to get back in. And I'm not really sure, one, if they're going to have the product and the marketing set up even a year from now with the core brands, with Vans and Timberland specifically. North Face is doing well, but I think everybody's taking a very, very cautious look at this fall, given how poorly outerwear performed last fall. So I just think that to get the open to buy, to bring product in, and for it to sell well, unfortunately, I think that the sell in when they feel they get to where they need to get to is going to outpace the sell-through.
But this gets to a question, though, about management, Sam, because, I mean, look, I think anyone would sort of quibble with the idea that these are iconic brands, and we've seen sort of storied brands fall out of favor and then sort of bounce back up here. You got a relatively new CEO who's been there a year. There were a lot of questions as to why he was qualified to run this company. Do you have confidence in him? And if not, who would you have confidence in to execute a turnaround?
Well, I sort of go on the I know it when I see it, and I mean he's had a good result at Logitech, and as I wrote in my note, there's not a lot of fashion risk to a keyboard, and I believe that they got rid of the person that was best suited to turn around Vans. He had left, he went back, and in the middle of the turnaround, they moved him away, and he just recently left the company. Timberland, since they bought it, it has not done much of anything, and I think they're overzealous on the iconic wheat boot and derivatives of that versus broadening out the offerings. Yes, some of these brands are doing a little bit better in the international markets, but I think that unfortunately is more of a flash in the pan than long-term success. And then, I am concerned also with the North Face that it might be needed to carry, more weight than it should in order to help offset the weakness in the other brands.
Sam, I think that Apple would disagree with your, keyboard point. They probably definitely think the keyboard is an art form. But aside from that, what brands do you think that they will have to sell or should sell? I appreciate that that won't be the fix, but what do you think?
I think that they'll probably sell Supreme, not necessarily because it's bad. I don't know if it was a great acquisition, but because it's probably more of a one-off relative to their core brands. It wouldn't hurt their strength with their factories and so on. And secondly, it would probably be Dickies for virtually the same reason. However, that being said, Timberland has been, nothing since they bought it, many years ago now. It's up about $100 million in sales, and really, I believe, has lost its luster. And they've tried all kinds of things to get it back, and it hasn't worked. And for me, that's the one they really, should sell, because it just seems to be a waste of time, even though I think it's potentially a good brand. Unfortunately, with all of these, I'm not sure who the buyers are. And with Supreme, it's one of those peculiar situations. It did exceptionally well because it was so scarce. And as you open more stores and expand it, you do more business, but you also diminish what made it great in the first place.
Yeah. No, it's a conundrum, and then you overlay it with a challenged consumer. All right, Sam, thanks a lot. Sam Poser over at Williams Trading. Appreciate that perspective. All right, coming up, we're going to talk to Larry Morse, co-founder at Fairview Capital New York Life, just acquired a minority ownership stake in the firm. We'll break it down. This is Bloomberg.
The biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? Is it just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around prevention.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power.
This is Bloomberg.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. So you may have markets actually disappointing investors today, particularly if you were looking for an outperformance. But here's a fun stat for you, Romaine.
What's that?
Fidelity says the number of 401k millionaires has now hit a new record. It's jumped 15% from the prior quarter and up 43% since March of 2023.
And I assume that's because of what, all the rallies that we've seen in equities and other asset classes?
I don't know. Maybe they're invested in some private credit. Maybe they're doing alternatives in their 401k. Could happen.
I know. Have you looked at some of those offerings that we get now here? I mean, it's broadening out here. It's not just the old 60-40 with stocks and bonds. Of course, alternative investments have been a big part of that strategy. And when we talk about sort of the whole universe of private capital, we also have to talk about insurance companies. Traditionally, they've invested mostly in bonds, stocks, and mortgages, but increasingly, they've actually been taking a more active role in investing not just in alternative assets, but in the asset managers themselves. That includes private equity and venture capital firms. One recent example is New York Life, which increased its investment in Fairview Capital, acquiring a minority ownership stake in the Hartford, Connecticut-based firm, which has about $10 billion in assets under management and focuses on venture capital and private equity. Pleased to say that the co-founder of Fairview joins us here in Studio 2, Larry Morris. Great to have you here, Larry.
Well, thank you for having me.
First, let's talk about why you sold this minority stake. Your firm's about 30 years old right now. You've been doing this for a while.
That's right.
What made it attractive to you?
Well, a couple of things. And I have to say that there was something quite organic about this from our perspective. As you referenced, New York Life was an existing investor of Fairview's. Back in 2021, they retained us to build a portfolio of next-generation private equity fund managers, those that we've identified as having the talent, the ability, the performance that suggests they're likely to build enduring franchises over time. In that process, we worked very closely with the team of professionals at New York Life. They got to know us. We got to know them. We developed deep respect for one another. We understood our capabilities, our compatibilities, our complementarities. So when they broached the notion of deepening the relationship and suggested to my co-founder, Joanne Price, and I, that if we were ever interested in a strategic conversation, that was a conversation they'd like to have, we decided we'd pursue it.
Let me ask you this. Yeah. Why do you think they wanted to have that conversation now as opposed to, I don't know, 5 or 10 years ago? What's changed?
Well, look, if you've been paying attention to what's going on in the asset management industry, broadly speaking, consolidation has been underway for some time, and it's driven primarily by large institutional investors who are making it clear that rather than dealing with dozens of specialists in certain categories, they'd much prefer to deal with a handful, if you will, a few large service providers who offer them a broad portfolio of investment options. We do some things that New York Life historically has not done. They've not been particularly prominent in venture capital, for example, growth equity, smaller end of the buyout spectrum. And I think getting to know us and understanding our strengths in that area was attractive to them. So.
What kind of opportunities do you see right now within this market? Like, I could see insurers being interested, for example, when rates were really low, right? Because you got to find some way to make return.
Sure.
But now that rates are higher,
right,
is the competition that much more fierce for you?
Well, yeah, it is. But if you think about, the industry long term, if you will, let's look back over 30 years. There have been cycles before. There have been times when the industry has contracted and then broadened again. We had the nuclear winter in venture capital in the late 1990s, early 2000s. So there's some dimensions of what's going on now that are not, all that unusual, if you will. We've weathered these kinds of things before. Is it likely that there will be some shrinkage in the business in terms of number of actors, if you will, because of the difficulty of raising private capital at this point? Probably. But will the industry survive? Will it continue to prosper? Absolutely, because it's driven by technological innovation, essentially. Yeah.
So that brings me to a point that I think about a lot in terms of different areas of the market, and that's the structural shift, but still a cyclical market. So we've seen ups and downs before. That's a cyclicality part of it. But what are the structural shifts within your industry that you're noticing?
Structural shifts that I'm noticing.
Or even trends within like investment opportunities?
Well, essentially, think about it this way. I mean, the venture capital industry in particular thrives on waves of innovation. I mean, we had cloud, we had SaaS, we had mobile. Now we've got AI, something that clearly is going to impact all industries, going to be transformative in some cases. We are certainly seeing interesting developments, if you will, in that area. We started paying attention to AI a decade ago. Across the stack, infrastructure, middleware, applications. You're only now beginning to see, new applications, if you will, emerging. But we're in the very early innings of that. That's likely to be, sort of a multi-year investment curves, if you will, with respect to what's going to happen there. So obviously we're paying close attention to it.
I understand, though. I mean, and Fairview, I mean, you guys have always had a certain degree of patience on these things. But is there a sense of urgency with regards to the AI question? Because there's so much money sloshing around right now, and everybody wants to be first. Everybody wants to make sure that they're in on the ground floor. So does waiting, at least for a wave like this, does that hurt you at all, or are you not concerned?
Our view of it always is that patience and discipline will ultimately win out. And that's our posture with respect to this. As I said, at the time that we began paying attention to it, I don't know that it was on very many people's radar. And obviously, we've invested in some firms that are specialists, some that are focused more broadly. But there will be years of investment opportunities coming off of this particular.
Is there something, though, that catches your eye right now, even if you're not actually invested in it, but maybe at least intrigues you?
Nothing that I could speak about.
Nothing that you could speak about.
Sure?
Only when the camera's off? I mean, yeah, it's just us three here. I mean,
The other and this is sort of pairing technology with my world. I cover energy and the energy transition and sort of greening. That also has a VC component because there's a lot of small startups that are like, look at this cool thing that I can do with carbon, et cetera.
Right.
Are you into that area at all? Do you see opportunities there, or is it just too much capital chasing the same kind of thing?
Well, certainly climate VC, energy VC, or areas that are receiving some attention, if you will, at this point in time. We have not made definitive commitments to energy VC or to climate VC. Having said that, though, in some of the generalist funds in which we participate, we do see one-off climate and or energy focused deals. Battery is a big topic right now, obviously for lots of reasons. So yeah, that would be how I'd respond to that.
All right, Larry, this was great. You've been doing this a long time, 30 years.
Yeah.
What are you doing next? You're not going to continue doing this forever, are you?
Well, there's an interesting way you put it. And one of the things that's really exciting for me right now, quite frankly, is observing this next generation of firm leaders moving into position and continuing to grow and build Fairview. For my fellow co-founder Joanne and I, nothing could be more gratifying. And this development with New York Life aligns them in such a way with where the industry is going that we think will be very healthy for Fairview and certainly offers a bright future for all of them.
All right, Larry, that's a great way to end it. Larry Morris, the co-founder of Fairview Capital. Alex?
All right, coming up, we got chip makers feeling the burn today on the heels of NVIDIA's results and concerns of a slowdown in AI growth. There's more on that in the stock of the hour. That's coming up next. This is The Close on Bloomberg.
multi-trillion-dollar industry. There's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time. Hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
NVIDIA earnings did not give that big pop that the overall market was hoping for. It's dragging down other AI stocks. Although I should point out, the semis did wind up hitting a record intraday. NVIDIA also hit a record. But you got AMD, Supermicro, Computer, Broadcom. They're on the back foot. PC maker Dell seems to be a one bright spot still. It is the focus of today's Stocks of the Hour. Joining us now for more is Bloomberg Technology co-host Caroline Hyde. So we had optimism in the beginning of the day, right, for like a moment that these stocks would start to perform with NVIDIA. And then what happened?
Well, NVIDIA's still higher, and it's still adding more than an entire market cap of Intel on the day by the fact that it's up about 9%. So yes, the enthusiasm there. Maybe competition is actually there still. The AMDs of this world, the Intels of this world, are still not managing to really encroach on just the leadership that NVIDIA seems to have with its incredibly high specification architecture, chip architecture, and chips moreover. And I think we did see boats rise over in Asia, for example. TSMC, big provider, big builder of the chips that NVIDIA is making. So too is SK Hynix, for example, producing what is needed within some of these incredibly powerful productions that we see. So NVIDIA, as you'll see, up more than 100% in the last 12 months, this year alone. In the last 12 months, it's up 200%. Why? Because its revenue is up 200% over the last 12 months. And it's seeing extraordinary growth continuing. They still speak of the way in which AI is going to percolate every area of our life.
Well, let's talk about that, other areas of our life, and hopefully we can find other stocks to invest in other than NVIDIA, Microsoft, and Alphabet on the AI front. You actually had a chance to catch up with John Stankey, over the CEO of AT&T.
Yeah.
He seems to think this is going to be a benefit, AI is going to be a benefit for AT&T. Explain that to me.
If he can get the spectrum. So already we've seen utilities pop because of the energy demand. Well, now will we see telecoms pop? Because he's saying at the moment they've seen a 30% increase in wireless demand because we're all using ChatGPT, we're all using Perplexity, we're all using AI functionality on our phones. For that, you need wireless. For that, you need more spectrum. Here's what he had to say.
Well, wireless demand's up 30% a year, and it's not slowing down. And I think as you start to look at where we are with what's occurring from a usage perspective, you start getting workloads that come out of AI, it's going to continue to fuel that. And really, it's one of the key things that this country needs to deal with is if you're going to continue to see usage go up 30, 35% a year, you got to build bigger highways to take that. And that all comes on the foundation of spectrum.
The key for John now is how does he get us to realize we've got to pay for it?
Well, that's the thing. It's like, so we're going to be using a lot more data. We're going to use a lot more electricity and power. Like where's this money coming from?
Where are the resources
It's going to come from us?
Yes. I mean, particularly when it comes to utilities, they're regulated. So, like, if they want to pay more, it's going to go on to our rebate. So, how's his messaging on that in terms of paying more?
Well, fascinating from the regulatory perspective, because we are seeing, once again, the FCC putting in documentation, wanting to see oversight of broadband, ultimately deeming it some sort of a utility. Thus far, we have no federal regulation for broadband, for wireless. But his point to policymakers is allow us to access more spectrum. They have to pay for it. and they're going to be investing billions of dollars. And they continue to do that to try and open up their wireless and with the hardware and the software that goes into it, with a $14 billion relationship with Ericsson. But well, I think perhaps we're all going to have to realize that our own contracts are going to go up a little.
Yes, absolutely. I feel like everything's going to go up. All right, Caroline, thanks a lot. Caroline Hyde, co-host of Bloomberg Technology. Really appreciate you sticking around for us there. Quick update on the market. Volume's kind of picking up at this moment. We are still seeing, though, a decline in the equity market. The S&P and the NASDAQ appear to are off the lows of this session, but it's not a great day. Not the day I would have expected after yesterday's numbers.
Yeah, not a great day at all here. We were looking for that upside catalyst, and when you look at the overall complexion of the downdraft here, not only, of course, are those tech stocks moving lower, but then you had, again, all those sort of cyclicals and the sort of broader stocks that had been doing well, at least prior to this week, and I don't know, there's just no juice there. So what's left?
Yeah.
Fed speak?
Oh, yeah. I don't know. Maybe it's spring break until Jobs Day, June 7th. Wouldn't that be fun? All right, we're going to count you down to the closing bells. Kara Murphy, CIO over at Kestra Investment Management, will join us next. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. The top names in global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
So we're just looking now to the markets on closed imbalance. NYSE is 500 million to the buy side, S&P 500 large buy 2.2 billion to the buy side, and NASDAQ at 1.6 billion to the buy side.
This is the countdown to the close. Romaine Bostic alongside Alex Steele with about 10 minutes until we get to those closing bells on a day that was, I think, supposed to be a little bit more positive, at least based on what we saw last night out of NVIDIA. But other than NVIDIA and a couple other companies, that's pretty much it.
Yeah, I mean, the stocks did make a record. The semi-index did hit a record earlier, but then now we're pretty much trading flat. S&P around the lows of the session. The NASDAQ 100 down 0.3% there. You also have the Russell getting hit really hard. It was pretty ugly. And then forget about the Dow, and we'll talk about this the next hour too, but Boeing really dragging on that index as well. So it was much more relatively broad-based. You could also make an argument, though, let's just take a break. Like, we got through NVIDIA, nothing bad happened. Let's take a break in the market.
Yeah, and of course, some of the downdraft you're seeing is because people look past NVIDIA and they looked ahead, of course, to that economic data we got this morning, which suggested that inflationary pressures are still real. But we had a chance to catch up with Ed Yardeni, and we asked him what he thought right now about the strength of the U.S. economy. Here's what he had to say.
All in all, I think we're looking at an economy that remains remarkably resilient. And while everybody's coming to conclude that maybe we're going to have higher for longer interest rates because that's what Fed officials are signaling, I view it as normal for longer. We're at normal interest rates. Economy's done fine with these level of interest rates, as has the stock market.
And that was Ed Yardeni over at Yardeni Research, helping us kick you off to the close just about an hour ago. And here to help take us to those closing bells is Kara Murphy, CIO over at Kestra Investment Management. And Kara, I do want to ask you here about kind of the overall disappointment when it comes to NVIDIA being a market catalyst. There are a lot of people looking at the calendar. They're saying earnings season's over. A lot of the big economic data, we got to wait a few more weeks for that. The Fed has made it clear it's not going to do anything anytime soon here. So where does that leave the market in terms of an upside catalyst that could propel this market to maybe another record high?
Yeah, and I think you can add to your list high valuations, right? So the early part of this bull market has been driven by improving valuations. So if you look at all that long list of things, what you need at this point in the cycle is to have earnings really take over. And the good news there is that I would agree with Ed Yardeni's comments in that the economy has actually been much stronger than forecast. So if we look at GDP expectations for this year, they've essentially doubled. And so there's a fair amount of economic momentum that is starting to flow through to company balance sheets and earnings. So over the next 2 quarters, if companies can continue to hit and possibly exceed those expectations for the second half of the year, I think that's where you start to get some more of that continued momentum in the market.
You've seen all the big gains in equity markets so far this year. We're coming up right now, end of May. So the second half of the year isn't far away, Kara. Have you made any sort of material adjustments to your allocations? Where are you overweight right now? Where are you underweight? And what type of changes have you made?
So in general, we're overweight equities relative to fixed income on a lot of that thesis that economic growth is continuing to be better than what was expected. We did earlier this year move out of some mega caps into some lower cap names. We think mid cap in particular is a really interesting area to fish. You can get out of some of that higher valuation. You can traffic in an area that's been sort of overlooked by a lot of institutional investors. And then within equities, we're taking a bit of a barbell approach. So overweighting things like technology, which have a tremendous amount of momentum. We saw with NVIDIA today, really strong continued profit margins and earnings expectations going forward are looking better. But then the other end of the spectrum, you have things like energy and infrastructure, which again have been a little bit forgotten or quite cheap relative to valuations and have some good secular stories.
You're speaking my language. The secular stories, but they're also cyclical, so then you have the opportunities. You mentioned mid caps. What about small caps? I feel like the Russell can't make up its mind about how it wants to go this year.
You're absolutely right. And so I think as we look at these dispersions in terms of valuation, the further down cap you go, the cheaper you get. But it also gets a little bit more difficult or tricky to sort of pick names. So we do like small cap, but the further down cap you go, because you get, you have to be more selective in the stocks that you choose, you need to lean into quality a lot. And that quality is going to help drive you towards companies that have more sustainable earnings, better balance sheets. And I think if you go down into that area, you can find some really interesting names. You just have to be more careful about it.
What you mentioned that you still prefer equities versus, say, fixed income, right? That you're overweight. but yet fixed income still yields quite a juicy bit. I mean, the 2-year is almost at 5% again. I feel like the last couple weeks have been kind of a stealth move higher within yields. Do you need to barbell some kind of fixed income on that, Kara, and where would you do that on the curve?
Yeah, and just because we're underweight fixed income doesn't mean we don't also love bonds. We think there are some really good opportunities. As you mentioned, when we look almost anywhere in fixed income, you're finding yields that are far higher than what we've seen on average over the last 10 years. So we particularly like credit. So again, leaning into those companies that are higher quality, that don't rely on a huge amount of credit, that can deal with these higher rates, and avoiding things like high yield, where you have rock bottom low spreads and high interest rates. So you start to call into question the credit quality there. But we think there's still some plenty interesting areas.
So is that tied, though, is that thesis, is that tied then to your economic theory, your economic sort of outlook as well?
Absolutely. So there we think, so there's a bit of a normalization of the yield curve that has to happen. And often you can manage that a little bit in terms of duration. So if we expect to start to see somewhat of a normalization of the curve, and now we think that's going to take a while, but we want to be in the belly of the curve where you can get a lot of those gains as the curve starts to normalize. You stay in the higher quality areas. And then, of course, you have a nicely diversified portfolio.
And Kara, are clients, I mean, are they asking you for any sort of material changes right now? I mean, there's been so much talk about market psychology, and you can take the comment from Ed Yardeni that we played before this, the idea that you do have an economy, at least is sound. I mean, there may be some disagreements along the edges here, but it is sound. But people have different perceptions of that right now, and that has to be shaping what investors are doing, and more importantly, what they're asking you to do.
So I think the most interesting shift over the last couple of months has been this increasing focus on politics. And this is not unusual, right? Heading into an election year, we start to see people focus more and more on the election. There tends to be a lot more uncertainty, a lot more anxiety. And so we've seen, even just over the last month or two, more and more individuals starting to ask us about our outlook for the election and the impact on the markets. And the good news there is that we don't think the outcome of the election has a big impact on the markets. And in general, whoever gets elected actually doesn't have that much impact over the long term on a broadly diversified basket of stocks. And if anything, you don't want to sit out the market during the election because the market tends to start moving up before the election actually happens.
All right, Kara, we're going to have to leave it there. Love to talk to you always. Kara Murphy, CIO over at Kestra Investment Management, helping us count down to the close. Alex, with just about 2.5 minutes to go here. Stocks still remain on the back foot with the S&P down about 0.8%, but the real decliners today in that small cap and cyclical space, the Russell, the S&P 400s, Dow Transports, et cetera.
Yep, and you got Live Nation and Boeing really weighing heavily there on the S&P. Stuart Kaiser at Citi, did you see his note? Basically being like, spring break, man, spring break until jobs day.
That's the other thing, too. I forgot to ask her about the catalyst. I mean,
exactly.
It's Memorial Day. We're heading into the summer season.
Bye, volume.
Anyway,
see you
a lot
later.
going on, or maybe not a lot going on, but stick with us. We're about to take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast with our friends Carol Massar and Tim Stenovic as we welcome our audiences across all of our Bloomberg platforms. That includes television, radio, and our audience on YouTube, Carol.
Yes.
On a day where it looked like the equity markets were going to stage a pretty decent rally on the back of those NVIDIA earnings, but that faded pretty quickly in the day here. Broader concerns right now about inflationary pressures.
Yeah, some hotter than expected, right? Manufacturing data here in the United States, and then everybody starts to get a little bit worried. Certainly, we also got weekly jobless claims, but some concerns that maybe things are still continuing to be a little bit hotter than everybody forecasted. And so what does that mean? Maybe we don't get a rate cut anytime soon. Maybe not even this year.
Can you believe how far we've come in just a few months? I mean, at the beginning of the year, at the end of last year, we were talking 5-6 rate cuts, and now we see markets move like this on a day when, okay, people reset their rate cut expectations from maybe from November to December for one cut this year. Or maybe, Alex, none at all.
It was so thoughtful. Like, can we think about where we've come? I can't remember yesterday, so I don't know what that's about. But and Romaine and I were just talking about before too. Like, what is the next catalyst then? Like, you get Memorial Day, it's the summer. You know, volume's going to go down. You get Jobs Day on June 7th. Like, is it just going to be hang tight? See you in a couple weeks because there isn't anything else to move the market.
9 days to the blackout.
What about the
9 days to the blackout.
Yeah.
I keep counting down. I'm
June
looking
12th?
for something.
I don't know.
Oh, Oh, blackout for the Fed speak?
Yeah, she has
I see. Okay.
She has account. That's
I'm a
how
little confused.
I
Too.
make fun of her
Does
because
Carol
she has
know
a
something we
countdown.
don't?
She has
Are the
a
utilities
countdown.
cutting power?
So Carol,
Sorry.
yeah, that's all right. Carol Thanos master there, apparently predicting the end of the Earth. But nevertheless, Earth continues to rotate. Although stocks not necessarily along for the ride, at least not for this particular day. Let's start with the S&P 500, a drop of about 0.7% or 39 points here on the day. You had a similar move lower on the NASDAQ. The NASDAQ composite down about 0.4%. The NASDAQ 100 down about 0.4% as well. Again, the ballast that we got from NVIDIA just not enough to really overcome the huge drag that we got elsewhere, particularly in the cyclical space. You saw that in the Dow Jones Industrial Average, lower by more than 600 points or 1.5% today. You saw that in Dow
NVIDIA closes up 9.3%, adding $218 billion in market value.
Down 33 points or about 1.6%.
Yeah, the equity tone very clear on this Thursday, folks. S&P 500, most names in the index losing ground today. 449 names to the downside. Tim, 54 to the upside. So definitely a risk-off trade here.
Still getting earnings. Watching shares of Intuit, the company raising its fiscal year guidance. Third quarter net revenue coming in above estimates at $6.74 billion. Estimates were for $6.64 billion. Third quarter adjusted EPS coming in at $9.88, beating estimates of $9.38. Shares moving lower, though, in the after hours, down by 2.3%.
Also looking at Ross Stores here. So first quarter earnings coming in at $1.46 a share. That looks to have beat estimates. That was about 1.35. So we're just waiting for some more numbers to come by in here. But Ross Stores looks on an earnings level to have beat that stock just starting to trade in after hours. What else I got? Sales were up by about 8%, beating estimates. And you got merchandise inventories were up by about 10%. So relatively strong quarter, it looks like.
Yeah, and looks like inventories, while they are elevated, maybe that's sort of the setup for the season. Margins were up, as was store count. And it raises a lot of questions here about the complexion of the retail space right now, that sort of dichotomy between what's going on in the luxury space and what's going on the more affordable space at locations like Ross.
Exactly. Some commentary and context here coming from our team. Earnings per share for the second quarter projected to be in the range of $1.43 to $1.49, up from reported earnings per share of $1.32 for the prior year period ended July 29, 2023. The CEO weighing in, though we had hoped to do better, first quarter sales were in line with guidance despite macroeconomic headwinds that continue to pressure our customers' discretionary spending, which is something, Romain, you were just talking about.
I do want to get back to shares of Intuit because they are moving lower in the after hours, despite the fact that the company raised the fiscal year guidance. It does see fiscal year adjusted earnings per share of $16.79 to $16.79 to $16.84. That came in above estimates of $16.42. Sees fourth quarter revenue about 13 to 14%. It also sees small business self-employment revenue up about 18%, but shares now down about 3.3%.
Yeah, it's interesting as you bring that up. I was just looking at Workday, the big application software maker, also reporting, and it was kind of a similar complexion as Intuit in that the numbers themselves weren't all that bad, Tim, but the shares are moving lower here in after hours trading. So it seems like this is an issue too of not just about meeting expectations. You really got to beat, and you really got to beat big in this environment to get the extra pop in that stock, given how much valuations have risen.
Yeah, it looks also though that the small business and self-employed group though did really well. Up 18%. Their consumer group was up 9%. But to your point, like you really got to deliver if you're going to do really well on that. I also want to point out here, guys, that Boeing shares fell about 7.6% today, the biggest drop in about 4 months. So it's not just earnings that are coming through, it's also some individual company stories that are really weighing on that after their cash burn is going to be intense.
Yeah, I mean, the Boeing story is a big one, right? And that's exactly what weighed on the Dow Jones Industrial Average. So yeah, we definitely saw that play out in a big way. Quick check on gainers, guys. NVIDIA. Surprise! Top in the S&P 500, the NASDAQ 100, pretty much holding on to most of the day's gains. At its highs up almost 12%, finishing though with a 9.3% gain. We know the story, topping $1,000 a share, up I think 109, 111%. The bullish sales forecast showing that AI computing
Unofficially, the Dow registers the biggest one-day percentage decline since March 22nd, 2023.
Predicted by analysts. 10-for-1 stock split, they've 150% boost in its dividend. Yeah. Oh, did you?
That's pretty good.
Yeah. I mean,
so what happens? Does that mean that
you got to
the share price goes up?
Well, you got to sell the shares before June 7th, Romaine, or else the value of them is going to go to about $100.
Oh, okay,
I'm just kidding.
I guess
it's a joke.
First I got to buy the shares.
It's a joke. I'm making a joke.
It's a joke.
We got the joke, Tim.
It's a joke.
Do you want the other gainers?
Yeah, I want the other gainers.
All right, synopsis. I'm going to
Is there a lawyer standing behind you or something, Tim? It was a good joke, and you stepped on it yourself.
It's a joke. It's a joke. It's a joke.
You know, we're surrounded by glass. You never know who's peering over you, Romaine. That sometimes happens. All right, synopsis. Top gainer in the NASDAQ 100, folks. That was up 2.3%. Analyst positive. It's a chip design company, in case you didn't know. Reported second quarter results last night. Beat expectations. Raised its full year forecast. And you had a bunch of analysts, Morgan Stanley, Piper, raising their price target. So that one was up 2.3%. And Elf Beauty, I know that we talked about it a lot, I feel like, on the Bloomberg or in the Bloomberg universe today. This was up almost 19% in today's session, soaring. The company reported fourth quarter adjusted EPS per share and net sales that came ahead of consensus estimates. It just did well. And basically, even though that there were some numbers, I think, that didn't meet expectations, analysts are generally positive, thinking that maybe they're a little conservative in their guidance.
Okay, you got the gainers, Carol. Yeah. I'm doing the decliners. I do want to start with Boeing. Alex, Romaine, you guys hit on it a little bit. Shares did fall by 7.6% today. The company did scrap a plan to generate cash again this year and said it will suffer another significant outflow. In this current quarter, it's fighting to get production back in order and ramp up deliveries in the wake of all the issues that the 737 MAX has had, not just this year, but of course in recent years. Also, we're checking in on shares of Live Nation falling 7.8% today. The U.S. Justice Department and close to 30 states suing the company, alleging a, quote, entrenched illegal monopoly over the live events industry and seeking to force the company to sell off Ticketmaster, which it bought a few years ago. Antitrust enforcers claim that Live Nation and Ticketmaster have engaged in a variety of anti-competitive practices, including locking venues into long-term exclusive contracts and retaliating against rivals and venues that seek to use alternatives. Shares down by 7.8%. You know what's funny?
No.
This is not, I mean, look, am I speaking as a consumer or as
it's choose your own adventure here.
Okay, choose your own adventure. Yeah. How do you guys feel about buying tickets for a concert that you want to see? Is it a good experience?
No.
It's a pretty tough experience, right, Alex?
It's an expensive experience.
It's a very expensive experience.
And the whole idea of splitting the fees, where you go through the whole process and you think, oh, this is a $100 ticket, and then when the fees get added, you realize it's like $150, and you're like,
yeah, it's pretty
I
out
don't
of
really
control.
like this band that much.
But look, it's supply and demand, right? I mean, people will pay, especially for big acts. I mean, Billy Joel,
but
Taylor
isn't
Swift.
the bigger issue? It's less just about the cost to you and me, but it's also about, at least based on what the DOJ is alleging, let's just make that clear, that there's a sort of anti-competitive nature in the structure of the business itself by representing artists, by owning the venues, by selling the tickets, et cetera, et cetera. They're basically have this from top to bottom, the entire supply chain, if you will.
So it's a good question to consider. If the Justice Department is victorious here, will the experience actually get better for consumers?
Right, and that's sort of the whole point of antitrust stuff. But then again, you never know. And also, Bloomberg Intelligence was saying that this could take a very long time to even suss out. So in a spinoff might not even be valuable, you might not have a forced asset sale. So this is a slow burn here. This is not going to be a quick flame out.
All right, off to Friday we go. That's a wrap.
Get those Billy Joel tickets.
I mean, we have another hour of the show, Carol. I don't know where you're going.
Well, so do we. I'm just saying, we're done. We're done.
This moment is done.
For good?
I'm not done. I'm staying.
There she goes. There she goes. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Bye, Alex. Romaine, you stay there. We'll stay there.
What?
Beyond the Bell. Oh, she stays there.
She's staying today.
Oh, you are staying there.
Alex
All right.
is staying.
Beyond the
Just
Bell.
today.
We'll see you on Friday.
Just today, guys. All right, stick with us here. A lot more coverage coming up here on Bloomberg Television. We're keeping an eye right now on Ether. We're awaiting word here from the SEC on whether they are going to approve those new ETFs. Stick with us. We'll be back after the break right here on Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I had a big insight one day that women don't invest as much as men do. That, you know, we all think it's because they're risk averse, but maybe it was because nobody built anything for them.
Oh, welcome back. This is me. Okay, I never do this hour. This is The Close on Bloomberg. I'm Alex Steele.
You are Alex Steele. I thought you were going to say you're Scarlet Food. You're
It's
a
very
little
possible I could
confused
say
because you're
that.
normally not here, but you are now in overtime, Alex Steele. This is where all the good stuff happens. I'm Romaine Bostic. This is where we take a look back at where the markets closed out the day here. And we talk about where we opened here, a market that looked like it was going to rally hard on the back of those NVIDIA earnings, but you see the numbers on the screen there. A big pullback by midday and by the close, down 0.7% on the S&P 500. Philadelphia Semiconductor Index that was trading at a record high at one point in the day, finishing the day in the red. Similar story for the NASDAQ 100 and the NASDAQ Composite as well. And of course, right now we are keeping an eye on the crypto space as well. You did see continuous activity there, but that was to the downside, both, Alex, on Bitcoin and on Ether.
So 2 interesting movers today, and they were both the biggest decliners within the S&P. Also, Boeing really helped to tank the Dow as well. Live Nation had the worst drop since February. At one point, the Department of Justice in almost 30 states suing the company, alleging an entrenched illegal monopoly over the live events industry. They're trying to get the company to sell off Ticketmaster. And Boeing, worst drop in 4 months, shares down over 7%, scrapping a plan to generate cash yet again this year, saying it's going to suffer another significant outflow in the current quarter as the playmaker is fighting like multiple fronts. Feels like an understatement. A lot of fronts. And our top story for the hour, waiting for the SEC. We are expecting a ruling from regulators any second now about whether or not they will approve a spot Ether ETF. Crypto markets have grown more optimistic since spot Bitcoin ETFs were approved back in January. But my question here for where does the extra money come from for that? Like, say we get the Ether ETFs.
Yeah.
Do you move out of the Bitcoin ETFs for that, or is this draw in institutional investors or people like you and me in a different way?
It's a good question. I think the answer to that, and I'm just speculating here, I do think it's probably trying to get new investors, new retail and institutional investors who don't have that exposure. Maybe this gives them an opportunity to get it. We do want to go back to some of those earnings that we were telling you about in our Beyond the Bell segment, and that includes Ross Stores. The shares rallying here in after hours, trading up by about 6%. EPS in the most recent quarter coming in above estimates. Revenue in the most recent quarter also coming in pretty much around what analysts had expected. Mary Ross Gilbert joining us right now, Bloomberg Intelligence Senior Equity Research Analyst. And Mary, we spoke to you last night ahead of this earnings report and got your take on what you expected. Was it everything you dreamed of and more?
Well, I wouldn't say it was everything I dreamed of, but I thought they might beat on the sales line, but they actually did. They didn't. They came in lighter than consensus. Their comp sales rose 3%. Consensus was looking for a little more than that, like 3.4%. But they did beat on the earnings line, and we sort of had an indication from them because they're carrying more of those wonderful brands that consumers want. I sort of mentioned yesterday about Michael Kors and Tumi being in there, and that they would offer them at sharper price points, meaning they would cut those prices a little bit lower so that that consumer would be enticed to buy. And so we thought maybe the margin spot would be hit, but actually they beat on the operating margin side, 12.2% above estimates. And then also on the EPS side, they came in above estimates and also above their guidance. They were looking for 129 to 134 and came in at 146. And then they raised their EPS guidance for the year, maintained their comp sales up 2.3% for both the year and for the second quarter. So, and also if you look at the second quarter guidance, that's also above consensus on the
Taking a look at the
earnings
market wrap
line.
for today's
So we'll learn
session,
more on
stocks
the
and
call
bonds
that'll be
fell as
coming up
data showing
shortly.
US business activity
Mary Ross,
accelerating
over
amid
at
an
Bloomberg
increase in
Intelligence. Nice
inflation-fueled
breakdown here of the
speculation
earnings that we
that the
got
Federal
just
Reserve will
now
remain on
out of
hold.
Ross stores. And we
The
should point
S&P
out this week
500
we've been
fell below
getting earnings out of other
5,300, with
retailers,
all mega
other
caps
apparel
falling
makers, and that's
except
going to continue
Nvidia.
into next week,
The
including
giant
for
chip
names
maker
like
surged more
department
than
stores,
9% on a
like
positive
Kohl's as
outlook,
well. David
surpassing the
Schwartz, senior
historic
equity
$1,000
analyst over
mark.
at Morningstar,
The
joining
Dow
us right
Jones
now
Industrial
to talk a
Average
little bit
fell
more
1.5%,
about this. And I want to start off,
led
before
by
we
a
get to
drop
the
in
department
Boeing,
stores next week
which
here,
said
David, I'm
it
wondering
will
if you could
continue
maybe
to
compare
burn
and
cash this
contrast
quarter and
what we're
throughout the
seeing
year.
in the more
Treasury
luxury
yields
end
rose, led by
of the
shorter
retail space,
maturities.
including like with
Swaps
Ralph
now
Lauren
fully price in
reporting
a full
earnings this
quarter
morning.
point
And
rate
then what
cut
we're
in
hearing from, I
December
guess, more of the
compared to
middle and
November a
lower
day ago.
end
This month
brands
saw the
and
fastest
companies
growth in
like a Ross
service
stores. Are we
provider
seeing
activity
a
in a
significant
year, while
divergence in the
manufacturing
performance of these
output
names?
increased at a faster rate. Such
Yes, we have
resilience makes
seen
it
that for some
difficult for
time.
inflation
For
to
the
cool,
most part,
which
higher
explains
income
why the Fed
consumers
intends
have
to keep
continued
interest
to
rates
spend.
higher for longer.
Certainly in my
Treasury
area, which is
two-year yield
primarily
rose 6
apparel,
basis points to
we have seen stronger results
4.93%.
from
The
higher
dollar
end
edged higher.
retailers. For
Bitcoin
example,
fell more
if
than
you look at Urban
4%.
Outfitters,
Oil and gold
the
have
Urban
retreated.
Outfitters chain itself has been struggling, but Anthropologie and Free People have been doing much better, and their customers tend to be wealthier than for Urban Outfitters. Now, we have seen, though, some weakness in luxury, too. Nordstrom, for example, has not been doing well at all. In fact, Nordstrom Rack was a little bit better than the Nordstrom full-line stores last quarter. If you look at Macy's, certainly Bloomingdale's has been outperforming Macy's. Also, Blue Mercury, which is Macy's.
Oh, looks like we may have lost connection there. David, are you still with us? Nope, we're going to try and get him back for you. But the idea that within it, you have the high end still doing well versus the low end. And interesting that he mentioned Nordstrom's, because I just bought a boatload of clothes from Nordstrom Rack, which should just show that that's probably a little bit of an issue if you want to own the stock. David, so as an investor, how do you manage that?
Well, I think you need to look for areas that are doing better. If you look at Macy's, for example, Bloomingdale's is outperforming Macy's. So if you look at Bloomingdale's performance, that could be a reason to want to own Macy's, even though the Macy's full-line stores are struggling with the middle-income consumers cutting back on spending. If you look at some retailers like Ralph Lauren does cater to higher income consumers than a lot of other apparel brands. For example, PVH, which reported a difficult quarter last quarter, tends to be more middle income. So you can pick and choose and look for ones that maybe are catering to more higher income consumers.
So does that leave the Gap, for example, next week in no man's land?
Gap certainly has been doing better of late. I don't know if I'd say it's in no man's land. Old Navy did have a better quarter last quarter, and it's really coming back from some very difficult results. Yeah. A lot of these companies have internal problems, and they're in different stages of restructuring and turnaround. So I don't know if you can really say that it's just consumer spending that's going to drive their stock prices or their performance. Yeah. So, for Gap, I do think that there are reasons to actually want to own the stock.
Yeah, okay, David, I'm curious, though, too. I mean, you just said something there kind of about this idea of some of these companies going through these transitions and restructurings. We know Gap has gone through a few iterations. It looks like the current leadership there might have a better handle on things than the previous leadership. But I want to talk about a couple of other companies that are looking to just change their ownership structure overall. Nordstrom potentially going private if the Nordstrom brothers get their way. And then whatever the heck is going on with this Capri Tapestry deal here. Do you think we are going to see that type of consolidation or take private actually work? And if so, do you think we'll see more people follow on?
Yeah, I definitely think so. And Macy's, too, is facing a potential buyout from activist investors. The Nordstrom family has talked about taking Nordstrom private for years, and it really makes a lot of sense because realistically, department stores like Nordstrom and Macy's
really just don't have a great market position. And it's very difficult as public companies for them to continue to report strong earnings that investors want. So it makes a lot of sense, actually, for a company like Nordstrom to go private. Now, of course, it does depend on the valuation. I think that Nordstrom is actually quite undervalued. My fair value estimate on it is $40. So it could be that the Nordstrom brothers are kind of taking it private at a low valuation here. And then for Tapestry and Capri, I do think that it will eventually happen. I think that the companies will win their case against the FTC because there have been very few antitrust cases in the apparel and accessory space.
Interesting, yeah, and it's funny too. I mean, you bring up the antitrust side of it. We were speaking with Andrew Foreman a little bit earlier over at the DOJ on that Live Nation lawsuit, and it gets to the broader question here as to why there would even be a target on the back of any sort of apparel maker right now, given A, how much they're struggling, and B, the fact is, I don't know. I mean, if we lose one of those companies or they get absorbed into another, is that somehow, does choice go down for us?
Well, I think you can make the case that it makes sense because Capri and Tapestry, specifically Coach and Michael Kors, are definitely in head-to-head competition. I think the FTC does want to prevent companies that are in direct competition from merging. I don't think in this case that the FTC will win because the handbag market itself is quite fractured. There are many different brands. However, Coach and Michael Kors definitely have a strong position in the middle market of handbag brands. Also, Kate Spade, which is owned by Tapestry. It is actually going to generate, pretty strong market share when the two companies merge in that middle area of handbags.
Hey, David, really appreciate it. Thank you so much, David Schwartz, joining us from Morningstar. We really appreciate your time today. All right, coming up, we got the top three, where we focus in on the top three movers and shakers in the center of the day's biggest stories. That's next. This is The Close on Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The names that move markets are on Bloomberg.
It is President Biden's top priority to bring down the cost of living.
The United States' ability to spend without constraint is not unlimited.
We're in a very unusual time, and so the adjustments are taking place, and it's running through the economy.
We do need more innovation, more investment, single market and capital market union, and a relevant trade policy.
Bloomberg. Context changes everything. South Africa's most important election since the end of apartheid focuses on infrastructure challenges, economic growth, and political fragmentation. Bloomberg's Jennifer Zabasaja reports live from key battlegrounds in Johannesburg, Cape Town, and Durban.
We think that South Africa is an exciting part of the world.
South Africa is a thriving and vibrant democracy.
There's a lot of expectation for the election.
Coverage begins May 27th on Bloomberg Television. Context changes everything.
Time And now for the top three. Every day at this time, we do a deep dive into the people at the center of today's top stories. And first up, James Gorman, the Morgan Stanley CEO, announcing he will be stepping down as chairman of the bank at the end of the year, capping nearly two-decade run. CEO Ted Pick is eventually expected to take over. I mean, and this wasn't necessarily a surprise, just a timing thing.
Yeah, just a timing thing. And I guess, I mean, look, it's a year-long runway, effectively, that he had to kind of oversee and look over Ted Pick's shoulder. And I'm sure Ted Pick is like, stop looking over my shoulder. And Gorman's moving on.
And Gorman's like, okay, great. This is full confidence in you now. I can kind of walk away and do whatever I'm going to do after this job. All right, we're also watching Elon Musk because who doesn't all the time? He spoke earlier at Viva Tech.
Stepping down?
No, he's stepping to all the things. He was at Viva Tech conference in Paris, where he talked at Viva conference in Paris and warned about the dangers of AI, saying it's dangerous to train it to lie. He also likened it to raising a kid, that like it doesn't know any better. You have to teach it what to do, what not to do, etc. But you know, parents are different.
Well, that's what I was going to say. I remember listening to that analogy, and I was thinking, yeah, there are a lot of like rotten kids who grew up to be rotten adults. So I hope that with AI, they find their parenting style.
So just keep in mind, any time from now, we are expecting possible comments from RBNZ Governor Orr. So Orr did speak quite a lot yesterday following the RBNZ rate decision. But again, just possible comments coming from Orr this evening again as well.
Enough said on that. And of course, he had a lot of other things to say and a lot of other things that he didn't want to say. But we pay attention to him because he is still, of course, the richest man in the world. Meanwhile, somebody who looked like he was climbing up to be one of the richest people in the world, now a big fall from grace. We're talking about Sam Bankman-Fried. Now, remember, he was in that detention center out here in Brooklyn, New York. We just learned today he was just transferred to a facility in Oklahoma where he'll be for the next 4 to 6 weeks. But the backdrop of all this, that palatial penthouse that he had out in the Bahamas, it's now for sale. You, Alex Seal, can be the owner of that beautiful penthouse for just a cool $30 million, or at least that's the asking price. I mean, I think it might be negotiable.
Easy,
yeah.
$30 million, no problem. But apparently that won't help him any, right, or something? Because didn't he like overpay a lot for that? Didn't he pay at a really high time in the market for it?
Yeah, that's what they're saying. I mean, basically, yeah, it's valued at $30 million, but probably not that. But and this is like, and maybe there's some historical value to it because it wasn't like he just lived there. I mean, they were running the whole operation out of here. So I don't know if walls can talk. I don't know.
I mean, is that where you want to buy it?
Well, you know what I would do? I would buy it and I would immediately like start, just take a sledgehammer to the walls
and
see if he hid his crypto wallets, behind the baseboards or something.
Although I have to say, have you seen pictures of this thing?
I have.
It's beautiful. That's a circular. I mean, that's nice. I gotta say, it's nice. If I had a cool 30 mil, no problem.
Well, it is a $30 million penthouse in the Bahamas.
Pretty.
Can't go wrong with that.
No, you really can't.
Anyway. Right, well, speaking of real estate, we are going to talk a little bit more about that here. Of course, a lot of focus on home sales, not necessarily in the Bahamas, but here in the U.S. We're going to catch up with Danielle Hale when we come back after the break, chief economist over at Realtor.com. We're going to ask her about some of the housing data that we got out earlier this day. That's coming up next, right here on The Close. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg.
All right, today the crypto community is, well, at the edge of their seats, expecting a decision from the U.S. SEC regarding Ether ETFs. The token linked to the Ethereum network has been surging this week ahead of the announcement. Bloomberg
Fed Bank Term Funding Loans $109 billion in the week ended May 22nd after $109.6 billion. And Fed Discount Window Loans $6.66 billion in the week ended May 22nd after $6.36 billion.
Yeah, absolutely. You know, it's just every day is like a roller coaster in crypto. And I'm a tourist, but when I do, hang out here, it is always wild. And so it's par for the course that it's not following normal patterns. We thought we'd get a decision at 4 p.m. That's typical, normal. Today is the deadline. There is a rumor floating around. We can't confirm it, that it will be delayed by a couple hours. Now, that theory, again, it's a theory, does make some sense because what we've heard is that even the staff was told 11th hour that these were going to be approved, and everybody inside the process thought these were going to be denied until Monday. So that's a real short time to write an approval. You've got to, really put all the research in there you've done. You probably have to have it edited like 10 times. These are lawyers, they're very careful. So it wouldn't shock me if they needed a little extra time. But that said, it could show up on the website in 5 minutes. We don't know, but it's not there yet. And we thought it would be. So we're just refreshing the website for the time being.
Eric, you're the ETF guy. You know the guts of all of this. What would be the holdup? Why would this be so difficult for the SEC?
Simply because it was a 180. It was again, what we're hearing is that everybody, including the SEC, the staff, was preparing for denial, a rejection. But over the last weekend and on Monday, they were all told, okay, we're actually going to approve it. Why? Well, again, everything we're hearing is that the politics changed. There's obviously been a couple things that have happened that, as you can see, where the Democrats just don't want to be seen as anti-crypto. It's becoming an election issue, which is rare for ETFs to be anywhere near an election, but here we are. And so I think the decision was reversed and everybody was caught flat-footed, and now they're having to scramble both inside the SEC and the exchanges and the issuers.
Yeah, a good point there, Eric, particularly on how this has become a political issue. We were just talking yesterday about, of course, those comments by Trump, basically saying if you like crypto, vote for him. I don't know if that's true or not, but it's certainly indicative here of how it has gotten onto the campaign trail. Eric Balchunas over at Bloomberg Intelligence and the co-host, of course, of our ETF IQ show. We want to continue this conversation about the potential approval or denial of those ETFs, those Ether ETF applications, with Noel Atchison, author of the Crypto is Macro newsletter, and of course also formerly worked over there at CoinDesk and a few other places. Noel, as we sort of await to find out exactly how the SEC is going to rule on this, I think Eric touched on something broader, particularly when it comes to this coming up on the campaign trail. The idea that there has been some softening in Washington to this idea of what crypto is, what it can be, and whether it can be complementary to fiat currency rather than competitive.
And the astonishing realization remained that a lot of people do really care about this. Enough Democrats care about this to vote with the Republicans on two very key legislative proposals that we've seen pass through recently. I think it sounds like the higher-ups in the White House are realizing that this could be a very big problem, something that we've been telling them for a long time. They're starting to see it now in the results.
Noel, let's say that this gets done and we do have the Ether ETF. Does that suck money away from, say, the Bitcoin spot ETFs, or is this going to bring in new institutional investors that haven't had a chance?
That's an excellent question, Alex, something that we've all been wondering. My opinion is that both. That's a very wishy-washy answer, but we have seen already ETH suddenly outperform Bitcoin, where so far this year it's been Bitcoin story. And so that does suggest there is already some rotation. ETH has underperformed. It makes sense. If you want to get that extra performance, then maybe now's the time to switch out of Bitcoin into ETH. However, the main deal of the ETFs is that it does bring in some of the more mainstream investors. Now, I do have to say, we're not going to see what we saw with the Bitcoin ETFs. There's not going to be that huge inflow for the first few months. Because the ETH ETF is just not a great product. It is not a good product because anyone who holds it forgoes more or less 4% yield. It's not going to be redistributing staking rewards. And this is a very big deal for investors that care about that. However, not all investors are going to care about that. Many mainstream investors just want the convenience, and they're going to see that 4% loss like a convenience fee. And there are also many institutions who can only hold assets that trade on regulated exchanges, so we could see some demand from them. But that said, it's still not a great product. This is a very big deal for the industry, more than it is for ETH.
I mean, for Ether, though, part of the appeal is that you can stake it, so you can get basically some earning income with it. And that's what makes that product so different from other crypto products out there. Will staking be a part of the ETF, do we know? Or is it going to, or not, because they made it too complicated to get approval?
It's not part of this round of the ETFs. Maybe one day when the SEC decides whether staking is a security and can be distributed to retail investors, but for now, no. And other ETFs that list on other exchanges and other jurisdictions, staking can be redistributed. But in the US, no, which again makes it not a great product. But you touched on something really interesting, Alex, and that is ETH is very different. It is used in staking, it is used in DeFi. ETH is an asset that was created to be used, whereas Bitcoin, yes, it has its uses, but largely it is seen as a store of value. So an ETF for Bitcoin just makes a lot more intuitive sense.
It certainly does, and it gets to the broader question, are we starting to see, I guess, more of a divergence within the crypto space? The idea that when crypto came about, all the tokens were more or less the same, obviously different sizes, and some were obviously a lot shadier than others, but the general idea was they all kind of had the same function or lack of function, if you will. It was a speculative asset, maybe a store of value. Ether has always been kind of off in its own lane, basically saying, raising its hand, saying, look, you can actually use us, you can buy things with us, you can do things with us. Are we going to see a much broader divergence in that space?
I think so, Romain. I'm so glad you brought that up, because one of the big benefits for the industry as a whole from the ruling, should we see it today, is that there will be broader awareness of ETH. We've seen this already with Bitcoin. One of the big pluses of the ETFs was the marketing machines of the very large issuers and the spread of education as to what Bitcoin is. And when you see Bitcoin, the same frame as BlackRock, that does lend a certain legitimacy. If we start to see the same for ETH, if people start to understand that this is a crypto asset, yes, but it's very different, then they start to understand the advantages of diversification, and that could trigger some demand for the ETFs, or it could also encourage many investors to start to tiptoe into the crypto space directly. That's a whole new mind step that many have been afraid to do. This could encourage them to finally do so, and those of us in industry know that once you do that, there really is no going back.
Noel, thanks so much. We really appreciate it. Thank you for staying up late for us as well. We're kind of waiting for that news to cross. Noel Atkinson, author of the Crypto is Macro Now. I'll get that. Crypto is Macro Now newsletter. Definitely check that out. To the eco data now. We'll get to that earlier in the day. We got new home sales in the U.S. declining last month. Buyers were deterred by both high prices and guess what? High mortgage rates. Bloomberg's Michael Sassow is reporting on the story. He joins us now from Atlanta. Michael, what stood out to you? Was it a demand or a supply issue that led to the decline in new home sales?
Well, what's happening, there's been a little bit of turmoil in the market. Numbers have been bouncing around lately, but generally new home sales have been on the upswing. Of course, with interest rates still around 7%, that's going to put a cap on just how high new home sales can go. So you're generally seeing them rise, but rise to sort of a certain level, and they're kind of bouncing around at 600,000, 700,000 a year rate, which is comfortable, which is good for the builders, but not kind of blowout numbers right now.
Where do we stand on inventory levels, Michael? And not just today, but also kind of what's in the pipeline here. Does the inventory situation ever start to work against them?
Well, right now, new home sales inventory is actually pretty high. It's at the highest level in 2008. That's partly a function of existing home inventory is very low. I think there's about 1.2 million existing homes on the market. That's down from 1.9 million a couple years ago. So what's happening is new home builders are actually filling the void, and that's actually good for them. That's giving some opportunity for people generally to buy something. You know, if they can't get an existing home, they can at least get a new home.
All right. Hey, Michael, thanks a lot. We really appreciate that. Michael Sassow from Bloomberg joining us on those new home sales data that we got out earlier during the day. Let's get now to Danielle Hale, chief economist at Realtor.com. Danielle, there's a couple angles for this. For new home sales, how long until rates stabilize will that bring back in demand? Ed Yardeni was talking about sort of higher forever, right? This is a new normal for rates. What's the time lag until buyers are like, all right, I guess I got to just go with it, 7%?
I think every decline that we see in mortgage rates brings some buyers back. There are fairly sizable chunks of buyers that are waiting for mortgage rates to start with a 6 or mortgage rates to start with a 5%, whereas we're up over 7% now. Well, actually, as of today, we crossed under the 7% threshold for Freddie Mac data. So every decline in mortgage rates will bring some buyers back, but I think a lot of existing homeowners are locked into mortgages that are under 6%, that's 90%, and almost 2/3 are locked in at a rate under 4%. So we've got to get much lower before we really get rid of mortgage rate lock as a phenomenon that's holding some sellers back from getting into the housing market.
The result of that was that you saw a lot of new home sale sellers sort of help with concessions, right? Like, we'll do this for you, like, come buy our house. Are we still seeing that, or do the sellers, the new home sellers, actually have more power now?
New homes are still an elevated share of what's on the market for sale. So they're up at about 28%. That's almost twice what we've seen historically normal out of the total number of homes on the market. So shoppers who are in the market are more likely to see a new home for sale today than they are or than they have been in the past. And so that is probably prompting a majority of shoppers to consider new homes, even if they wouldn't have otherwise. And so builders have some room to offer concessions, but don't necessarily have to. Even though month supply of new homes for sale is elevated, we're still seeing that they are able to sell completed homes very quickly. And so one of the reasons that we're seeing that elevated new home sales options for consumers, some of them have not yet been started. And so builders are doing a good job of sort of managing their pipeline to meet the demand, which is lower than historically normal, but still elevated relative to the existing market.
I do want to ask you about the existing market, particularly when it comes to the affordability issue. Obviously, with new homes and the relationship builders have with those homes and the buyers, you can sort of bake in those concessions. Obviously, a little bit harder to figure that out on the existing home sales side. You're basically just dealing with a seller that has to decide where they want to price it and whether they want to budge. Are we seeing them budge at all?
Yeah, we are seeing price reductions back to a level that was normal in the 2017 to 2019 period. So they're not extraordinarily elevated. They're roughly normal, which is interesting given how low supply is in the market. That really is a reflection of low demand and low supply kind of keeping prices in balance, roughly speaking, and sales at a low level. As we see mortgage rates drift lower, we may see demand start to pick up, and we may see that also unlock some selling, and so we may see more activity in the housing market.
How much of a change in mortgage rates do you think we would need to see to really provide sort of a meaningful opening up of this market? I mean, we're still, at least on the average, still around 7%. And a lot of folks out there, at least anecdotally, we know are paying upwards of 8, in some cases 9% on some properties.
Yeah, I mean, I think given that 90% of existing owners are locked in under 6%, I think we're going to need to see rates move back towards that 6% range. We just did a study with the National Association of Realtors, actually, and Realtor.com, looking at where affordability would be if we were to get to that 6% mark. And what we find is that it is going to improve affordability across the board, but at certain price points and in certain markets, we're going to see a bigger improvement in affordability. Interestingly, a lot of markets that are really unaffordable right now do benefit the most from that drop in mortgage rates. So consumers can expect some relief, but the degree of relief they're going to get will depend on where they live.
Right, the degree of relief from like $4.5 million to $4.3 million, maybe a little bit different on that end. When you talk about, say, existing home sales, I'm wondering if those prices have come down enough to finally start matching buyers and sellers, and how wide that gap really is.
So on the existing side of the market right now, we're still seeing home prices climb at the median price point. Some of that is a reflection of more sales being done in higher priced properties. On the listing side of things, which we track at Realtor.com, we see that listing prices have actually been flat. And that's because we're seeing the opposite phenomenon, that even though we're seeing more sales at the high end, we're seeing more listings and inventory sit in the lower price tiers, particularly in the South. So listing prices have actually been flat on a year-over-year basis, even though home sales prices are climbing. What that means for consumers is that you might see more options on the market, but on an actual per home basis, prices are still probably going up. So they're not getting the same relief that they might see in the new homes market, for example, where median prices are actually dropping. Again, some of that is smaller construction hitting the market, but we're not seeing a huge run up in prices that we did see over the past couple of years.
Danielle, great stuff. Really appreciate your time today. Danielle Hell, Chief Economist at Realtor.com. All right, guys, let's get a check-in on where markets closed for the day. It was not a great day. Let's just put it right out there. You look at the S&P closing down by about 0.7%. You got the NASDAQ 100 closing off by 0.4%, despite the fact that you actually had NVIDIA up for the day after hitting record highs. Boeing, the biggest drag on the S&P, also responsible for 92 points taken away from the Dow. So about a sixth of what we saw in the Dow in terms of selling, and yields moving higher, particularly on the front end after you got that very strong PMI reading earlier in the day on services and manufacturing, and inflation still sticky as well. All of that combining for higher yields. This is the close on Bloomberg.
Morning from our world headquarters in New York. I'm Manus Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Time now for our Muni Moment. So according to a new study out of Boston University, Massachusetts stands to lose almost $1 billion in annual revenue by 2030 as high taxes and housing costs push wealthy residents to move elsewhere. Joining us now is Mark Williams. He is the primary researcher on the study. Hey, Mark, thanks for joining us. Walk us through the findings, how you did the study, and what you learned.
Sure.
Well, the study started really last summer. It was a 9-month slog. We went through a lot of data looking at the U.S. Census data and also the pool of data from the IRS. That allowed us to connect the amount of people that were leaving Massachusetts with how much money they were taking with them. And our conclusion was staggering.
Well, let's talk about that conclusion here, because we talk about sort of that outflow of people here. Where are they going, Mark?
Sure. Well, it was fascinating. The myth would say most people are going south to Florida, but the reality was over half the people that left Massachusetts stayed in New England. So that really begged the question, it's not about weather, so why are they leaving?
So it's more about the money, or I guess the money that would have been taken out of their pockets, so to speak here. Are you finding that the reasons for moving ended up being justified?
Well, it was interesting. We found certain attributes that were very common in the inbound states. For example, the top inbound states, folks leaving Massachusetts, tended to go to Florida, New Hampshire, places like Maine. And the commonality was really 3 attributes. One is 100% of these states had lower income tax, 100% of these states had lower housing costs, and 100% of these states had lower healthcare costs.
So this is Muni moment, Mark, so this can't be good for Massachusetts. What are some solutions here?
Well, let's talk about the bright spot real quickly, and that is that Massachusetts still scores at the very top in regard to economic health. So from its bond rating and then also from unemployment, it's extremely high. However, there are storm clouds developing, and I think that's where Massachusetts needs to step up and not sit back on its laurels.
So what kind of shortfall is Massachusetts looking at, and how does it manage that? I mean, you can keep raising taxes, right? I mean, you get the tax windfall like you were mentioning, but that's only going to go so far.
Right. So Massachusetts itself last year actually did a millionaire's tax. So they put a 4% tax on anyone making $1 million or above. And what that has done short term is increase the amount of tax revenue. But I beg to challenge this, whether long term this is going to have a positive impact. So fortunately, the U.S. Census data is coming out in September. A lot of academics like myself are going to be parsing through those numbers quickly and sharing that, whether the short-term benefit of higher taxes actually equate to long-term cost and impact on out-migration.
All right, great stuff, Mark. Really fascinating, the work you did on this, as well as some of the past work. Mark Williams there over at Boston University. I should also point out he's the author of probably one of the best books about the global financial crisis. A lot more coming up here on The Close. We're going to set you up for some of the big market-moving events over the next 24 hours. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Wow, what a day today. We came in today, all eyes were on NVIDIA, hoping for a big pop in the market. We didn't get it. That was the big catalyst in the market one way or the other. Here's what we have our eye on over the next 24 hours. It could be potentially market moving, and that starts with that G7 meeting, which continues over there in Italy.
How do we get a seat to that for Italy? That would be nice,
I
right?
think we have to be a lot more important than where we are
probably.
now.
All right. The real question, I think, is if we're going to see a squeeze out of the frozen Russian assets that they were kind of talking about. We haven't got anything, and that's going to be, I think, the big market mover on that.
All right, a lot of people will be keeping an eye on that. We also get earnings. I thought earnings season was over, but apparently earnings season never stops, Alex. We get a few companies before the bell tomorrow.
Yep, we got Autodesk, we got Deckers, we get Dollar Tree. Dollar Tree's going to be really interesting to see how that lower-end consumer is going.
Yeah, I'm really interested in that as well. And I think Deckers could be interesting, too, particularly coming off of what we heard today from VF Corp. I don't know, Deckers, I mean, they've got all the hot shoes right now, so maybe they'll do a little bit better. I mean, for somebody. I don't wear them, but, you know, other people do. And, of course, if you hadn't been exhausted by all the Fed speak this week, it ain't over. Governor Waller, who I think has already spoken 12 times this week, he's speaking tomorrow at 9:30 a.m. Eastern.
I think total was like 19 this week so far. I'm really into the eco data, though.
Yes, eco data tomorrow, and that includes, we got an update on the University of Michigan consumer sentiment numbers.
This is the final read in May. I love you, Mich. It's one of my favorite indicators. Remember that last time we got it for May, it hit a 6-month low, and the one-year inflation reading hit a 6-month high, and that really did wind up moving the market. But gas prices have come off a little bit since then.
And it gets to us, we spoke with a couple of guests about this idea of the disconnect between how strong the economy is and the perception of that strength. I don't know if you saw that great story that we had on the terminal about all the people who think we're in a recession, even though we're not. But anyway, so those sentiment numbers could be interesting. And then, well, you know, it's a holiday season here in the United States. Memorial Day is on Monday, and that means the Treasury markets close early.
Does that mean we get to leave early?
Unfortunately not. Yay. They close at 2 p.m. Our show actually starts at 3 p.m. So I don't know what's happening, but I guess the equity market will still be open, Alex. So don't go anywhere.
And you know, volume's going to be crazy. I'm kidding. It's no one's going to be trading. Everyone's going to put in their positions and go away for the long weekend, not taking on any risk there.
All right, thanks for joining us today here on The Close. I'll be back tomorrow for all your markets coverage. Balance of Power up next.
Do you feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range because when you get to global events like Barbie or Oppenheimer or you know, Super Mario Brothers, it's worth the investment, and it's clear that the audience is there, and they just need to be given what they want. The middle, which ends up, you know, quickly on one of the services in a way that we're watching movies that we don't know how they got made or when they got made and all of that. I think that will probably be curated better. And I hope there's more inexpensive things that give more people the chance to express themselves and have their work seen.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I had a big insight one day that women don't invest as much as men do. That, we all think it's because they're risk averse, but maybe it was because nobody built anything for them.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Joe Matthew. President Biden rolls out the red carpet for Kenyan President Ruto as the official state visit continues today at the White House, reinforcing their alliance. In a joint news conference earlier, we'll look at the takeaways and we'll look ahead to tonight's state dinner with our political panel. Pressure escalating meantime in Gaza as the struggle continues to get humanitarian aid into the right hands. David Miliband from the International Rescue Committee joins us to talk solutions this hour. And the world watches China conducting military drills around Taiwan as a so-called punishment for swearing in its new president. Congressman Raja Krishnamurthy, ranking member of the House China Select Committee, weighs in on what exactly this means for U.S.-China relations. Thank you for joining us on the Thursday edition of Balance of Power, live from Washington here on Bloomberg TV and radio. We begin at the White House and the state visit of Kenyan President Ruto, who held a joint news conference, as I mentioned, a short time ago with President Biden, in which they spoke about the strength of the partnership between the two countries. Here's President Biden from earlier in the day.
We're celebrating 60 years of a solid relationship between Kenya and the United States, built firmly on the foundation of shared values, which we cherish, of freedom, democracy, the rule of law, respect for human rights. And we're very proud of the relationship that we have built.
That's where we start, from the Oval Office here to our table at Balance of Power with Bloomberg's Washington Bureau Chief Peggy Collins. It's good to see you, Peggy. Thank you for joining us. There's something festive about the day of a state visit and a state dinner in the air around the White House in Washington, but there was serious business to be had. The first visit of an African nation to get this type of treatment at the White House in 16 years, and the president did make news. President Biden designating Kenya a major non-NATO ally. Put this in perspective for us, the significance of this moment.
Well, I think it is significant, Joe, and they have done a lot of outreach to Africa over the past year. Some cabinet secretaries, Vice President Harris has visited, now, of course, the state dinner. I think there's a couple of takeaways here. One is that the administration really does see Africa as key to their foreign policy initiatives. There's a lot of economic growth potential and population growth potential in Africa forecast for the years and decades ahead. It's also a key counter to China. A lot of our policy has been around in terms of foreign policy and our geoeconomics dynamics have centered around the relationship between U.S. and China. And Africa is at a crossroads between both of those. So I think we're seeing the Biden administration recognize that economic growth potential in Africa, but also the ability to strengthen the ties that we have to nations there in order to shore up our supply chains and our economic growth as well.
Well, it's really interesting the way you frame that, because there were many audiences for that news conference today and for what we saw as their Oval Office meeting, which extended well beyond the allotted time. To your point, China was watching. Of course, African nations were watching, and so were our allies elsewhere around the world. There were other deliverables, $250 billion in new lending, new tech cooperation that would actually see money from the CHIPS Act going to an African nation for the first time. Was there enough to show for this visit when it came to the takeaways here versus the photo opportunity?
Well, it's so interesting that you brought up the CHIPS Act, because they did make an announcement about how we're going to try to put money into Africa around semiconductor chips, technology there to shore up supply chains. But so much of the conversation around chips has been around nearshoring them, bringing it back home to making them in the U.S. And this is really saying, hey, we can shore up our supply chains in places like Africa, again, to lessen our dependence on places like Taiwan, but also to counter China on this incredibly important technological area. So, and you mentioned debt, Joe. I think that's another big thing for developing nations, and certainly for Africa, where the U.S. is saying, hey, we need to provide more lending and make sure that poorer countries are not going so far in debt that they can't get themselves out of it.
Is the private sector the answer to that? The president gathered a bunch of executives from Fortune 500 companies and some familiar names yesterday. We had Alphabet there. We had private capital represented in the room, industrial companies. There was even an infrastructure deal with a Virginia company that was announced earlier today. Is that the answer to debt from Belt and Road, or is it government, U.S. government aid as well?
Well, I think a lot of people would say you need both, right? That the private and public partnership is really going to be the wave of the future for a lot of these big problems that need solutions. But I do think the private sector, oftentimes to lend to more risky countries or areas, they definitely need some type of government floor, for lack of a better word, to feel like the government may back them up and help them to take more risk. But other people will say the private sector should just step in more no matter what, because of the potential for growth.
Yeah, they'll be lining up for the big state dinner. I guess the tent on the South Lawn. Do you see the menu? Looks pretty great.
You know what? We could go over, Joe, and just see if we can get a last-minute ticket.
If you can get me in, I'm with you after this. I'm done at 6 o'clock. No ice cream on the menu. Fascinating for the Biden White House. Peggy Collins, thank you so much for your great reporting and leadership in the Washington Bureau as we turn to Capitol Hill. The Senate failing to pass a bipartisan border bill for the second time this afternoon. Senator Chuck Schumer blasted Republicans afterwards.
We're here again. Just like 3 months ago, Senate Republicans rejected the strongest and most comprehensive bipartisan border security bill Congress has seen in a whole generation. It's a sad day for the Senate, a sad day for America.
Let's bring in Bloomberg's Gregory Cordy now. I know you're shocked this didn't pass, so what are we saying here? This is just a messaging bill all along?
Yeah, looking at Senator Schumer there, he clearly knew this was a doomed exercise, but there is
a purpose, though.
There is a purpose, and look, this is the same bill that they brought up some months ago. What we saw in our Bloomberg News poll that we do with Morning Consult of swing state voters after they did this the last time is that they did make some inroads in at least shifting some of the blame away from President Biden and Democrats in Congress on this immigration issue of these droves of people coming over the U.S.-Mexico border, and not diminishing the Democratic blame, but adding to the Republican blame and making it a bipartisan problem. Once they've used that trick once, it's hard to get it to work again, although I would not rule out Senator Schumer or perhaps someone else trying once again to highlight that it's really former President Trump and Republicans who are being the obstructionists here, despite the fact that this is the issue, or perhaps because this is the issue they want to run on in November.
Well, it's just, it's the reason why people hate Washington in some cases. When you see someone like Jim Lankford, a serious lawmaker and a very conservative Republican from Oklahoma, who put a lot of blood, sweat, and tears into this compromise, tried to sell it to his colleagues and the American people, failed months ago when that happened. To come back now and vote against it and to talk about this, I think he described it as picking up weapons. It's not even real legislation anymore. How do you have the same person crafted. It's his baby, and then divorce himself from it like that.
We talked
it's
about
Donald Trump.
We talked about this the first. This is a bill that 6 months ago or a year ago, Republicans would have taken in a second. The only thing that's changed is the election year dynamics here, and this is an issue that Republicans clearly want to win on, giving President Biden a win on immigration. And let's not let President Biden off the hook too easy either. He has had a change of heart on this issue as well.
Sure.
And there's just a little bit of
punished for it.
Well, he's trying to use a little bit of election year jiu-jitsu to switch the impetus back on Republicans. It has worked to an extent. It probably won't get him completely off the hook.
I'd love to bring Peggy back in because we can't let Peggy Collins go away that easily. You're the bureau chief in Washington. You see big picture, 30,000-foot view here in Washington. This is messaging legislation for the rest of this Congress? Is that what we're in for as opposed to real lawmaking?
Well, I think there's such a close tie between the two legislative bodies in the sense that everything they say and everything they do, they're trying to message, but they also can't get a lot done, right? And the closer we get to the election, there's going to be less and less that they can get done because of all the partisan politics in it. So I think that's where a lot of the messaging comes in. They feel like they've got to message because they can't actually get a lot of legislative work done.
Understood. And even though there is some work to be done, the Farm Bill is one example. I don't know if we can spin back the comment from Joni Ernst the other day, but it was pretty interesting to think that something that was never a controversial moment could get to the point now where, again, it probably can't pass. The Republican from Iowa, in talking about her own agriculture state, but also the stakes here, had this to say about the Farm Bill on Bloomberg.
We are really struggling with the Farm Bill this year, and it is a $1.5 trillion price tag in the United States Senate, but only about 14 to 15% of that goes to farm programs. We need to rename the bill. We're not going to pass it this year. We'll take another shot early next year. We'll have to extend the 2018 Farm Bill.
So that kind of reinforces the point, right? It goes back to what you just said. We're in an election cycle. Check back after November.
So it's surprising, though, the extent that the Farm Bill has always been one of the more bipartisan pieces of legislation to come through Congress. We're talking about food stamps here. The agricultural committees have always had a pretty good relationship from one side of the aisle to the other. But we are in an election year, and also inflation is really one of the drivers of the tensions here, because you have Republicans saying, look, if farmers are struggling because of the cost of the inputs, the commodities, the fuel, the seeds, the fertilizer, they need to grow these crops. We need to increase the subsidies. They're going to take the money from SNAP, from food stamps. Obviously, Democrats don't like the sound of that, and so it's really created this tension where the money's got to come from somewhere, and that's what's sort of grinding down these negotiations.
No doubt, and that tension lasts in the longest general election cycle of our lives. Gregory Cordy, thank you, and again, Peggy Collins for a great conversation. Coming up, my conversation with New Hampshire Governor Chris Sununu. It's coming up next on Balance of Power on Bloomberg TV and radio.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal.
The Deal.
The Deal.
That deal.
The Deal.
huge deal.
Who dug this up? One of y'all's in trouble.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington. Thank you for joining us on the Thursday edition. We have breaking news on the terminal at Bloomberg as the SEC approves plans from the New York Stock Exchange, the CBOE, and the NASDAQ for spot Ether ETFs, crypto maturing before our eyes. Just this day after crypto framework, market framework legislation passed the House of Representatives. Worth noting here, and we'll have more on this, of course, on Bloomberg TV and radio as we learn more. Turning to U.S. domestic politics and the campaign trail this day after Nikki Haley announced her intention to vote for Donald Trump without what appeared to be a full endorsement. I sat down with her biggest supporter a short time ago, New Hampshire Governor Chris Sununu, and started him by asking about this news, that Haley will vote for Donald Trump in the upcoming election, and whether that was an endorsement. Here's what he said.
It's so funny. People will say, "Well, if you're voting for them, are you endorsing them? Are you supporting them? Are you campaigning with?"
Is there a difference?
I think I would never speak for Nikki Haley, but like myself, we're going to vote for her. Obviously, we have a lot of complaints about Donald Trump, as a lot of folks do.
I know.
But elections are about choices. They really are. It's A or B. You don't have to be all or one. You don't have to be extreme one way or the other. But if you want democracy to work, you got to get out there and vote. And a lot of folks are saying, "Gee, we don't like the bombastic style of Trump. We don't like the chaos." But we need a change. We need results. We need somebody to do something about inflation, about the border. Those are the top issues. And I think Nikki did a great job kind of pointing that out, that, look, people care about issues. You have to talk about these issues. You can't just kind of say, we know you have record credit card debt, but ignore that. You're all fine. Bidenomics is working. It's not, right? And so we call that gaslighting, right? Basically not validating the reality that a lot of individuals are feeling right now. And if anything, that's where I think Biden has really kind of screwed this thing up.
Well,
it's
some
not
would
just
say
about
as
policy,
well.
it's telling people that it's working when it's clearly not.
Understood. Some would say as well, with Donald Trump's association with the economy that we see bearing out in the polls, that doesn't match with his record on the deficit, for instance, either, which I know is a big issue for you and a big issue for Nikki Haley.
Yeah.
Did you help her work through this? Did you arrive at this decision together?
No, I love Nikki. I think she's the best. I wanted, since she got out of the race, I wanted her to be nothing but happy, spending some time with her family. Her husband finally got home after nearly a year-long deployment, so I know she's spending a lot of time with him, and that's been wonderful. She came out and, she had an event yesterday and was asked, and she said she was going to vote for Trump.
Yes.
But I think she also made a really critical point, which was there's still a lot of voters out there that have to be earned, and Trump has to do some work. He's got to do some work on the issues. He's got to do some work to make sure that all those folks that may not have voted for him in the primary on the Republican side are going to come home. And they're not going to do it just because he's got to go earn them. But there's time for him to do that. Biden has a bigger challenge on his hands, I think, in that I think Biden's base has walked from him more than the Trump base has walked from Trump. I think independents are walking away from Biden. I think the younger voters that really should be all with Biden right now, a lot of them just won't vote. So Biden has his own set of chores in the next 6 months.
Well, that's clear, and it's bearing out in our own polling here at Bloomberg. And my God, the Trump base won't budge, even as he sits in criminal court. But she said more than, as you point out, more than just that she was going to vote for him. There was one particular line that stuck out to me. A loud part, she said, of each party wants us to abandon our allies, appease our enemies, and focus only on the problems we have at home. She said this worldview has already put America in great danger, and the threat is mounting by the day. That sounds like she's speaking to Donald Trump. Who's the audience there?
Well, so a couple things. When it comes to foreign policy, appreciating that you get world peace through America's strength, I think there's no one better in understanding those issues than Nikki Haley. So I think she's just spot on.
Is she worried
with
about
those
this
concerns.
protectionist bent in the Republican Party?
It's not just the Republican Party. Look, when you look at folks that say international issues are the most important, it's about a 50-50 split. Those who think Trump portrays an image of strength that Biden doesn't portray. I think some of Biden's policies were more in line with where we should be, but he doesn't portray the strength. He's kind of gone back and forth on Israel, right? I'm a big supporter of Israel. Got to stand with him unquestionably. He was unquestionably with him on May 7th, and on May 8th, he's like, by the way, we're going to withhold weapons. So you can't have your foot half in and half out.
Yeah.
That kind of inconsistency is a problem for Biden. I think some of Trump's statements, quasi-supportive of Putin and calling him this smart guy and all of that sort of thing, that stuff scares people as well. So I think they both have a lot of problems on the international front.
Well, this is an interesting view to hear from you on both of these, because, it's supposed to be my job to try to make you turn into a pretzel to explain to me why you want to vote for Donald Trump or plan to vote for Donald Trump.
Of course.
After effectively mounting a strong campaign against him and helping Nikki Haley. You've already done that interview. I want to bring it back to the Snowshoe Club in Concord the night before the primary. And there was hope inside the barn that night that something different, that there was an alternative. And this person, Nikki Haley, had everybody talking as they were drinking by the fire and wondering what might happen the next day after you did a lot of work in the state for her. What happens to those old-line Reagan Republicans? What happens to the donors who followed Nikki Haley or the suburban women who support still, and by the way, some early primaries that we've seen, they're still showing up in primaries for Nikki Haley? Do they stay home? Or do you tell them to go?
I think the majority of them will come over and vote for Trump. But I think Nikki made a great point. There's still a lot of them that have to be earned, and I go back to that point. It's not that they can't be earned. Will the donor base come over to Trump? Probably not. Not like they had in the past. No? I don't think so. I think a lot of the significant Republican donor base is going to put their money into the Senate seats, the governorships, the congressional races, really trying to drive that home there. Trump has kind of co-opted a bit the RNC to be his kind of donor feeder system, but they've had some success. I don't think it's going to be like it was back in 2016 and even in 2020. The voters themselves, though, those are the ones that have to be spoken to, and there's plenty of time for Trump to do that if he wants to earn them on the Republican side. Like I said, I don't think there's any policy changes Biden could implement today to get an appreciable different result that would drive people back over to him. So Biden's in a tougher position right now. Where it goes with everyone's looking at the trials, right?
Sure.
I don't think the trials have an appreciable difference in this campaign.
What if there's a conviction? Does that feel different?
No. Look, I'll say this. Three things are going to happen. He's either innocent, and that's a big win for Trump because not only would he be off on this one, but he would then claim that all the others are politically motivated, and it would put a shadow of a doubt on all of them. Same with a hung jury. He probably gets the same result. A conviction, people say, I just don't think it's going to drive people away from him. And if you are driven away by that, I respect your right to say that that's a line too far if he's convicted.
Would it keep independents away from him?
No, I don't think so. Because independents...
They break Trump even with a conviction.
If they've already broken away from Biden, it's because they don't like the convictions, they don't like January 6th, they don't like election denial, but they are getting crushed by inflation. Inflation is the issue of the day. There's no question about it. And the border, those are still remain to be the top two issues. And those are really bad when Biden doesn't do well with those at all.
You can find my full conversation with Governor Chris Sununu from New Hampshire on the terminal and online. This is Balance of Power on Bloomberg TV and radio.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I had a big insight one day that women don't invest as much as men do. That, you know, we all think it's because they're risk averse, but maybe it was because nobody built anything for them.
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington. Thanks for joining us. Kenyan President William Ruto is on a 3-day visit here to Washington. This is day 3, which he spent largely at the White House after meeting yesterday with congressional leaders and executives, potential investors as well. Tonight, the finale with the full state dinner on the South Lawn. Trade has been a major issue. And Bloomberg's Tyler Kendall is here now with more on that. What do we learn, Tyler?
Yeah, hey, Joe. So it was interesting because President Biden decided to kick off this state visit by inviting executives from both Kenyan and U.S.-based companies to the White House to sit down with the Kenyan president, who came into this visit saying that he was looking for some tangibles when it came to strategic investment in his country. That even included the CFO of Google's parent company, Alphabet there. So some really big names there gearing up for this investment. And earlier we heard from National Security Advisor Jake Sullivan, and he was talking about this push by the U.S. to renew a partnership between Silicon Valley and what's being called the Silicon Savannah.
Emerging technology hub, and so you can expect announcements about new investments in partnership in digital technologies and emerging technologies.
It's a welcome sentiment for the Kenyan President William Ruto, and it appears to already be gaining some steam. Today, the Kenyan government announced a $3.6 billion infrastructure investment that's coming from a Virginia-based fund known as Everstrong Holdings. Joe, this is just part of this broader push by the Kenyan government to get this sort of investment and a broader push for competition across the continent of Africa. You've been talking about this all day, this idea that the U.S. and China are competing when it comes to infrastructure and strategic investment across Canada, across Africa. You and I were talking about this earlier today. We were looking at those numbers, and it turns out that China is actually outpacing the U.S. significantly when it comes from foreign direct investment, and that turn came in 2013, which happens to be the exact same year that China launched its Belt and Road Initiative, which spurred, as you know, all those infrastructure projects across the continent.
And a lot of debt is what we're hearing Kenya is left with. We're almost out of time here, Tyler, but you talk about the competition. It's the same industries we get into every time we mention China. AI, chips, semiconductors, cybersecurity, same today.
Chips are very important here because Bloomberg News has learned from a White House official that President Biden is going to push to make Kenya the first African country to actually receive funds from the Chips and Science Act, that bipartisan bill to help shore up our own domestic semiconductor production. So we'll be looking for tangibles there that could help make Kenya a tech partner in this.
I guess that counts as friend shoring, if not onshoring, right? Tyler Kendall, thank you so much. Coming up on Balance of Power, Democratic Congressman Raja Krishnamurthy of Illinois. He's the ranking member on the House China Select Committee with an eye on the Taiwan Strait. Next on Balance of Power, Bloomberg TV.
Looking at your portfolio of businesses,
It is about resilience. It's about pressure. It's about women. Like, so how does that come together how does it manifest in the deals that you're doing now?
Yeah, it's one of the things that I became increasingly passionate about after I retired, was acknowledging the fact that focus and this performance mindset was a huge asset that I had gained and that I had worked on and perfected for over 20 years. And now working through brands and founders, I just recently announced a collaboration with the Amman Hotel Group where I bring in the best talents in sports recovery and performance mindset in retreats and offering it there to their clientele. Our first one is actually in Phuket in February. So working through what that means, I mean, if you see the stats of Fortune 500 female CEOs, 80% of those women have played sport competitively through their life journey. And all those skill sets that they've built, to me, they were part of this first chapter, right? But how do they now apply to everything else I'm doing? And I'm so curious and interested in how I can bring that to the audience now and make it more mainstream and accessible.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
President Biden has made clear that he will take action to stand up for American workers and companies. And last week, the United States announced strategic and targeted steps in key sectors to respond to unfair trade practices by the PRC.
Treasury Secretary Janet Yellen earlier today at the G7 summit in Italy, where she talked about the steps the U.S. is taking to combat what she says is unfair trade practices by China. The most bipartisan activity in Washington right now is bashing China. And joining us now is Congressman Raja Krishnamoorthi, the Democrat from Illinois, is importantly the ranking member on the House China Select Committee. And it's great to have you back, Congressman, on Bloomberg. As we anticipate these new tariffs on China, military drills are taking place right now in the Taiwan Strait as Beijing seeks to punish, in its words, Taiwan for swearing in a new president. When you consider everything in the picture that I just described, from tariffs to drills, is our relationship with China deteriorating further right now?
I don't think it's maybe deteriorating as much as it's continuing to be maybe unresolved. I think that it's really up to Xi Jinping, Joe. I think that he needs to make a decision, which is, does he continue with this policy of aggression and provocative behavior, which could potentially lead to dangerous and catastrophic consequences in the Taiwan Strait and the South China Sea? Or does he pursue an alternative course, which is lowering tensions, lowering aggression, and doing something that would restore stability to the security situation in the Indo-Pacific region, and, oh, by the way, help their own economy, which is tanking right now? I think that's really his decision to make.
Well, as we discuss this, there's a state visit happening a few blocks down the road at the White House. The president of Kenya is here, and China is in every conversation that he is having with world leaders as they try to shake off, in many cases, the debt from Belt and Road and express some buyer's remorse, I think we can say, about years of relations with China. What can the Biden administration do in this meeting today, and maybe at this state dinner tonight? I'm assuming that you're going to be there, Congressman, to start turning the tide when it comes to Africa and China.
Well, sadly, I will not be there, but you are absolutely correct that the Chinese Communist Party is the ultimate creditor, and they're worse than a payday loan shop, because they basically, through debt trap diplomacy, have something called the Belt and Road Initiative. And in return for infrastructure projects, for instance, in places throughout Africa, they then obligate these countries to take on massive debt in return for shoddy projects. And now these countries are turning elsewhere, including to the United States. Now it's up to us to make a competitive offering, for instance, through the Development Finance Corporation and other institutions, so that we can assist these countries with economic development without overburdening our own taxpayers, and in the process, helping them and helping us at the same time in creating new markets for our products.
Understood. With that said, I know that you have great concerns from your role on the committee. And what we're going to learn next is something that I would love for you to shed some light on here for our listeners and viewers. We're in a general election right now in this country, and I have been hearing nothing but concerns about misinformation, about deep fakes, about potential election interference by the Chinese. Congressman, what are you hearing on your committee that our audience should know?
Well, the Office of the Director of National Intelligence, ODNI, made it very clear to our committee, plus the Intelligence Committee on which I sit, that the CCP intends to interfere in other countries' elections this year, including our own. There are various platforms that they might use to do that. And so we have to be vigilant in terms of making sure that, A, we protect our election infrastructure just as we have in the last couple elections through federal and state and local partnerships, and then B, that we adopt certain best practices that countries like Taiwan and Ukraine have learned in, defending against the misinformation campaigns that, for instance, Russia or China or other countries have utilized to meddle in elections.
A lot of people are saying, Congressman, that the rest of the year will be messaging bills in your House of Representatives. You can tell me if you see it otherwise, but there wasn't even House business for about an hour yesterday in a standoff between Congressman Jim McGovern, a Democrat from Massachusetts, and Republicans in the chamber who chose to silence him after naming the charges that have been levied against Donald Trump. His words were stricken from the record, even though he was not talking about a House member. Earlier today, your Democratic leader in the House, Hakeem Jeffries, had this to say about the incident. Congressman, we'll have you respond. Let's listen.
Apparently, there are people on the other side of the aisle who want to try to silence Jim McGovern because he waxes the floor with them every time he speaks, while at the same time giving Marjorie Taylor Greene free rein to conduct her outrageous behavior.
How do you rationalize those two, Congressman?
Well, I happened to be in that infamous oversight hearing the other night.
You sure
where,
were.
Unfortunately, Marjorie Taylor Greene did engage in a series of performative activities which were outrageous, and I was shocked that my colleagues on the other side of the aisle did not themselves try to strike those words or try to get her to even stop doing what she was doing. And so I think that for them to then come and say somebody else is doing something wrong just seems a little hypocritical. But at the end of the day, I think that neither side, nobody should engage in what's called personalities or ad hominem attacks.
Yes.
I think it's just not what the American people want. That's not why they hired us to be in Congress. I think that our committee, the Select Committee, with regard to the CCP, has offered a potential constructive way in terms of bipartisanship, serious thought, and I think credit, of course, goes to Leader Jeffries and then Speaker McCarthy for the types of people that he named to this committee. And I think that we just need to pursue this track.
Well, you refer to personalities. That's what the House rules say, right? You're not allowed to talk about other personalities who are members of the House on the floor, so it doesn't get to be personal. But Donald Trump is not in the House. Shouldn't it be the other way? Shouldn't Marjorie Taylor Greene's disparaging comments about a colleague be stricken from the record and Congressman McGovern's upheld?
I think so, but on the other hand, I think that right now, I think we should look at the substance of what the American people want us to do. And I think that, again, Leader Jeffries has asked us as a caucus to really focus on those kitchen table topics and those items that, you know, Americans and our constituents want us to work on, whether it's, you know, reducing the cost of health care and education, or enabling them to have jobs of the future, which is what our committee is trying to do in winning the strategic competition between the U.S. and the CCP.
So neither of us can believe we're talking about this right now. I think we can agree.
I think that, let's just say that there are some bigger fish to fry. And I think the American people want us to get to the business of that.
I appreciate that, Congressman. I'm sorry you're not at the dinner tonight. I was going to ask you how dinner was. Congressman Raja Krishnamurthy of Illinois, ranking member of the China Select Committee. We thank you for being with us. Coming up, our political panel will join us to break down President Biden's visit from Kenya's president today at the White House. This is Balance of Power on Bloomberg TV and radio.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Today we celebrate 60 years of partnership between Kenya and the United States. And during that time, our partners have gone from delivering for our nations, delivering for the region, I quite frankly think delivering for the world. And it's remarkable. This visit is not just about our history, it's about the future, what we're going to do together. And there's a lot we can and must do together.
President Biden, Kenyan President William Ruto in the Oval Office earlier today. It's on to the state dinner tonight and our political panel right now. Pat Dennis is with us, American Bridge 21st Century President, and Lisa Camuso Miller, former RNC Communications Director, host of the Friday Reporter podcast. Great to see you both here. Pat, we're told that the advantages of incumbency kick in at moments like this. Getting caught in the act of presidenting is in itself a campaign move. How's Joe Biden doing on this visit?
He's doing great. I mean, the important thing to do is
be a good president. And having our allies there, really showing them, look, this is what America is all about. You've been, down the road with China and seen what that is like, and now come back to America. And really, Donald Trump has really struggled to communicate with our allies in a way that they